right, good morning. Notice of the time and place of these committee meetings was publicized by notifying the area news media, by publicizing the same in the Omaha World Herald Nebraska Press Association, OPPD outlets newsletter, OPPD.com, and social media, by displaying such notice on the first level of OPPD administrative offices, and by emailing such notice to each of the district's directors December 12th, 2025. Copy of the proposed agenda for this meeting has been maintained on a current basis and is readily available for public inspection in the office of the district's corporate secretary. Additionally, a copy of the Open Meetings Act is available for inspection on OPPD.com and in this meeting room. Thank you all for joining us. As a reminder to those joining us on WebEx, please mute your microphones to reduce background noise. To members of the public, thank you for attending. You're in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. Our agenda for today's meeting is as follows. We'll conduct a closed session this morning to discuss one topic, strategic risk resource adequacy. We'll conclude this morning's closed session no later than 9:50 a.m. in order to open the WebEx meeting to allow the public and OPPD staff to join. We'll begin public session at approximately 10 a.m. and receive reports from each committee. Director Bogner, do we have a motion to go into closed session?
We do. I move that the board go into closed session at this time, 8:31 a.m. to discuss one topic, strategic risk, resource adequacy, and litigation involving the district. With respect to these items, a closed session is necessary for the protection of the public interest because the discussion involves a lawsuit filed by the Nebraska Attorney General, information protected by the attorney-client privilege, sensitive utility infrastructure information, confidential cost information, and potential resource acquisition strategies, the disclosure of which would disadvantage the district in future negotiations with potential contractors. This motion requires a second.
Second.
All right, Ms. Lane, we take roll?
Bogner,
Yes.
Kavanaugh,
Yes.
Ford,
Yes.
Howard. Yes. Hudson,
Yes.
Moody,
Yes.
Spurgeon.
Yes.
Yes. All right, the motion to go into closed session has passed. This closed session will be limited to strategic risk, resource adequacy, and litigation involving the district. No votes or other board action will be taken. All right, a motion and second is required to reconvene in open session.
Second.
Did you catch those?
Yeah.
Okay, please take the roll.
Bogner. Yes.
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 Okay, the motion to come out of closed session at 10:02 a.m. is carried. This closed session was limited to discussion regarding strategic risk, resource adequacy, and litigation involving the district. No votes or other board actions were taken. Notice of the time and place of these committee meetings was publicized by notifying the area news media, by publicizing the same in the Omaha World Herald and the Nebraska Press Association, OPPD outlets newsletter, OPPD.com, and social media, by displaying such notice on the first level of OPPD administrative offices, and by emailing such notice to each of the district's directors on December 12th, 2025. Thank you all for joining us. As a reminder, those joining us on WebEx, please mute your microphones to reduce background noise. To members of the public, thank you for attending. You're in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. We'll take public comments at the end of today's meeting, as well as the board meeting on December 18th, 2025, which will be conducted in person at the Omaha Douglas Civic Center and begin at 5 p.m. The public may attend in person or remotely via WebEx by going to OPPD.com. Joining me today in person are my fellow board members, Amanda Bogner, Mike Kavanaugh, Sarah Howard, John Hudson, Craig Moody, Mary Spurgeon, and Eric Williams. We also have members of our executive leadership team, Steve Bruckner, our general counsel with the Fraser Straker Law Firm, and OPPD staff. Additionally, we currently have 33 attendees in this meeting consisting of OPPD employees and members of the public. Today, we'll begin with committee reports and review of board work plan items presented by the following directors. Director Spurgeon will speak about governance, Director Bogner risk, Director Williams system management and nuclear oversight, Director Howard customer and public engagement, and Director Moody for finance. Following the committee reports, we'll move into presentations on financial stewardship, oversight and monitoring, infrastructure investment, and governance and board members. We'll conclude the day with public comments on items of district business. Josh Clark will now give the safety briefing.
Thank you. Welcome everyone to today's meeting. At OPPD, we're committed to fostering a safe, secure, and respectful environment for all participants. To support this commitment, we begin each meeting with a few important reminders regarding physical, psychological, as well as digital safety. If anybody is experiencing any type of illness, please prioritize your well-being, stay home, rest, stay hydrated, and attend any necessary medical appointments. Wherever you're joining from, whether it's virtual or in the room, please make sure you're aware of emergency exits, first aid supplies, AEDs, and fire suppression devices. We always monitor our surroundings for potential hazards and prepare for changing weather conditions. Luckily, I think we have a good day today. And remain alert to prevent any slips, trips, and falls. If anyone needs any assistance during the meeting, just go ahead and let us know and we'll get you assistance as quickly as possible. We have emergency staff outside as well as AED and fire suppression materials. Emergency exits are directly to my back, also to the right here in the back of the room. If we had to evacuate the building for some type of emergency, I'd ask everyone to congregate in the north parking lot so we could take accountability. If there were severe weather, make sure to follow the directions of the OPPD as well as BCBS security staff, and we'll get into some shelters to make sure everyone stays safe. Also, living in a digital world requires us to remain ever vigilant against cyber threats. We exercise caution with suspicious emails and unknown links. Avoid clicking on any content that seems untrustworthy. And here at OPPD, we have a little fish alert button on our Outlook, so we make sure to let our digital cybersecurity teams know of anything suspicious so they can check it out. At OPPD, we believe that psychological safety is essential to productive and inclusive collaboration. We ask all participants to uphold the following principles: speak and interact with respect, embrace constructive criticism, value diverse perspectives, build trust through transparency, and we foster a culture of curiosity and continuous learning. Let's remember OPPD's core values in all that we do, not only in our work days, but also in our meetings. We have a passion to serve, we honor our community, and to care about one another. So with that, thank you.
Thank you, Josh. Now we'll start the committee reports with Director Spurgeon on governance.
Thank you, Chair Core. As the governance had a meeting on December 9th, Tuesday, following a safety briefing and review of the climate action items. I was reported to Mr. Rainey that no reports of ethical violations on the part of board members have been received since last month. Item 4, development of slate in January election of board officers. Process has been developed in support of that. And so we continue a revision of that document. I'm calling some people have been very busy this week. I'm leaving alone. Item 5, board policy review. 2.6, 2.9, and 3.1. And that's on the agenda. It's not begin. We get to it. Item 6, employee relations monitoring report. We have 5 meetings at that, and that will be one of the reports that we will see this afternoon. Very much. We took a look at the governance committee planning calendar. Money goes on, we can stop at the end of the calendar year, so I'll have you what January looks like. And a review of the board work plan, just keep us mindful of what was coming up and still needed to be dealt with. So, after summary meeting, we had a very brief time to bring up topics that are concerned among staff and directors. And actually, it concluded on time. That concludes the report of the governance meeting. Thank you.
All right, thank you. Director Bogner.
The risk committee met on December 10th and all committee members were present.
We received the SB12 Systems and Information Management Monitoring Report, which we'll hear today in public. And we also tabled our, I'll say, other normal agenda items to January, so we could make room to talk about the Omaha Station resolution. which really ended up being the bulk of the discussion. We certainly talked about this morning during closed session, and we'll continue that here in open. Yeah, from that standpoint, there are a couple things on our work plan. I don't know if there's a next slide, Erin. Probably. Okay, very good.
There aren't any on them.
Thank you. That's a conclusion of my.
Great, thank you. Director Williams.
Yes, thank you. The Systems Committee met on December 1st. I think we've got, there we go, agendas on the screen. We had a discussion about Energy Plaza, an update on the status, and where we're expecting things moving forward, including potential board action in the future. We received an update on the performance of the Bright battery. As a reminder, that was a pilot energy storage project that was installed a few years ago with some grant funding from the Nebraska Environmental Trust. So at this point, we've learned how that is operating on the system, and staff provided some feedback about the performance and what we've seen from that facility and how we expect that to inform our decisions, making decisions that we will make in the future about additional energy storage assets. We had a discussion about the Great Plains New Nuclear Consortium. It's on the agenda later today for an update, so we'll hear more about that then. We discussed the strategic risk item for North Omaha Station or resource adequacy related to North Omaha Station, and that again is on the agenda later today. And then lastly, there are some action items that were highlighted. Board members are aware, so those are anticipated to be scheduled for discussion and then action on Thursday to keep those operational items moving forward. So that's it for the Systems Committee. There's a board work plan here, and we'll keep things moving in that direction. So thanks very much.
All right, thank you, Director Howard.
Thank you, Director Core. The Customer and Public Engagement Committee met on December 8th. Updates on legislature, both key federal and state legislative developments. We received a product and service update and a public engagement feedback analysis of both the corporate operating plan and the North Omaha Station extension. And then later today, we'll be talking about SB 11. We also talked about our economic development and monitoring report.
Awesome. Director Moody.
Thank you, Director Core. The Finance Committee did meet, and Directors Kavanaugh and Howard were in attendance. See the agenda in front of you. All of these items, Director Williams referenced in the three later. Items 5 and 6 are all coming to us for action items. So those are one thing that I did want to flag is we discussed the corporate operating plan. One of the things that arose as I was making calls to all of you was the desire to explore whether or not data centers represent class for us. We don't know where that's going to go. That was just something that discussion. And so I name that only to say we're initiating the form that the board now uses to determine whether or not that's something that needs to show up on our work. So that process is underway. It'll go to the Finance Committee to determine what needs to happen, if anything. So there's a lot that still remains to be seen, but I just wanted to name that here so that you all have visibility into the fact that that is something that's at least teed up for discussion in the Finance Committee. Beyond that, I don't believe we have anything meaningful on the work plan, so that's it for finance.
Thank you. Yeah, very good. We have John Petrulis here, a manager in our treasury area. He's going to report out on the sale of our series Bravo and Charlie B and C bonds. And he's going to move to the next item and ask for a declaration of these.
Great. Thank you, Brad. Good morning, everybody. I like to report out on our issuance of our 25 B and C bonds. And so previously the board had approved the sale of up to $2 billion worth of bonds through December 31st of 2025. So that was originally started in 24 and then also includes 25. So the district issued, let's see, So the district issued this debt, the B bonds of approximately $308 million of principal. And this was led by B of A Securities and also Goldman Sachs. The average interest rate on the B bonds was 4.33%. And the proceeds were used to refund $100 million of commercial paper, to reimburse ourselves for prior capital expenditures, and then also to fund some capitalized interest. We also issued some refunding bonds, which were the 25C bonds. And those were in the amount of about $99 million. And those came in at an average interest rate of about 3.02%. Reason there's a big difference between those interest rates is because the refunding bonds are only through 2039 versus the B bonds are through 2055. So you have much longer time span. And as you go further out, the interest rates are generally higher on the long end. So this particular, we refunded $107 million of our 2016 A bonds, and it produced a net present value savings of about 6.2%. $6.2 million, or about 5.8% savings on the refunded bonds. So it's a very positive outcome for the district to be able to do this. I just want to give you a little sense too of what we've done in the last, this year we have issued about $911 million worth of bonds. Last year we issued about $980 million worth of bonds. So over the last 2 years, we've increased our debt by about $1.89 billion. With this board item, also there's attached a financial advisor letter that essentially says that OPPD was in compliance, that the market was, we took into account that the rates were reasonable and that the debt issuance was reasonable. There's also a pricing certificate that's included. The pricing certificate gives you kind of a detail of what happened in the bond issuance. It gives you all of the maturities, what's going to mature each year, the coupons, and that sort of information. So with that, I would open it up for any questions.
I have a quick question, maybe an opportunity for you to brag a little bit. Acknowledging that we can't control interest rates nationwide in the markets, can you speak a little bit about the spread from the AAA index that we usually benchmark against our bonds? How tight was that spread, and how does that compare to historic spreads that OPPD has been able to issue that?
Yeah, this particular issuance it's a great question. We're extremely happy. We try to give ourselves a lot of flexibility when we go to market. We don't just usually lock in on one day, like this is the day we are going to price, and then that's it, because then you're beholden to what happens in the market. We kind of gave ourselves some flexibility and we're able to go to the market. They took advantage of it when we went there, and these spreads are some of this is with John Thurber's institutional knowledge, but these are some of the lowest spreads that we've seen between what the AAA rate is and what OPPD issued in since like in 25 years or something like that. So, the rates are what they are. You're going to pay, we sell our bonds based upon what's called the MMD rate. It's municipal market data rate. And it kind of goes along with the treasury, but that's how we sell our bonds. And there's a AAA rate, and then OPPD is AA. So you're going to pay a spread between that AAA rate. These spreads, and some of them they were all less than, I think 20 basis points, and which is extremely, extremely tight in that for what we have. Usually you have tighter spreads maybe on the shorter end, and then as you get out on the longer end, you have wider spreads. But we were just it was a very successful issuance. There was so much demand for OPPD's debt, and that those spreads were be able to be narrowed and actually save the OPPD quite a bit of money. To go along with that, just
so this is in the 20 basis point or sub 20 basis points spread, 0.2% higher than AAA, which is great. The only reason I'm asking is just to close the loop here, because every year we go through an SD3 monitoring report on access to capital. Very important to have access to capital and liquidity, but all of that also allows us to issue debt at significantly lower interest rates than what otherwise would be the case if we didn't have financial help. So I wanted to pause here and celebrate that, because it's a labor of love. It takes many, many years to get to that credit quality. And just a few weeks ago, we were able to capitalize on that by borrowing all of these debt significantly lower.
just to give you a sense too of this issuance compared to what we did earlier. So there's 25A bonds. If you just look at the new money, these are about 4.3%. And I think the new money for the bonds that we did in the June timeframe. That was, we priced them in May, closed in June. It was about 4.75%. So, that part of that's because rates have come down, and then part of that is just because those spreads are narrowing. It's kind of the two factors.
It's a great story to keep. As possible. To pay as close to AAA groups.
So, yeah, and we've talked, and I agree that the credit ratings that we've been able to maintain have been incredible for us, allows us to go and build capital projects without incurring a lot of interest. I'm wondering if you could opine for a moment, like, what do we need to be cognizant of moving forward over the next 10, 15 years as we continue to build and transform things that would potentially degrade that?
Right, so I think rating agencies, and we talked about these length, and maybe Brad you can chime in, but I will tell you, it's the board's willingness and ability to raise rates, right, to make sure that we are resourcing the organization with the resources we need to build infrastructure. That infrastructure generates value. When John talked about we're adding over $1 billion in additional debt, well, we're also adding over $1 billion in assets, value producing assets. Having liquidity on hand, very, very important, days cash on hand, acknowledging that the market is volatile, the expenditures that we incur are volatile, having that stability that we can pass on to our customer owners. Having a very healthy rate stabilization account is incredibly important, so that we can also ensure, on the other hand, our customers paying their electric bill, that bill is not going to fluctuate and jump up and down. That we're providing that stability. So all of those things are very, very important in us looking into the future as we're making investments. Very, very important for us and for the rating agencies and investors to make sure that we are taking care of our asset portfolio, by extracting as much value as we can from our asset portfolio and building new assets to accommodate growth. The rating is not just on OPPD. A big part of the rating is on the Omaha Metro. How healthy is the Omaha Metro economy? And so there's a circular reference in there. To the extent that we can do our job well, then we strengthen the metro economy, and then that helps both the city of Omaha, Douglas County, OPPD's credit rating, because we have a stronger and bigger economy.
Yeah, maybe a modest supplement. I think that account which the board has authorized us to establish as a bolster to our liquidity. We need to be able to raise rates so we need to have sufficient liquidity. I think the other thing that's really important is the executive team, to be quite frankly, and the leadership on the executive team, how the utility is being run is a material piece of the agency's weight. And so executive team stability and your ability to execute your plan, your ability to articulate your plan, your knowledge of fundamentals, all of those things tend to be very helpful.
Is there a concern that as we look forward to serving bigger loads that are contributed to a handful of customers, that we potentially are at risk of damaging our credit rating? You know, if we have to go out and build big assets and that customer doesn't come as expected, how does that play into the credit rating?
Yeah, so this is a conversation that's happening nationally, and it's been happening for a few years, regardless of the industry. And it's always that concentration of revenue on a small group of customers or on a specific industry. It's always a risk. We get a lot of questions from rating agencies, and it's important in this case, for example, our load growth has been heavily influenced by data centers. So looking at those data centers, at the industry itself, at the customers we have, but also who's behind those data centers is important, right? Knowing that the data center is not just the company that owns it. Sometimes it's cloud computing. Well, it's that data center serving financial services, hospitals, schools. So those are conversations that we engage with rating agencies, and they dive deeper into those conversations. But revenue concentration is an important element of the rating.
Yeah, tenuous balance, I'm sure.
Yes.
Thank you.
Anything further?
Let's do 2026 declared expenditures.
All right. This is an action item for, just for the board's knowledge. So this is the declaration of our anticipated 2026 capital expenditures reimbursement. This has been being done since 1979. This is how we prefer to do it. And essentially, this is the adoption of the resolution. It maintains the option for OPPD to issue tax exempt debt to reimburse 2026 capital expenditures and allows us to invest those funds in an unrestricted manner. And what this essentially means is that if you're issuing debt for future capital expenditures, you're going to be limited to invest any of those funds at the arbitrage rate. And anything money that you make that's above this arbitrage rate, you need to rebate it back to the federal government. It's just the law. When we issue debt and we're doing it for prior capital expenditures, that money is totally unrestricted, and then we can invest that money and we can earn whatever we earn. A lot of times it's not even at the arbitrage rate, but in the last few years when the yield curve has been essentially inverted with the rates being higher on the short end and the long end, it's very beneficial to be able to do this. So that's the purpose of trying to do this.
And John, if I can correct just quickly, because this is important. Yes, what you said is true, but the investment period is limited. But what the board will be stating with this resolution, say, the practice has been, instead of borrowing in advance and holding debt, of which we will be paying interest right away, and then spending, we have enough liquidity where we can start paying for capital investments and only issue debt to reimburse it. So that saves the company a lot of interest expense. In addition to that, what John said is true. At the time we issue that debt, we are able to invest those proceeds at a higher interest rate for a short amount of time while we reimburse ourselves. So I think that's a very important piece of this resolution. I didn't want to miss the point of just in time issuance of debt and not ahead.
Thank you for that add. I appreciate that. So the 2026 corporate operating plan projects capital expenditures of about $1.19 billion. And the district may issue tax exempt to fund part of these. We don't expect to issue debt to do all of it. We will have some equity that would also support this. But basically an affirmation of this board item would allow us to reimburse 2026 capital expenditures with tax exempt debt. With that, I'd ask for any questions. Thank you.
Thank you.
Okay, good morning. Thank you for the ability to present on the 2026 corporate operating plan. If you're newer to this process, the perennial evolution we go through is in November. We propose a potential rate action that may be associated with the corporate operating plan. And then in December, we ask the board to vote. In between that time period, we validate all of our primary assumptions and make sure the plan is still good. So we did that again this year, and there's no material modifications to the rate proposal as presented. And so I would like to open with that characterization before we advance through a few slides to really supplement our discussion. Having said that, let's go to the next slide, please, Ms. Lane. This looks the same as it did last year. The annual operating plan is comprised of about $2.9 billion of total expenditures. You can see the pie chart on the far left, looking at a few key themes, whether it be debt service, our CapEx program, our fuel and purchase power, and non-fuel O&M, as well as the $57 million we make in payments in lieu of taxes to the people in our community. The table on the far right is a breakdown of the class average rate increase. So I'm going to start with kind of near the bottom of that table. You can see fuel and purchase power adjustment. This is effectively the rate change that is required to maintain our financial metrics as it relates to our total cost of fuel and purchase power. And so you can see that's 0.5%. And then the general rate increase to run the balance of the business, satisfy our obligations for reliable electric service, and satisfy our financial metrics is where that 5.8 comes in for a total of 6.3% class average. Again, unchanged from November. We go to the next slide, please, Aaron. Here's a look at the table. I'm going to narrate the table. I'm going to go to the far right to begin. You see the total average is 6.3%. You might recognize the 5.8 in the top right box and the 0.5 from the prior slide. And then we've sliced this really along what I'm going to call is a class average. So you see the residential, commercial, and industrial. Those are kind of how we look at the aggregate customer base at the subset level. And then you have a lighting component for services we offer for lighting, and then a pretty modest wholesale account for a number of communities in our service territory. So there's the breakdown by the class average. I'll just generalize the magnitude impact. You can see the industrial at approximately 9%, 8.9% there. Commercial was the lowest of the three at 3.7%. And then residential was kind of in the middle there at 6%. Not everybody is an average. We know that. I like to say people are a statistic of one. And so if you were to look at this proposal through that lens, you would have to look at that bottom data set, which is, hey, 90% of residential customers, we believe the bill impact, while the average is 6%, would fall in that 4 to 7% range. So we get a big slice of residential customers falling in that 4 to 7% band. And then we would expect 95% of industrial customers to also fall in that 4 to 7% band. So just kind of a different way to look at the customer impact as we thoughtfully make our proposal for next year while we try and keep bills as affordable as possible. If there was more interest from customer owners or other entities or individuals on the rate offering, included in today's packet is a red line of the draft service regulations and schedules for consumption for people that may be interested. We go to the next slide, please. If you ask to summarize a number of drivers of the rate action, we would answer with the following. The inflationary aspect has been very acute for us. We have approximately $4.5 billion of net plant. So as you drive around the service territory, you see conductor, or some folks might call them wires, substation, poles, structures, power plants. There's about $4.5 billion net of that type of infrastructure. A huge concentration of that type of infrastructure is comprised of concrete, steel, and copper, as many of us know. And so as we look back at the 5-year inflationary profile of those commodities in particular, you see anywhere of an increase over the 5-year period of 40 to 60%. So even if we weren't building anything, even if we were just sustaining the approximate $4.5 billion of net plant the district is a steward of, we have to bear that kind of cost jump. And we've had some success in prior years, but we haven't been able to fight this off in its entirety. And so we're wrestling with that as well. We have a number of efforts going on in our supply chain to try and mitigate this impact as much as possible, but the underlying fundamentals are posing some significant challenges for us. An increase in the planning reserve margin. If you don't recognize the term planning reserve margin, this is effectively a safety margin. We know that we need to have more electrical supply than our load. And so now, even if load doesn't grow, we have to have a higher amount of safety margin than we did previously. This means we either need to build or buy facilities, which are exceptionally expensive. It's a significant evolution for the district to go through that commercially, but also to construct those facilities. And so the planning reserve margin is also going up, even if load isn't going up, which it is. Our net power costs, are increasing approximately 20%. We have some information in November around that. And so the cost of power is increasing on a net basis for OPPD. And while we try and mitigate that as much as we can, we're not able to mitigate it in its entirety. And so we continue to wrestle with that. The capital portfolio that was discussed both earlier in this deck and Mr. Petrulis here is approximately $1.2 billion. It is far and away the largest CapEx portfolio the district has ever had. It's a 50% increase from the capital budget in last year. And we continue to build more infrastructure to serve the community the way the community is asking for. That's residences, that's businesses, that's nonprofits, that's government agencies. We continue to stay focused on that, and it's taking a historic slice of capital to be able to get that done. Our operations and maintenance costs are increasing. Our Southwest Power Pool fees are continuing to grow as their costs enlarge. Our share of their costs are also enlarging, and so we try and scrutinize that as much as possible. And SPP does a good job of trying to keep their net costs down for their members. We appreciate that. We'll continue to stay focused on that. We also have a number of generation outages that are going to occur in 2026 to ensure that the equipment can be maintained properly. I'll just add a brief comment here. We've talked a good bit about this in prior discussions, but the district underwent an O&M and capital cost reduction effort this past year. We extracted approximately $60 million from the business. That equates to about a 4% rate increase. And so as we're dealing with these headwinds and as we're enjoying the opportunity to serve our customers as efficiently as possible, we're also actively reducing our spend as much as can be done. And so we've been doing that, and we'll continue to stay focused on that going into the near future. And then we have load growth. We have 23,000 new residential customers over the 5-year period. We've anecdotally approximated that to about the size of Grand Island. So there's a Grand Island size share of new meter count within the OPPD service territory. When we've articulated that in the past, it's been helpful for people to really understand the order of magnitude impact that's required from our business. And so all of those customers, we're very happy to serve them. It's our duty and honor. They're all going to get meters. They're all going to get a secondary line drop. They may get a new primary line drop. They're all going to get a bill. They're all going to contact the customer center. And so we'll get some cost synergies, but in many regards, it'll increase the amount of net costs that we're having to bear to be able to provide new service, which we're happy to provide.
Right, if I could interject, just really quick to clarify on the Southwest Power Pool fees. It's fees that we pay through the Southwest Power Pool, and the majority of that expense line item, it's really a reflection of the other side of the ledger where when we have billed, when the Southwest Power Pool asks us to build a 345 kV line, for example, we've talked about this before, but I want to make sure the public in the sense we build that asset, and other utilities who benefit from that help pay for that asset. We pay a cost share, ratio share for that, about 5% of that is what we pay. This reflects the other side of the ledger where other utilities are building transmission infrastructure that we benefit from, and we get to also pay for that. So as everyone is building more transmission infrastructure, we should expect Southwest Power Pool fees to pay for the transmission to continue to increase. But I want to make that clear clarification here that it's not administrative fees we're paying necessarily. It's really we're paying for the infrastructure that's been built across a 14-state territory that benefits all of us.
Thank you for that important supplement. Appreciate it. Let's go to the next slide, please, Ms. Lane. So if a customer were to ask what are we getting from this rate increase, here's a slide that we posed to sort of facilitate that discussion, and I'll just kind of read the highlights of this. We put two new generating facilities into service, both Standing Bear Lake and Turtle Creek Station. They're going to take fuel, they're going to take staff, they're going to take operations and maintenance budgets, and so we are thrilled to put those in place to serve our community. And it's part of what customers are getting. It's more reliable and modern generation in addition to the other renewable facilities that are brought into service. We're also starting on a large expansion of Turtle Creek Station and Cass County Station. Just a generalization, right now there's 2 operating units at Turtle Creek. We're expanding to a 3rd. And then at Cass County, there's 2 units there. We're expanding 3 more units for a total of 5 units. and adding fuel oil resiliency at the facility. We continue to go through an intention infrastructure. So how durable is the infrastructure in the service territory? Continue to identify and put more assets into place to be able to allow the infrastructure to be more withstanding of the weather and the climate that it operates in. We are in the middle of a decade of expansion for approximately 400 miles of new transmission builds. That'll take about 10 years, but there's an enormous benefit there. If you think of a cardiology analysis, we're building more arterials into the heart of Omaha, where most of the load is. And so we're allowing electricity to flow more freely, and many would argue more reliably, by building that infrastructure into the load pocket to give our operators the tools they need to be able to run the system. A fairly enormous amount of substations that are going on. You can see 14 new substations and then 25 substation expansions. That's over the next 7 years. And so we'll continue to execute that scope of work to be able to either expand subs or build new subs for those areas of our communities that are growing. You don't have to drive far to see the growth in Omaha. And so happy to see that line item get done. We also bury on a perennial basis some of our above ground or overhead power lines. We put them underground as much as possible. It's a significant effort for us to be able to do this at scale. So we try and march through it as the years go by. But you can see, depending on the realization of our plans, somewhere in the neighborhood of 20 to 40 miles, we'll move above ground, exposed to the elements, and they'll be moved below grade and benefit from the hardening that being under the earth allows. We're going to install 1,000 new AMI meters. If you're new to the AMI conversation, we have meters that are end of life. They're done. They got to come out. And so we're replacing the meters, and that's been an important evolution for our business this year. It'll go into future years. New customer portal. What kind of functionality can customers change and do via the portal? That's new. We have a new outage map. We continue to invest in an increased tree trimming budget to make sure the vegetation doesn't compromise the lines, and new ways to communicate for customers, enabling the early days of text notification to keep customers more aware of the status of their power in the event they're not at their home and they have a service issue that we're working through. Some really important things we're happy to deliver. If you go to the next slide, please. This year, we talked in Finance Committee. There's a potential that we will experience some aspect of what we experienced last year. For those of you that are close to the organization, our primary metric is the 2.0 debt service coverage. Last year, we were very close, but we didn't hit it. We don't want to not hit it 2 years in a row. So we're asking the board for a very finite ability to use some potential over collections in our fuel and purchase power formula to achieve the 2.0 debt service coverage. And so we're asking for your ability to do that with our financial health. In order to get that done, we may have to deviate from the formula, which is board approved, which is the primary reason that we're asking you to do that. There won't be any change to the rate increase next year by doing this. It's just a concentrated effort to ensure that we meet the 2.0 debt service coverage. And so we're asking for the ability to do that within the resolution.
Question, last year, as you mentioned, we were below the 2.0.
Yeah.
Why didn't we ask the board last year to do what we're asking here?
Yeah.
The magnitude?
Yeah. So last year, my recollection is 1.91 south of 2. And we like to have perennially strong financial performance. When we come off the 2.0 number, we don't like it. We get uncomfortable. You can come off for 1 year. You can have things not go perfectly for 1 year. The agencies understand some of the circumstances that surrounded that. We don't want to miss that 2 years. So this action with no impact to the rate increase next year or this year for that matter will allow us to.
Thank you. And another important here, we are in a little different place in regards to the debt service coverage this year than we were last. The magnitude here is very important. In fact, we believe that we will be above the 2.0. There's a small chance that we may be slightly below, and I think this is where we're comfortable asking the board just to meet that very small adjustment. Last year, the adjustment would have been much larger. So I think that I want to call out that difference.
Thank you. Okay, I think we've got a few more slides here. There's a little bit of a historical process with utilities that in large part got low visibility for a number of decades. And that is, how do you build rates? My neighbor to the south, you know, if he were to ask me, how do I know that I'm not paying for Home Depot? I don't want to pay for Home Depot, just to use them as an example. I don't want to pay for my other neighbor's infrastructure. I don't particularly want to pay for that other store because it has nothing to do with me. And so those positions are reasonable. And the district and the industry has long had what's called a cost of service methodology that we use to ensure that the rates are, according to Nebraska law, fair, reasonable, and non-discriminatory. And so I'm going to enumerate a little bit of the process that I think a lot of us walked through. I know I've walked through in the rates 101 and 201 earlier in the year, and then effectively addresses the question, how do we make sure the rate is built correctly? And I hope that this helps. So I'm going to start on that second bullet point, which is the cost of service study. There's no requirement that we do a cost of service study annually, but we do it annually in order to have the best hygiene around how our rates are built. And that's an exceptionally laborious process. We have a number of team members and colleagues that go through that to make sure we can be as right as we can be. That process starts by the FERC Uniform Chart of Accounts. And that's that first line in bold. That's, I'll call it the first child under the second parent tag. That Uniform Chart of Accounts says that depending on the budget line item that you have for those that specific budget spend, you're going to put it in either a generation, transmission, or distribution bucket. And that's the first look at how we're going to organize our costs. We're going to organize them orderly based on what they're used for, and we're going to do it in accordance with the FERC Chart of Accounts. The second bold there is we're going to classify the generation, transmission, and distribution costs in our budget. And we're going to say what concentration of those costs is used to serve the demand, which is effectively any single moment of our usage. What percentage of those costs is going to serve energy, and what percentage of those costs is going to be for customer related activities, contact center, billing, a number of different items. And we use a methodology that's accepted in the industry. And as you can see in that bottom bullet, approved by the Brattle organization to move those costs from the functionalized category into the classification category. And then we take that classification category and we say that third darkened bullet point, the customer classes that cause them, for us, that's residential, commercial, and industrial. What percentage of generation, demand, energy, and customer is going to flow into each class? And we use an accepted methodology in order to allocate those costs into each class, and then we build the rates. So the process here is enumerating a linear, methodical, third-party approved step-by-step process for how we set our rates. And because the process is archetyped the way it is, we can derive a high level of confidence that it is being done properly. And so I think the board had asked me to maybe spend a little bit of time on how do we articulate our process to those people that may be interested who don't necessarily get to live the process, which is very technical and laborious. And then we have it reviewed by the Brattle group. So I'll just pause here if there's any thoughts or questions.
Thank you for covering that.
Yeah.
Comment, question. I think, so I was at Director Williams' town hall yesterday. I didn't speak as well.
Okay.
The fact that we were talking about cost of service study was interesting to think about that in light of the questions that the public is asking.
Sure.
And I think we both did probably an average to above average job of describing what a cost of service.
Sure, you did great.
But I think to name, and then leading to the question, to name what is driving those questions, is this question of our data centers making my rates go up?
Yeah.
I think this, part of the reason that the finance committee wanted you to cover this in more detail was because of that question. So I think there are two parts to my question. One is as it relates to the cost of service study, help us understand how much subjectivity there is in the process.
Yeah.
That's something we asked about a lot in rates 101 and 201. So that's
Yeah.
question one. And then question two, go right to the question that the public has, which is, are data centers increasing rates for our customers?
Yeah. I would characterize the subjectivity of the process as not a lot. You pick a standard set of allocation methodologies that are available in the industry. You can see them in NARUC publications. You can see them in various settings. You pick a standard allocation methodology and then you run it consistently. And that makes sure that your costs get in the right bucket. There is some discussion around which standard you subscribe to. And that is probably the most subjective piece of the allocation discussion. Those are some of the things that we made come alive. We talked a little bit about the standards. We talked a little bit of why Brattle thinks that that's appropriate for us. And so that's how I would characterize the process. As far as the question around our data centers, our residential or commercial customers paying for data centers, I want to be clear that there are a number of drivers of cost that are going up that are affecting everyone. So when I say there's approximately $4.5 billion of net plant, everybody benefits from that net plant. And over the last 5 years, between the commodities I delineated on a prior slide, we have to keep putting those commodities into the system to sustain the system, to make sure that the system operates reliably and we have predictable service. So that is lifting costs for everyone. And there's been a number of publications, I won't cite them, around is it the inflationary cost aspect that's lifting everybody, or is it a customer subset, or is it something different? And so that's a number one driver for me is the net plant cost to operate and sustain the system are all rising at abnormal levels. The other piece is around the cost of service and making sure it's done properly and making sure that cost causers are cost payers. And based on how you use the system, the methodologies in the cost of service are allocating the classes and the rates appropriately based on how you're using the system. Everybody that's in our service territory, probably with potentially the exception of wholesale, but I don't even think that's true, is on a retail rate. You can see the rate that someone pays in our service regulations and schedules. And that retail rate, all of those retail rates are following this same process. And so we're organizing cost, we're slicing cost, we're allocating the cost, and we're getting it into the right spots that it needs to be. We've always done that. It generally hasn't been the subject matter discussion. It has been recently, and we'll continue to do that to make sure that that's the case, that the costs get to where they need to go based on cost causers being cost payers. The other thing is the higher PRM. We need more power plants to keep the system up on a relative percentage basis for the safety margin. Everybody benefits from more power plants. Everybody benefits from the transmission system. And so all of those costs, Javier talked earlier about the SPP fees and that being our piece of the allocation for the infrastructure that SPP is building. All of these things are all moving, unfortunately, in the same direction, and that's up. I hope that helps.
It does. It was a thorough explanation to a question which potentially has a one-word answer.
Which is no.
Thank you.
Sorry, I was slow to
No,
that.
it's okay.
No.
Because we had this conversation in finance, right?
Yep.
And you all did a wonderful job of articulating what you just described and discussion about it. And there were perhaps other drivers that you were discussing.
Yeah.
Ultimately, like, I want to put a really fine point on the question so that we, customers, we can always explain it, but there's a one-word answer. So
Is it really no, or is it marginal? Because it seems to me there's a lot of larger, bigger issues that are driving it.
Sure.
But on the fringe, there is an impact. I mean, the discount, that there's no, because if there was no data centers at all, the equation would look a little different. So to me, it seems like it's marginal is a more accurate answer than.
And this is where the discussion originates.
Yeah.
So I would say if there's no data centers, we're building less infrastructure, okay? And our costs are going up. But if you look at the rate proposal, the highest movement is the industrial class. And that is the process working to allocate costs to where it needs to be. Even if you didn't have data centers or pick schools or hospitals or whoever you want to pick, you would still have that very large rise in the price of those commodities. Outside of a macro system position where if you want to make an argument on supply and demand, we can have that kind of discussion relative to those commodities. You have a higher PRM. We're wrestling with all of these things for all of our customers.
And to your point, Director Hudson, I think that's a great. Acknowledging that this is imperfect, and using the residential analogy, I think that's like one Brad was talking about neighbor to the south. Well, even in there, we don't know if his neighbor to the south probably calls our call center once a day, and Brad never calls. You're causing very different costs, but there's really no way for us to differentiate to that level of detail. So generally speaking, you're trying to keep the cost causation within that cost class. To your point, it's the answer is generally no, but there's nuance in there. And what we try to do is stay true to that cost of service analysis to make sure that there's as little subsidization between customer classes as possible, based on acknowledging that we cannot design a specific rate for each one of the 450,000 meters we have.
So, going on this, and Brad, you already referenced the table for the rate action. Last night, when people asked me, I did refer to the same table showing the allocation of residential, commercial, and industrial, and the fact that the industrial is significantly different this year than it was last year relative to two other classes was the example I used to point out that the cost of service study and the methodology had led to a different outcome this year than it has in the past. Can you highlight what was the primary driver that led to the distribution among the rate classes being different this year compared to last year? And I think we've talked about this in the past. In short, the new plants coming online.
Yeah, that was my first answer. I believe power plants have been put in service and I'm getting a nod.
Okay, and so this was the specific location where we've talked about in the past in previous corporate operating plans and tried to describe a cost of service study to the public, which if you really want a customer engagement challenge, go ahead and try that. That's master's level. But I mean, the fact that we had talked about this explicit calculation methodology in previous years and something significant changed in the system this year, namely Turtle Creek and Standing Ground coming online, and the methodology led to a different allocation among customer classes this year, felt to me to be a good explanation of here is validation that the process is working to give the outcomes. And here is an example of how that works through the equations to lead to a different recommended rate action this year from previous years based on different expenses and the different types of service delivered across state classes.
It's an astute observation. Thank you for sharing that.
And the last point here would be, as Greg mentioned earlier, I was one of the people who, when asked about the COP, am interested in the residential, commercial, and industrial classes, especially because within industrial, I think we know that there is one particular type of customer who has abnormally large influence over the changes in the demand and energy that we're seeing. And so moving forward, I would be interested to hear from the finance committee that discussion about, to Director Hudson's point. We have something, I don't want to say hiding in a negative term, but that is within the industrial class that is substantially different than other industrial customers in the way they receive service, from the transmission connection to the market access. And so I am very interested to find out, as we go through this cost of service and the allocation at the end, what might we learn from saying there is something substantially different about this type of customer from other customers in the same class? And is that worthy of individual identification in our future rate making processes? And I'm not looking for an answer now, but I do think this is something that has come up frequently enough, and that the percentage of the industrial class that falls to a relatively small number of customers who receive service in a very specific way is a point of significant interest going forward. How do we understand that so that on the chart, there might be some additional information to help us and the public know exactly how that application is.
Yeah, and to take that a slight step further, as I mentioned earlier, I talked with everybody on the board about COP rate action and we had a conversation about it. And Director Williams is not the only one who brought this up. So I want to like lean into at least some level of unity of control that people are interested in having this conversation. Again, we don't know where it's going to go, but there were enough voices that leaned into that question that I think is going to mean that we're going to probably end up with something on the work plan for us to explore in the finance committee.
And I welcome that conversation because this is happening nationwide.
Yeah.
Right? But it is first timing, first that figure out also how for entities and other utilities or regions. I think it's something that's right for like.
So I know that on this slide, we have that allocated to customer class policy then, and that's related to this part. Identify a boundary around it. I mean, do they say residential, commercial, and industrial, and that's it, or is there some room here?
As far as, like the profile of the customer, are they saying if you're a certain profile, you belong in this class? I'm not aware of any. Where I would be more inclined to look is, kind of that neighborhood space where you would find sort of an industry norm for those types of things.
Thank you.
I couldn't remember that.
Public.
Thank you. Yeah, I couldn't remember. Thank you.
Hey, Greg, what would be the range on, without giving any individual customer names, the range of our industrial customers? Obviously, you have the data centers at the high end.
Yeah.
What would be the type of or company that would be at the smaller end of the industrial class?
Well, welcome. Supplements from Miss Hoyle. For a profile of the class, there's approximately 120 customers in the industrial categorization. So that's how many we're talking about. It could be anything from ag processing to manufacturing to data centers to healthcare to it's pretty diverse as far as the quantity of customers in that customer class, and then the usage varies as you note. Yeah.
Maybe the size of the megawatts. What's the range of megawatts that is demand?
It's wide. I don't know that I have that.
On the low end, maybe 5 to 10, on the upper end, 500.
I think that's a reasonable characterization of the kind of spread you might see in that class.
On the low end, it's about 1 megawatt.
Even smaller.
But I think that's a great question, and let's just briefly mention the per uniform system of accounts. There is a way in which a standard for all utilities to categorize all our expenditures, and that's established by FERC. Where we have discretion is in determining, okay, who belongs in this category, how do we design this rate, and that's something that has evolved through time. This is a conversation we're having about data centers, perhaps. That could be another evolution, because now the gap is wide between 1 and 500 megawatts. But I did want to acknowledge the standard that we have in categorizing expenses that's determined by FERC.
The one thing, Brad, that maybe I could prompt you to dive into a little bit. When we look at the table and we look at broad classifications like residential and industrial, and we kind of ask questions about the breadth of that. That's how it's summarized for presentation, but the rates are actually derived more in a more granular fashion. Actually, the rate at a specific rate and rate class. Correct.
Yeah, that's the kind of the last jumping off point. After you've allocated to the class, you build the rate based on how people within that class are using the system based on the structure of the rate offer. Yeah. Yep.
So I view the COP as largely us talking about the cash flow statement. Can we talk a little bit about balance sheet and how that might change over the next year?
Yeah.
I'm really interested in knowing like what the projected debt capitalization.
Yeah. Yeah, we're hovering around 70%. And we want to stay under 70%. Because we believe that's the consistent spot for most of our credit peers. The other thing that's happening across the balance sheet as a whole is the asset base is growing at historical levels. The net position or the net worth of the company, once you satisfy the liabilities, is growing substantially. The net position of the organization was $1.7 billion at the end of 2024. Assets were $7.7 billion. And so we're going to see that profile continue to grow in those categories. And we're going to have to stay really focused on the total debt load that the organization absorbs. And I appreciate you illuminating.
The, what Brett referred to earlier, that's, you know, a little bit of former, the asset to capitalization ratio, which is very important, something that we report back every year on SD3. What that basically tells you is how much of your asset base are you financing with long-term debt? 100%, a 100% number means you're fully leveraged. Every single piece of equipment you have, you've issued debt. For us, a 70%, which I think it's what rating agencies give you as a guidance, it tells us that 30% of the asset base is financed with cash. Current revenues that we're using to continue to replace modernized equipment, which is a healthy mix. If we were ever to go above 70% on the asset to capitalization ratio, that in and of itself doesn't mean a downgrade, but it would cause rating agencies to say, hey, this is a trend. This is a 1-year event. So that's a very important piece, a very important metric for us to look at as we're expanding our asset base, make sure that we continue to have a healthy contribution of current revenues versus long-term debt.
And I would say too, that's an industry reality at this point of the electric systems history, where you have large amounts of expansion. And so the direct correlation with that is total quantity of debt issued. And so that's something a lot of people are diligently working through.
So if we look across like the large public power council, our peers there generally have about the same.
So I think Javier will have more thoughts on this. Some people in the LPPC are a different entity. And so you might have a distribution utility that doesn't necessarily. Yeah. You'd want a consistent peer group to your characterization.
And also there are a few of our peers who have a lower credit rating than us. So they will probably have a different capitalization ratio. But if you were to control for the rating, I would say that would be true.
I would say if it's helpful, the distribution utilities are generally deemed the most safe. Everybody has their own attributes, but from a credit worthiness perspective, the distribution utilities are most safe. And then as you get over into the G&T space, the agencies would deem them great companies, great organizations, financially healthy, but simply by the nature of their organization, they would carry a slightly different risk profile. And then you have us, which is vertically integrated all the way through the chain.
So we can upgrade.
Potentially.
Maybe we have.
Potentially.
Risk and
Yeah.
we have GNT, but then we also have a distribution piece.
I think that last characterization is really an accurate. Yeah.
If I may, and we're getting down into the weeds, but I think this is another very important point that has been discussed in the past board meetings is, since we're talking about the balance sheet income statement, for us, it's very, very important also to look at the annual depreciation of our assets, right? For us last year, I'm looking here, I don't have that by memory, it's about $144 million of annual depreciation. You want to make sure that you are at the very least investing that amount, if not more, on your system, making sure that you're not letting your system degrade faster than you're reinvesting on the system. just on the existing assets. The reason why we have such a large capital portfolio today is because we are adding new assets, but we must never forget about our sustained capital. Make sure that you have a healthy replacement of that depreciation. And that's as far as I'm gonna go to the detailed accounting.
And that's part of the rising cost for everybody. I mean, I think that's the point I tried to articulate.
I have one more specific question. This is you, Troy. For that 20 to 40 miles of overhead distribution that could be planned to vary, do you have particular areas of Omaha targeted for that? Can you describe that now?
It's not just Omaha.
Okay,
Um,
fair. It's a service
There
territory.
you go, there you go. And it tends to align with when those assets are ready to be replaced. So it's more of an asset management piece. Okay, I either need to replace it with the overhead or get underground. I would say, generally speaking, in recent years, we probably have a little bit more rural undergrounding. And, we also kind of look at reliability and what's going on in circulating, what's causing disruptions. But yeah, they've already, I don't remember off the top of my head which areas, but there have been places identified.
Is it kind of tagging on that more? Do we coordinate like with the city with sewer replacements when they ripping up a major section of road, putting major sewer lines? That seems to be an opportunity to potentially tag on to that, reduce some costs in the process for both entities. Have we done coordination in the past in that area, or?
It's a good question. I'm not 100% sure as it comes to undergrounding whether we've done that. I know we have coordination. We know what they're working on.
Yeah.
We look at our
Deconfliction.
portfolio.
The streetcar is a good
The
example of
streetcar is really
that,
good.
but it's not a bury.
Right, but so there's definitely alignment there and understanding and transparency. So I know our team looks at options. I don't know, Dan, if you have anything else to add to it, they look at the options to say, okay, what makes the most sense over the course of the next year. But if they've aligned perfectly with one of the items you've identified, I'm not sure.
Yeah, I would just say our distribution plans do tend to align with the city plans, especially road widening as much as we can. I know Tim could probably speak to some of this too, as your utility coordination group works on that quite a bit, but that is a big part of our effort to coordinate relocation / evaluation from overhead to underground. It's definitely included in our distribution plan.
In future years, plan teams keeps looking at circuits like they're just in such heavy issue area. We still have to be involved.
Thank you for your questions. I think this is my last slide. So it's kind of sliced into two subjects. The $2.9 billion of expenditures in the COP. We've gone through a type of review process with the Brattle organization, and you can see their characterization of what they think about our plan. I'm specifically going to call out prudent utility practices. And so that letter is in the package for the board to contemplate the rate action. And then the rate action in particular, which is how the rates are comprised, Brattle has found that the proposed rate changes are fair, reasonable, and non-discriminatory, which is consistent with our legal obligation. Having said that, I think we're going to transition into, here we go. So this is a little bit of a summary of the conversation. So what's driving the rate increase and the revenues that are required is the growing capital portfolio, the infrastructure expansion. We continue to harden the infrastructure that's currently out and about. We're going through a meter campaign to give our customers new meters and also give them new functionality at the same time. And we'll continue to build on that as we go down the road as an organization. We've offered a more enhanced customer platform and an outage map. We also made some modifications into the, I'll say the kind of the high side of the commercial and the low side of the industrial rates. So we talked about that in detail. What is in the proposal is a more clear set of demand thresholds for some of our rate offerings. And we found that to be consistent with best practices to offer more clarity there as far as the demand that you can hit. So that's in there. And we tried to focus on our competitive rates, keep them below the regional and national averages. We continue to have, thankfully, some good success there as far as on a relative basis as our rates move, how much our rates moving around us. We tend to have most of that conversation in SD2, but that is no accident. And I want to thank my colleagues for their diligence in how we're collectively trying to run the business alongside the board. And then we're ensuring OPPD satisfies the key financial metrics. So quick summary there on what we're after here in the proposal. Slide 45, please. I will turn it over to Tim McAravey to talk about customer feedback.
Good afternoon, good morning, everyone. Tim McAravey, Vice President of Customer Service and Public Affairs. So we, as we often do in matters of this degree of change, conduct a public feedback opportunity. And we did that from November 18th through December 14th, keeping it open as long as we could up till today's meeting to be able to collect feedback. We had about 75 contacts from customers and stakeholders through all channels that came into us relative to the corporate operating plan. I'm going to start a little out of order on the slide. Sentiment is perhaps not surprising related to an operating plan that carries a request for additional rates. Mixed sentiment, though most of that was negative to neutral of the feedback that we got. We received comments from a wide swath of stakeholders and customers, small, medium, and large business customers. We picked up comments from social media, OPPDcommunityconnect.com, of course, board contacts through that content form on our website, news stories, state officials, customer care calls and emails. And we did not have any comments, though. We also stayed plugged in with advocacy groups or community support groups. We did not get any comments there. So the themes of summarizing the feedback across the 75 contacts is listed on the left side of the slide. What's not listed here is our response to those themes or that feedback. I would ask the board to rest assured that we use each of these as an opportunity to educate and explain, very similar to what Brad just led us through, what is driving the rate increase, what is changing in our business, how our customers affected, et cetera. So most customers, not unexpectedly, would prefer not to have a rate increase or wish it was lower, while some actually expressed understanding around the inflationary environment that we operate in. There were requests to get the rate information sooner. That is predominantly from business customers and predominantly geared around being able to have greater visibility for their corporate budgeting cycle. Some think that certain types of generation, they may express a perspective that a certain type of generation is driving rate increases, while others may express a perception that there's a particular type of customer, particular type of class of customer that's driving rate changes. There were comments around concern for vulnerable populations and those who struggle more to pay their utility bills. Some customers called out their desire for internal cost cutting, which we know we've done, and we express that and educate to them. But some customers noted that. Some customers also expressed more of a desire for transparency, greater transparency around cost to serve methodology. Some going so far as to want to see our cost numbers and how do we allocate those, et cetera. Those, as you might imagine, tend to be larger customers where the rate increase translation into dollars can venture into a sizable amount of money. And then, as you recall, when we talked about the corporate operating plan, we signaled in trying to be transparent, a trajectory of rate pressure over the next coming years. And we had some customers and some people offering feedback react to that and note that as well. So Aaron, I think we can go forward. All right. One of the other things that we wanted to express, both in with the board and express to the public, in using this forum as another opportunity to do so, is that for those customers who can benefit from assistance in paying their electric bill, we offer a number of options. We probably break it into 3 different tranches, if you will. The first is around bill payment options. So a number of different ways to either get assistance with bill payment and or manage the payment of the bill through things like a payment installation or installment program, a level payment plan, et cetera. So we've got a wide range of options that we offer. We also offer some options around lowering energy usage, which can translate into lower bills as well. So we work to provide that to customer. All this information is available on our website and through a variety of other channels. Most importantly, our teams are versed in these. So when they talk to customers who are expressing difficulty in paying their bill, the team does a wonderful job, a very heartfelt job of trying to connect customers with plans or assistance that will benefit them. And lastly, I wanted to just give a perspective of energy assistance that is actually being provided. So you will see some spikes of energy assistance. Those are specific COVID year program funding that took that total in 22 up to about 15 million. We've talked for the last couple of years through 23 and 24 of those funds returning to pre-pandemic levels. And then you see the 25 where we project, that's actually a year-to-date number. So though many of those assistance dollars are in, that could creep up just a little bit. You see, excuse me, the LIHEAP program, Low Income Home Energy Assistance Program, that accounts for 81% of our available assistance. And we have over 13,000 customers enrolled in that program. Our funding this year was 10% higher than last year, so we're thankful for that. And our energy efficiency assistance program has weatherized 127 homes in 2025. We consistently look for ways to have that penetration be even more, because ultimately that's while it's a 36% increase from 2024, the numbers are still relatively low, but the help in reducing home energy usage is pretty impactful. And then, of course, as outlined on the prior slide, in addition, we offer a number of payment plans and installment plans just to help customers manage the cash flow, so to speak, around their electrical usage. So I wanted to share that information both about customer feedback and about customer assistance. I want to assure the public knows that if they're having challenges of that sort, they can contact us and we'll help work that through with them. And we also work very, very closely with all other assistance programs in the area, because we understand it's often not just an electrical bill and energy bill issue that they may be having. It may be housing costs, etc.
Okay. Tim, real quick, the LIHEAP program represents a significant portion of the customer assistance. I don't know if you or someone else could comment. There's been discussion at other levels of government about funding for LIHEAP. Do you have any update for us on, do we anticipate LIHEAP funding available, being similarly available going forward? Can you remind us what happened with federal actions?
Yeah, directionally so far we do, though we acknowledge the volatility of federal funding programs. In particular, we navigated, I guess, a lot of that uncertainty this year. And while there were lots of assertions and positions about it going one way or another, what we saw is that even during the government shutdown, et cetera, there were efforts to keep that program chugging and to keep dollars flowing. That signals to us, this is a bit of an opinion statement on Tim's part, signals to us a recognition of the importance of this sort of a program to constituents. So cautious optimism that we would see funding continue at roughly commensurate levels.
Does continuing funding require action, or is the default path continuing funding at the same levels as past?
That is a good question, and I'd have to follow up specifically unless Brooke, you happen to know.
Okay, great. Thanks very much.
You bet. Okay, Aaron, there. Okay.
Thank you. All right, Mr. Ring.
Good morning, Jerry Rainey, the interim vice president of human capital, here to give you a monitoring report around employee relations. So we've talked about money, we've talked about customers, and now let's talk about employees. This monitoring report is, as you can see, OPPD shall develop and maintain a diverse and inclusive inclusive workplace reflective of OPPD's core values that engages and inspires employees to commit to the vision and mission of OPPD. That is the directive from the board and SD8. And I'm going to break it down into three parts and give you a report on all three parts. The first part, you can go ahead and move to the diverse and inclusive workplace. Lot of screenshots here that just basically explain the demographics of our workforce right now. You can see 89.17% white. From an ethnicity standpoint, next slide is on gender. And you can see 9.20% in female, males 90.81%. According to our national studies, women account for about 25% of the traditional energy sector, compared to the overall average of 47%. So we attribute the underrepresentation of women in the workforce, in our workforce, as the lack of female role models, physical demands of the job, and some pipeline issues that we've seen in the STEM-related studies. Demographics by our veteran status, next slide, is veterans contribute to about 9.0% of our OPPD rate. And then I gave you some generational breakdowns. The fastest growing generation, the Generation Y in our organization right now at 43.03%. Generation X being a big contributor there at 38.74%. You can see the boomers are continuing to decline. Traditionals attributing less than 1%. Next slide that's typically the information that we report at the federal level through the affirmative action plan. This year, Executive Order 14173, titled Ending Illegal Discrimination and Restoring Merit-Based Opportunity, revoked the previous executive order. And what it did was it took away our mandate to report on affirmative action. More so in the line of gender and ethnicity. We're still required to report on the veteran status and disability status. But we're no longer required to report in an affirmative action reporting around that consideration for 2026. One thing that we have done, we've looked at that executive order. We still believe that in many ways, state and local laws require us to track this, so we continue tracking those numbers. And then there was also a mandate in there to review all of the federal contracts for the language in the new executive order, especially around things like DE&I program restrictions. And so while removing that from our affirmative action, we are still tracking as a best practice. And so if you look at our employee resource groups, 54% of our employees are in some type of ERG or a community of practice. And in 2025, one thing we did do was we moved all of these communities of practice and all of these ERGs into one bucket that we call ERG1. And then I gave you some examples of some of the things that we were doing as far as executive-led power hours, coffee conversations, navigating careers and with different levels. We done career reflections, and we've created the space for career growth, inclusion, and authenticity. And then about out of that 54% of people that actually join the ERG1, we have about a 40%. We have about a 40% participation rate. So some people join it, don't participate. Others, there's a pretty good participation rate there, 40%. And then one of the other things that we have is this community of practice. Next slide. We look at things like the OPPD data, the Society of Engineers, the project management, and then Toastmasters as well. So those are some of our communities of practice. The next slide starts the employee engagement piece, and the way that engagement is typically measured is around the engagement survey. That's how we always manage it. Our overall favorability this year was 70.7%. That was a decline of 5.1%. And it was 9 percentage points away from what we would consider, or what Quantum, who issues our engagement survey, they would say that 79% is top quartile. That 79% quartile has been pretty static since the inception of the engagement survey. It has stayed 79%. So there's not a whole lot there as far as movement in what top quartile is. We had 255 fewer employees complete the survey this year than we did in 2024. And some of the biggest takeaways from this engagement survey were perceptions related to recognition and confidence in the future. Learning, development were larger areas of concern for our employees as well. Employee concerns around the cost savings were top of mind, especially when we looked at the piece of recognition and job security perceptions. So perceptions related to team dynamics and inclusion and safety and respect were among the most favorable. So the inclusion piece there was most favorable. While the overall favorability declined in 2025, I would say OPPD is still performing extremely well in comparison to other utilities and across nearly all of the engagement categories. The takeaway for key opportunities for improvement, we looked at it in two ways. One was executive, and one was leadership of managers and leaders and managers in the organization. And the part that we emphasized for executives to work on was the piece of, I understand OPPD's plans for future success. And when the organization makes changes, I understand why. We looked at that as a high impact item. And that is on every executive's action plan for the year. For leaders and managers, they had a couple of different choices. One of the choices was their immediate supervisor regularly coaches me on job performance. We've seen that as a high impact item, and they clearly understand how performance is measured. The third was I am included in decisions that affect me. And so with those actions, managers could pick one of those and work on that as an action item for their year. And those action items have been in place. If you look at, and I gave you a slide on just the trending of what we look like from the annual engagement survey. You can see this year was a pretty significant dip. If I was to draw you a line of top quartile on there, it would be a straight line across the top at 79% since about 2016. That top quartile has not moved at all as far as what Quantum says is a top quartile. So in comparison to the other utilities across, the next slide will give you a comparison on how we looked on the high impact results of what, and our comparison against utilities and others in the organization. So you can go to that slide. You can see that that there are a couple of questions that are labeled new. In our previous best places to work survey, we combined some standard Quantum workplace questions with what I would say was a large number of custom questions. And while that approach offered a lot of flexibility, it also introduced a few challenges to us. And this year, in 2025, we made a conscious decision to align more closely to Quantum's best practices. And we did that because it gives us better comparison to utilities and also companies of the same size. So we moved more, when it says new, it's only a new question for us, OPPD. It was not a new question for Quantum. Quantum, these were questions that were in Quantum's bank. The green shows you where we rate as far as comparison to other utilities, with the red being where the red in the 2025, when we go to 2024, you'll see a decrease in some of the scores where we scored lower than we did the previous year, but we are still higher than in comparison to other utilities and companies of the same size. So just gave you the picture of the red and green more along the line to show you in comparison to utilities, still doing pretty good. In comparison to ourselves year over year, had some work to make up there. And then the next slide is an inclusion breakout slide. And so this slide was more around the diverse and inclusion questions that are included. Quantum would say 70% favorable is what they would consider favorable. Anything below 70%, they would say that you would need to work on. And so that's kind of where the work comes from, and that's where our action items have come from. And then lastly, we had the just what I labeled other. Sure. Absolutely. Yeah, the response rate was low. We also, along with the questions and going to the standard questions from Quantum, we also made a conscious decision this year to hold to Quantum's best practice of doing the survey for 2 weeks. They say that 2 weeks is the standard, and in years past, we would look at our participation rate, and if it was lower than a year, we would kind of extend that out. And we would extend it out, put communication out that there's still time to do the engagement survey. Also, what happened in this time frame? This was June of 2025. And so what you would see in the survey results themselves was local 763 union employees were significantly lower because of storm response. We had a storm. They were responding to the storm, and engagement survey was probably not top of mind.
So to educate me then on why it's a best practice to have a hard stop to these, especially in light of the fact that I think that we described as probably some historical contracts for employees.
Correct.
Always gonna get extended on to it. Help me understand why, like a 2-week part.
Yeah, Quantum would say that anything over 40% of your organization responding to the survey, that you're not going to get anything statistically significant and higher or lower rates of, so that they say you just cut it off, and what you're getting is the people that are engaged enough to do the survey.
In other words, to say it differently, results will not change as you get a higher funding.
They wouldn't change significantly.
Okay.
Well, I struggle to understand that because a very specific segment of our employees.
But we would have had enough in local 763 for it to be significant for us to score. That's what Quantum would tell us.
I think to your point, something that I'm engaging with it. Happily, they're a better time of the year for us to do this. And we picked June in the past, because it's in between seasons. You have the heavy spring season of allergies right before the summer. You know, a lot of work with integration plans. But just like with everything else in OPPD, those windows are shrinking. So I think it's important. It's going to be important for us to figure out and maybe challenge Quantum to say, well, maybe 2 weeks was okay for the group that we were benchmarking against. But now that we're benchmarking against utilities, maybe the window must be a little, maybe 3, maybe 4. We may start at curve. But I share your skepticism or your concern. Hey, doesn't matter whether we would have gotten a different result or not. I think it's very important to give the opportunity to as many people to voice their opinion. So
Yeah, I don't want an individual employee to feel disadvantaged
Yes.
because they were
Exactly.
doing something
Yeah.
else, right? Doing something of great importance.
Yes.
Right.
Yes. Even if the needle hadn't moved, it's important to say, we want to hear from you. Because it's not just about the score. And I can tell you this personally, and I know the EL because that we actually read the comments, the qualitative comments, and there's a lot of value in there. And I think the higher response rate would give you an even more robust set of comments.
But I would also remind us that 70% response rate is good response rate to an engagement survey. That is a good response rate. When I say good, our directive is top quartile. So even though good is not good enough in that particular case, right? We're driving to the top quartile in both response and engagement.
For future reference then, we've got, I'm not suggesting we have a target for response rate. I just got to send by really curious to understand the response rate. What's response rates are like for other utilities? So again, maybe to underscore the point that 70% percentage over what all of the utilities respond to. We go to the next slide real quick. I see, curious about I have the materials and equipment I need to do my job, that feels like when I think about that, that feels like the last thing we want to be doing is limiting our employees' ability to do their job, give them what they need. And it's 68%, so it's not far below that 70% threshold in Maine, but the fact that it's decreased and it's in some cases below other utilities. Do you have a sense for what some of those materials and equipment needs might be? Like, could you call that in?
I would say that was, I'd make a reach, but I'll give you an opinion. I think a lot of it was in the comments around, not so much things that were taken away, but the perception that due to the cost savings, things were going to be taken away. And so it was kind of that fear of, I may not be able to complete my work in the way that I have in the past. And so it was, I think some of it was real and some of it was perception around the things that would be taken away as we work through. You know, when I look at engagement around the cost savings, like that was huge for us as an organization. We came together as an organization and was able to save $60 million. And I think that to me, in many ways, tells me more around the engagement of our organization than the engagement survey does. The engagement survey is a snapshot in time, whatever's going on that day. But when I see the activities that happened around the cost savings, that reads to me more. Gives you a peek and
That helps me understand how you're. In light of the fact that we're pretty COP, like that's where we allocate. So think about the COP, not sort of a restriction on that. We've talked about this, right? But like, affirm for me that still restricting it.
I think that's generally true. Part of the reality of my answer is when you have $4.5 billion of infrastructure that spans 20,000 linear miles, there's always something to do. And the feel is we never really get to a point where I can fix all of these things. I have everything I needed. So I hear that guy in the back of my head when you ask the question. It's the largest capital portfolio. I believe it's the largest O&M portfolio. I believe it's the largest tree trimming portfolio. All of those things are true. And still the teams will have aspects of the year where this feeling probably will creep up. I will probably have this feeling. From perspective.
If I may, just summarize, I fully respecting everyone's opinion here, and everyone had a different thing in mind when they fill out the survey. I would characterize these based on the responses we got from employees who wrote down. It's the pace of change. We are changing things really, really fast. Trying to keep that message consistent and clear with employees, that's what we're trying to do. But this change is happening fast, and there's obviously some skepticism of, hey, where are we going? Like just 2 years ago, we were talking about building new generation, but we were not talking about load growth. What's happening? 2 years ago, we had plans to build an integrated operations center, and we had to pause them. So we're changing things very quickly, and that obviously creates concern and skepticism from employees, and I will own that. That's part of leading this organization on such a rapid changing environment. We have to try to communicate as fast as we can, acknowledging that there will be some friction in the way we're communicating with employees. And the other one, to the point Brad was making on the cost savings initiative. We could have taken a lot longer time and communicate and seek input and how much should we find savings. It would have taken us a lot longer to get those savings. We could have potentially gotten a better engagement survey, but the savings wouldn't have been delivered as fast. So I made the decision to go as fast as we went, acknowledging that we were gonna have a lower engagement. And I'm not taking that lightly, that's an important thing. And so that, for me, not only in 2025, but going forward, Tim McCravey knows this, we and Jerry knows the emphasis that we need to continue to put in communicating with our employees about the direction we're going, how much of the resources we're restoring in this budget, and continuing that open and honest communication. I believe that will help us increase that interest. But again, the rate of change is I think it's going to be constant for the next few years. The way to mitigate, one way of mitigating that is going to be communicate, and when we change, communicate again. That's how I would summarize the results that we got this year. It's not fun for me to see that the response or the engagement went back down to the same levels we had in 2022. So 2023 and 2024, we made significant improvements. We were in the 74-75% range, and we fell back to the 2022 range. And my goal would be to bring that back up. It's very intentional, and try to again communicate and show the same transparency that we've always shown, just a lot more frequently, because things are changing more frequently.
May I also add, back on the overall results, the perceptions related to recognition, confidence, etc. Just referred to. The organization did this really big cost cutting thing. I remember it's December last year, Director Omaha rolled off the board, and I remember one of her party comments was that OPPD should be careful not to race to the bottom and lowest of rates, everything, because we don't want to get into trouble with that. And so you're owning some, but that cost cutting effort was made so that we as a board would not have to ask for a 9.9% rate increase across the board, so that we could be easier on our customers. So I think we have to feel responsible for that as well, and we keep that in mind going forward too. So I want to thank the staff and everybody, ELT, who went in, were involved in cutting those costs, identifying what could be cut, because that has enabled our public to benefit from a lower rate increase. Thanks.
I actually want to double click on your comments. I'm not sure who to ask these questions to, Sherry or Javier. But on the next slide, on the inclusion slide, we only have 61% of people who trust the organization to be fair to all employees. We have 60% that say that our organization values diverse opinions. And all of these there's a core value under here that speaks to trust, right? And so is there some coaching or some mentorship or some training that's going on with the executive leadership team around how to build trust in a changing environment? It sounds like the change is the challenge, and we might be sort of reaching the edge of the skill set in terms of how to communicate that change effectively in a way that builds trust. What I see from a lot of this, and what I saw from the crosstabs previously when I read all of the comments, is that there's been an enormous erosion of trust amongst the staff and with the leadership, not necessarily with their peers, not necessarily with the person that they speak directly to, but with this upper leadership and the board as well. And so are we doing any leadership training? Are we focusing on building trust in a challenging environment?
I can take that. There has been an erosion. I don't know, we can disagree on whether it's enormous or significant. But I will own that. I think we don't have currently anything planned this year. I think I'll take that as a good challenge. We have about a year and a half ago, we engaged as an executive leadership team with coaching on building trust among the leadership team, and how do we communicate and pass along that. We have programs within the organization,
Some-
level up and a couple of others where we are integrating both the frontline managers, level 2, level 3 into the ELT, building that trust. So there is a robust group of training, but I would say there's more to be done. And so I'll take that as a good opportunity to always improve.
Even if I add just a little bit, I've been doing roundtables. Troy had me do some roundtables in his area with some of the females to talk to them, just make sure that some of that they know that they've got someone to have conversations with and the leadership cares. My numbers are pretty low on the employee engagement. I'm not going into this, but you know, yeah, my numbers were pretty low. Because of the cost saving effort. It was right after the IOC was cut. So I have had done, I think, 10 to 12 roundtables with my teams since then, in small groups. And trying to explain how complex all of the decision making was. The first 45 minutes, I'm explaining to them why we did this $60 million cut. And it's not something you can put on a memo easily. And so they, after the first 45 minutes, and then I let them talk and ask questions, what I've realized is that they crave that information, but it is so complex that you almost have to be in it to explain it to them. And we'll see what happens with the engagement scores, you know, what come back, but we decided to go right in and just see if we could go in and figure out why they were having issues. And there was a lot of change at that time, as Javier said, and what they all have said at the end is, I said, what do you want me to take away from this conversation at the end? And about 75% of them say, please keep doing this, where you're coming out. And Scott was in a BU meeting with me yesterday where we're doing Power Act sessions at the end where they can ask us questions directly. We've invited other people to be part of that in there. So what I am truly seeing is how fast it's changing and how hard it is to communicate it in a memo. And so we're trying to get it into a lot of our discussions in another way. I don't know if that's useful for what you're saying, but it's occurring. And, you know, I think you did a COP lunch and learn yesterday, you know, on that. I mean, there's a lot of work we're diving in and trying to get that done.
And maybe quickly as I go by, thank you for that reminder. Jen, you can remind me. So as of June, late June, when we got these results, something I did was we need to go out and possibly come into this issue. These time around, I'm very intentional, go out and talk to instead of get anything that 18 or so meetings I've had outside of these buildings. I've met with maybe 800 of the 2,200. So there's that concerted effort. More. And you mentioned, well, I think it's not just with the EMPs, with people. How are we setting direction? What conversations we're having that are giving employees assurance that we're moving to I'm taking up that word direction.
Thanks for the question. I would only add that the decisions that the ELT struggles with, the decisions that the board struggles with, that there's always an opinion in our workforce as well. So it's just that fact, right? That tough decisions, people score that in the way that they think you should have decided something.
Yeah, but
So,
what I've found is that you can have a differing opinion as long as it's heard.
Absolutely.
And what you read from this is that it was not heard. And so that's what's being exposed by the survey.
I think it's a good point. And programmatically, right, we're trying to hear what those employees are saying.
It doesn't look stable here from
Oh, I just read through the entire crosstabs.
Okay. I was trying to figure it out.
I think it's an overall sentiment. Anything else?
Yeah, I think it probably won't be surprising to for you to hear, since coming from a woman in a segregated field that I'm worried about. Can you highlight for me a little bit about, this is like by gender, how this has changed over the last couple years?
As far as our demographics,
Yes. How the
our demographics, as far as, are we talking specifically to female employees?
Yeah, let's start.
Yeah, I will start with that. That has actually went up. That's grown up now. The struggle here is not so much around our ability to hire female employees in what I'd say traditional roles. The struggle is in those non-traditional roles and where we're depending on things like our interactions with the colleges and things like that, getting females back into STEM programs and those type of things. And they're long runways. They don't solve with a program, then you run it 6 months. They solve with an opportunity to engage with public universities, those type of things, and have those conversations around women in STEM programs and those type of things. I think one of the things that we continued, even in the midst of the cost savings, was around our pipeline and where we had built that pipeline of interns, co-ops, those type of things. We continued that because we knew taking any kind of step back from that, you take a step back in 6 months, you save a little bit of money, and now you're 5 years behind where you would have been. So I think that's growing, which is the good news. We need to continue doing the interactions with STEM programs and those type of things. And I would say based on the cost savings, we're committed to that because we did not remove those things.
I appreciate you continuing to do that pipeline building. We talk a little bit about retention. So, let's say you had an employee, female employee here in 5 years.
We look at our attrition based on the whole. We have it broken down by gender, but I would say there's not a significant difference between when we look at attrition rate. Our attrition is fairly healthy. We've got less than 5% attrition, and about 3% of that is retirement. So attrition is not something that's overly concerning. We continue to look at it because we don't want to see it spike. But there are other opportunities that are, there's opportunities that are presenting themselves to folks, and hanging on to the talent that we have is a major concern of my group. And that's why we continue to do the things that we do, build the benefits packages that we have, negotiate the way that we do. And it is to make sure that we're not seeing those spikes in attrition. I haven't seen attrition in my tenure here ever be a problem, because I think we concentrate so much on making sure it doesn't through this SD. So
that 2% that's non-retirement related, you do an exit interview, right, for all those individuals? Is there trends in those exit interviews in terms of rationale reasons why they're departing?
Yeah, we actually have Quantum do the exit interview for us. We have a third party do the interview. We've found that it's better if a third party calls. They range everywhere from extremely disgruntled, going to find a new job, to I just got a better opportunity. There's no trend when you look at it. It's typically very individualistic based. I would say most in that 2% have found a better opportunity somewhere and have left for either a higher paying job, a job that meets their family's benefits better than that. Like that's what we typically think, a promotion. You know,
I would say that's. It's kind of environment. And you also feel like. A lot of individuals have to live now. So they're taking that consideration now where. Not that balance. So that's, those are the two areas that I think. I think culture here helps us to keep people. Co-op programs are fantastic.
absolutely.
Yes.
Okay. I'll ask you if they're still here in 5 years.
You can do that.
I know, I think that's remarkably low. Great, I mean, in the AE industry that I'm in, you're in the low teens at least, in turnover. There's a lot of movement individually. So, yes, to have that level. And speaks to a generally very healthy work environment.
Anything else? The last couple of slides are just around, we talked about a few of those programs like co-ops and those type of things, but this is kind of a listing of some of the things that we do. And it's a variety of things between, virtual, in-person led training sessions, those type of things, computer-based programming, training sessions, all of those things. And then we do some things like almost 500 employees participated this year in our development week. So, that is that's led by our OD department, and what it does is it talks about, concentrates on things like building plans for an employee about what they will need to be successful in the job and those type of things. And then as far as looking ahead goes, we built a leadership program called Personify, that all VPs and their direct reports have been through in 2025. Next year, we will start with the management layer, the directors and their direct reports, and they will go through that same type of personified leadership training. So what you'll see is that consistency throughout the organization of what is leadership and what's it mean to us. So
Can I do a quick parenthesis? And I know we're running late.
That's good.
I am going to own a mistake here. It's me. If you can go back to the women, the gender participation. I think there's an error in that. Can we go back to that? Because I think this is a very important one. That it doesn't change the conversation we had. It is very valuable. I have my team run the analysis, current analysis, and I've been exchanging emails or messages here. It's female participation in the workforce hovers around 22%, not 9, 22%, which means the male would be 78%. It's lower than it was a year ago, changed by less than 1 percentage point. But I do want, because it's an important piece here, because it says, comparing ourselves to the traditional energy sector, which is 25, we're at 22. We used to be close to 23. It doesn't change the conversation, the mentorship, the opportunities. That's important. But when I saw that 9%, that really stuck with me. So I will own that typo. I think it's a typo. I'm gonna ask Jerry to
I'll
double
check it.
check. If we drop from 23% or 22% down to 9, that would be a big mistake.
Your number seems more right.
Yes. So, but We will,
I will look
we
at it.
will confirm these by the end of the all committees meeting and certainly before the vote on Thursday. I think that's an important hygiene piece here. Yeah.
And then the other slide, the only other slide that I had in there was a slide of things like Crew Leader University. This was a leadership university that we created for 763. What it does is it builds the capability within 763. Years ago, 763, we used to interview for crew leaders in an effort to appreciate their seniority. We created this Crew Leader University, and now graduates of Crew Leader University, the requirement is you graduate from Crew Leader University, and then by seniority, you become the next crew leader. And that was our latest class that graduated from Crew Leader University. So the next slide just shows some of like our personal well-being. This is around both physical and mental well-being and wellness. We do things like our Know Your Numbers, and we've done 4 district-wide challenges around wellness. The total health and wellness, we do this in an effort to try and keep, if you know your numbers and you're doing a preventative type of medicine, then it keeps you out of that long-term illness and things like that. So that's the goal of that. And then the last thing is that we maintain and communicate our written policies. So things like the corporate policies, employee handbook, code of conduct, ethics point, internal complaints and external complaints are how we hear from the organization around things that they don't feel are right. And then lastly, the union piece around bargaining in good faith with the agents of the 3 unions that we are in agreement with. We looked this year, we completed 3-year agreements with all 3 collective bargaining units. We've also done memorandums and letters of understanding. Many of our ELT staff are going out and doing quarterly safety meetings. And then as far as supervisor training, crew leader university connecting, and we've also asked that the ELT and around just not negotiating, but just sitting around and talking, like what's on your mind and what can we do to communicate better, those type of things with the union leadership and helping the unions communicate to the people that they represent.
Is that kind of conversation generally with the person on your team that is just you? It used to be you. I'm not sure if it still is, or Javier, how often are you in those conversations directly with union leadership?
So I have a standing practice at least once a year. We sit down, we go have a meeting. So most of the time it's offsite. We have a conversation. It's usually just myself and union leadership. This year, because we were negotiating union contracts, that was a little different than in the past because I try not to meet with union leaders in the middle of negotiations. But at the very least, it's once a year. And I try to touch base with them several times during the year. And I believe, and you would have to ask them, but I think we have a great relationship in that there's really nothing that we hide. We have a very candid conversations. They push back, they ask me, they share their frustration sometimes. I share mine, and it's a really good open dialogue, I would describe it, with all 3 unions. And they've had changes in leadership, and I'm very pleased to say that continuity has happened as they change in leadership. The previous leader has made sure that the new president coming in have the context, have the relationship, and so I feel strong about those relationships.
With respect to the
So we just negotiated all three of these. We do that every 5 years.
It's typically every three years. We had one time. You end up
Tell me about the retrospective that occurs following this, conversation. How did that negotiation go?
Yeah, we sat down afterwards, after every one of those, and one of the things is going in prepared, so we have these conversations with all of management, all of the ELT about what is it that we see significant for the negotiation. And then we go into the negotiation looking to solve those things, and then the conversation afterwards is, okay, how did that go? Like, did we get, the one thing I can tell you about negotiations is management never gets everything that they want, and neither do they. Like that, so it becomes, what is the good faith effort there around? What is it that you're trying? So I think your question is do we do a retrospect? And it's kind of, we look back at it and see what we accomplished in it and what we could for maybe the next. Also, like, one of the things that we look at is, we just finished an agreement, a memorandum of understanding for, the DSOs, and the TSOs that have moved into 763.
Distribution system operator.
Distribution system operators, transmission system operators, just completed that negotiation. We took and moved that outside of the 3-year negotiation because we knew it would be long, and we did that in agreement with them. So we, those are the type of things you see in negotiation, that sometimes you move them out, and you talk about them throughout the next 3-year period. But around the after action pieces of, okay, what did we learn in there about individuals?
What I perceive you just said is the parties then go back and they do a retrospective. Party, but not. So candidly, this is a kind of yes or no question from a board standpoint. Board has said, are going to get a simple question. Us to respond, do we feel like the unions are partnering with similar response? I think it's a relatively straightforward question. Tell us the parties negotiate. I'm not suggesting you didn't. I'm just suggesting
No.
there's a data point.
Yeah. And I would say, yes, the unions bargained in good faith. And I would say, yes, we bargained in good faith. And I think they would say the same thing, but I would be fully comfortable with you asking that question to a union leader.
Other side, if the contract narrowly passes or fails, that sweet spot around 70%, everybody's happy. Both sides probably did their job.
Good one.
I don't wanna leave director of these comments kind of hanging in the ether. I think that would be an interesting, and as we move into the question section at some point here, I think that would be an interesting thing to contemplate. How could we have that gap?
Yeah, I wouldn't, I think I'm involved in the process so much that I've never given thought to go back and ask Katie to have all of it. I think it's just part of what we do. And, I've never never thought that there could be a perception that either group did part in relationship and bargaining gives me satisfaction that even though we didn't get. It really is an active work.
I welcome the comment, and so let's take that into consideration as the reflection, please, to see if there's any changes or improvements we can make to either the SD itself or the way we report it back next year. Comment taken, and Jen is not, so. Thank you.
Yeah, this is what the governance committee came up with for recommendation, board members, so have all questions been satisfied? Okay, thank you very much.
Thank you, Mr. McAree.
Okay, I will ask Brooke to approach the podium. We'll talk about SD 11 economic development, one of our strategic directives, and I would suggest that within our core values, in particular of honoring our community, there's many ways in which we do that. This is one of how we participate in helping to play our role in building our economy and building our communities. And Brooke will walk us through the good work that she and her team have done with so many others.
Good afternoon, everyone. If you can go to the next slide. I'm going to start by grounding ourselves in what SD 11 is as a refresh. So this is our third year reporting under this enhanced directive that you all adopted in 2022. And it really set us up for a strong foundation, one that recognizes economic development is not static and it's evolving as our region evolves, as our customers' needs evolve, and as new opportunities present themselves with the communities that we serve. So I appreciate this directive. You've asked us to be thoughtful and strategic, and really our whole organization is behind the response that I'm honored to present to you today. So it's how we approach this work. We recognize we're a key driver of the economy, certainly a partner in that endeavor, one that seeks to listen, adapt, and collaborate to really maximize value for the communities we serve. So the next slide hits on the role a little bit further. We're a part of an ecosystem, so we're working alongside the more than 50 communities that we serve, the counties we serve, chambers, state agencies, educational institutions, countless community partners involved with this work. And our role here really shifts depending upon the needs. So sometimes we're leading, sometimes we're supporting, sometimes we're simply connecting the dots for businesses and people. And the International Economic Development Council, of which Devin in the room and myself, along with our core economic development team, we're practitioners in this space and work through certifications through that organization. They really outline the core functions of an economic developer, and OPPD embodies aspects of these really every day. So we honed in on a few this year to really click on further. And what's most prominent for us, you'll see highlighted, is community development, infrastructure development, site development, business retention and expansion, and business attraction. And so we're constantly at the forefront of that. And the next slide shows how we show up in this work. So it varies. We're stewards in understanding the strengths, weaknesses, and challenges we have in our region and our state. We certainly advocate for businesses, for communities, to help for long-term health of our region. And we try to look beyond short-term wins and really champion and be a part of initiatives where there's strong partnerships and opportunities for us to capitalize on, and really helping move projects from concept to reality. And we can also be gap fillers at times too, stepping in where communities may need our support and helping folks understand and provide education to them on the energy space in particular, of course. So these roles guide our daily work. It also complements the Powering the Future to 2050 vision very well. So the next slide, just to bring this to life further on the impact of projects that we as an organization helped land this year. So we partnered with the university to analyze the economic impact of several diverse sets of projects. So everything from food processing, manufacturing, there's a data center as a part of this as well, education and medical. It totals about $1 billion in economic impact for the region. Over 2,000 jobs, direct jobs landed from these projects. Meaningful numbers here. We also get compared with peer utilities, other utilities across the nation. We were honored this year to be recognized by Site Selection Magazine as a top utility in economic development. And, you know, every year, thousands of utilities can compete for that award. We were one of 20 to be recognized in that space. So it's credit to the OPPD team and really the partners that we work with on this work. The next slide hits on energy as a part of location decisions. So to deliver on these projects, we obviously need to deliver on our mission of providing reliable power. We recognize energy availability and cost are really two of the top 10 factors in business location decisions right now. And our investment in generation and infrastructure, it's certainly attempting to meet load. It's also its own economic development investment as well. So creating a lot of jobs and attracting businesses in this space, strengthening our region's competitiveness. We're serving a robust pipeline of projects. You can see the 2 gigawatt number reflected there of active requests we're currently seeking to solve for to support our region. The next slide talks about our competitiveness from a regional standpoint. As a metropolitan area specifically, the Omaha Chamber runs a report every year. This report, it highlights our scorecard in a sense against 22 peer and competitive regions. And the Omaha region performs well in some areas, and we also have more work to do. We got asked a question in committee, where does OPPD show up in the space? Well, we really touch all of the spaces. For this particular report, utility cost is highlighted as a part of business cost. So I just wanted to call that out. That's where we really show up in this benchmarking. But we really use these types of reports in partnership with our communities, our chambers, to figure out how we sharpen our strategy and stay focused on long-term progress. The next slide highlights some areas we've showed up in this space this year of serving as a community leader and trusted partner. We are a part of more than a dozen economic development boards, committees, initiatives, serving our community locally, regionally, statewide. We've supported a lot of strategic planning workshops across rural and urban counties and communities this year. We've served this year, there was a newly formed Revitalize and Thrive program that we worked with the state on that we were super excited about. Southeast Omaha was awarded a recipient, one of 5 among all communities across the state competing for that. And it's really designed to enhance their comprehensive planning efforts. This point got brought up earlier. I think it's just one to further hit on. Some of us are serving on technical committees and the steering committee of the city of Omaha's current comprehensive planning effort. It's a large initiative, multi-year in the making, but it's just an example of how we're showing up in the space and providing our expertise and collaboratively working with the communities that we serve. We've also participated in some statewide initiatives, including the 6 Regions, 1 Nebraska effort. And with OPPD's territory, we showed up in 2 of those spaces with a Southeast focus and then a more Omaha Metro focus. We've also supported a lot of different small business and entrepreneurship related endeavors. So you'll see highlighted here the Entrepreneurship Education Collaborative that we're a proud partner of. Collectively, this work, it's strategic, it's collaborative, and we feel strongly it's supporting thriving communities. So the next slide hits on a little bit deeper into the workforce and communities that our organization is a part of and leading and advocating for. So it's everything from events like Girls in Engineering Day to Connect the Dots, which covers a lot of educational aspects in our rural counties. A lot of different volunteering events, Habitat for Humanity. We consistently show up as a leading partner with them and communities that we serve and really supporting where communities need community betterment projects. We've also raised a lot of money for community fundraising, for energy assistance, a lot of work done there. We've also proudly been a part of community resource fairs. OPPD, as you might recall, really initiated this work. Now we're collaboratively working with a lot of different agencies, with MUD, and we had a lot of great turnout in that space this year and really showing up for how we can better support our customers. We're also a part of some regional and statewide initiatives, including involving workforce and energy as well. The next slide hits on different tools that we offer. So this slide specifically calls out some areas where we support business growth. So Size Up, it's a powerful market intelligence tool that small businesses can use. All of our customer base has access to on our website. It's providing a lot of great research that can really help our business customers with industry analysis and support smarter planning and growth decisions. SourceLink, called out here on the right-hand side, it's an entrepreneurial resource network that we partner with the Nebraska Business Development Center and some other entities on. It's had a lot of success since it was founded in 2021. We've consistently been a key partner in this endeavor, and you can see some of the statistics reflected there and technical assistance that's being provided to thousands of small businesses in that space. The next slide hones in on other areas of our business that take more of a leadership role in this than our economic development team, so to speak, but we wanted to call it out because it's important to the directive where we're offering programs in the sustainability space. And so we're highlighting this year renewable energy credits. So through the purchase of RECs, we have over 600 OPPD customers enrolled to date. A great program for those interested in that. Greener Together program, we're highlighting here some organizational community-focused sustainability projects. These programs, they're helping with education on sustainability and also giving some different opportunities for us to partner with different organizations on, and also including the United Way. The next slide highlights site development. It's one of the more important ways in my mind that we're engaging in meaningful long-term work. The site development game, it's not a short-term game. It takes a lot of years in planning to think thoughtfully about our region and what areas are best for opportunity, and not just from an energy infrastructure standpoint, but more so how water, sewer, wastewater, how we're working with communities and counties to plan for the future. And this year we advanced a lot of inland port authority planning work in Bellevue, Fremont, North Omaha. A lot of great progress made. We've also supported South Omaha in redevelopment planning. We've led a lot of different site due diligence across our territory, and we also were honored to serve on the statewide site advisory committee as part of 644, which really was designed to highlight areas of opportunity across the state for future growth projects and really select a handful of few sites as a part of this within our territory to really build upon and plan for in coordination with the state. So this work here, it really ensures we've got the right sites ready for the right industries of the future. The next slide highlights our influence beyond our service territory. So just a couple examples this year. We've been a key stakeholder in the Nebraska Chamber Energy Study. There's a lot of education, proactive messaging, and communication around that work that's underway. We're also embarking on a 2.0 that also encompasses land and water as a part of that. So we're one of the key utilities, a part of that. We've also been a key stakeholder in some of the nuclear siting study work in conjunction with Nebraska Public Power Districts. We've been out in the communities sharing more on that. Our team, our organization are often sought after in conferences and places and spaces in the thought leadership realm, and how we show up ensuring that even communities and counties outside of our territory understand best practices and benchmarking as it relates to siting renewables as an example, and how we further get ahead of that in that space and provide education from a utility standpoint to ensure Nebraska is primed well for the future. And we're certainly an active participant in a lot of economic development policy and programming as well. So we're helping shape the environment and ensure Nebraska stays competitive. Closing slide, just recognizing this work, it's a commitment to our communities, our businesses, really our future. And it takes a lot of intentional strategy and partnerships to do this work. And we're really looking forward to building upon this well into the next year. So with that, I appreciate the support on this and welcome any questions or comments.
Well, I'll make a comment. I think studying on a couple of conversations in my local city around economic development. It's just a terrific amount that you do and so important. I was thinking, but we are at such an important place in the nation. But, you know, we just, you know, people come in and want to cite here. There are also times, of course, when you want to recruit for a given area. But I think more often it's people just coming here and saying, we want to set up a business. And I think of OPPD being right in the middle of everything else, city, county, siting, you know, land acquisition, all of that. I think is where we should be. Because only people want electricity. They want to set up a business that doesn't use electricity. We're not in the middle of that. So anyway, it's just a huge amount of work. Thanks very much. It's great always to review this.
This is really good report. I appreciate it. I'm looking back at the actual strategic pressure on itself. I'd like to hear like kind of zoomed out interpretation. For a moment, if I could.
Absolutely.
So it reads, OPPD's economic development strategy will adapt and change to maximize value for the region. Characterize a little bit into how strategy changed over, I don't know, the last
12 to 24 months.
I mean,
Yeah.
over time.
I think that's great. I think we've seen a surge in demand from a utility perspective, right? And I think it's sparking a lot of good direct conversations with our communities and counties of what do we want to be? What is the next era and wave of growth? And also recognizing where we have challenges, not just from a power perspective, but other utilities as well. And what can we do to address to overcome that? Businesses want certainty. Communities and counties generally want to have certainty that they'll have revenues coming in. And so it's where do we take everyone's needs and interests and better align and work together? And I think what we're finding is that can look a whole lot different, even within a county. So being really intentional, working with cities one-on-one, understanding what their targets and aspirations are, where they're viewing growth areas, that best positions us. And so while we have some regional strategies, approaches and work, certainly with the Omaha Chamber and the County Economic Development Partnership, there's also those micro level one-on-one strategies that we have to deliberately and intentionally execute on. And that can look a little bit different. So we're navigating that on a daily basis. I think from a workforce standpoint, we obviously still have a low unemployment rate as a state. So we don't always come into the arena for some of these mega transformational type of projects. But when we do, it's a good opportunity for us to really compare ourselves and stack up to other places and where there's gaps or opportunities to build upon. And some of it is policy planning, right? What does the state want to be? What do the communities want to be? And how you think incentives and programming to attract those industries. So it's a little bit of a micro and state level answer, I'd say. But with the surge in demand we've had, it's given some county economic development organizations an opportunity to even think about how they want to better position themselves. So we have a county economic development organization right now who's traditionally been heavily focused on industrial recruitment, really be focused on supporting existing businesses in their county grow. And a lot of it involves workforce initiatives. And so it's a constant ebb and flow of that ecosystem. You're constantly checking and adjusting. I don't even know if I scratched the surface.
I'll spread a little bit. So on the slide that has a pie chart of all of the different steps of development, what it means around strategic plan. And I think what your answer just now kind of highlighted is that here up the legal obligation. There has to be a or it's unfeasible. And so what getting to, I think, teasing out at the state level even perhaps, what is the state energy strategy? How do you have influence on that? What are the opportunities to influence that? And how does it marry over? And I think that's maybe something that we need to zoom up and out of the district a little bit to understand that space. But I do think that here, because economic development certainly is important to driver for our communities. But we can't keep saying we'll just serve whatever load wants to come on here. And so I think that's it's a tricky balance, right?
It's a good call out. Strategic planning, we'll make sure we highlight that for next year. That might have been a miss on my part, so I'll take ownership on that. But that is the day in and day out. Making sure we're delivering on what our communities and counties are counting on us for. And that might look differently, and it might be some large industrial projects for some and not so much for others. I appreciate your comments.
Anybody else? Thank you.
Thank you.
Ms. Brown?
Yes, I'm gonna have Doug Peterchuk come to the podium, and he is our Director of Enterprise Security. Doug took this role in March, so he's gonna talk today, SB 12 Security Information Management, the monitoring report for that. A lot of great work has been done across the district, and I want to emphasize once again, as I've done before, all of us together collectively, we have a group called Enterprise Security. They are leading us through this, but this is all of us to do security in the OPPD realm. So I'm going to hand this over to Doug, and he can talk about great work, and y'all can ask questions. So I'll leave you that.
All right. Thanks, Kate. Yep. Good afternoon. Again, my name is Doug Peterchuk. I'm the Director of Enterprise Security. And let's just talk about SD 12 before lunch here. So SD 12, in general, it encapsulates 5 areas within the security domain: physical security, information security, which includes both cybersecurity and data security, customer privacy and the management of customer information, records management, and compliance. Those are the 5 areas under SD 12. Physical and cyber related threats targeting critical infrastructure and systems are evolving rapidly. Let's just take a look. Just think about AI. AI is a great support mechanism, but also AI is a huge threat from a security perspective. No doubt. It's ever changing. We have to be adaptive. We got to require proactive investments in threat detection, system hardening, and incident response for both physical and cyber security. SD 12 is foundational to managing our risk in that space. We continue to strengthen our cyber and physical security posture to ensure regulatory compliance, operational resilience, reliability, protection of our workforce, facilities, and customer owners. That's SD 12. Next slide. SD 12, how we manage it. It's evolving, right? Especially in today's environment. Like I mentioned, sophistication of attacks is changing every day. Severity, security risks, threats, growing, requires a combination of maintaining ongoing controls, identifying new controls, moving forward. And that's going to encapsulate those 5 areas on these next slides. Next slide, please. Physical security. We all know it. We all see it. We're feeling it now. There's no doubt about it. Encompasses all personnel, contractors, visitors, operations, executives, individual employees, customer owners, our board. We do continue to provide appropriate financial investment that align with physical security strategy and improvements. Doing well there. Ongoing controls that I like to recognize is one of them is related to what is the Enterprise Security Improvement Program. That pushes out security measures out beyond just the home space. That gets out to the field, our assets, getting security, hardening measures, technology on those assets. We don't see everything that happens in the field. We're continuing to understand that risk and really understand the critical nature and identify what critical assets we need to get out there and monitor and manage. And that's our program. That's an ongoing control that's supported financially every year, and we move that forward. And another one that I want to recognize here, and it's been ongoing since I've been here. I've been here 25 years. But since I came in, I've had a push to really develop relationships with all aspects of, you name your applicable authority, from everybody from FBI to the Department of Homeland Security, to local, I'll say, authorities, Omaha Police Department, and your respectable sheriff offices. The reason we do that for some reason, right? We get a lot of intel from them. We get a lot of information, high level threats, understanding what those threat vectors are. But probably most importantly, that, push that Josh and I have been doing, Josh Clark, is that, we have security events on our system. We have thefts, let's call it that. We're working with the local authorities directly to, I'll say, catch those people. That's what we're trying to do. Like in the past, I would say, I don't know if we necessarily, if we forget about it as a company, the local authorities are they're going to forget about it. So we are working closely with them, and we made huge strides this year on getting active arrests, and we continue to do that. And we're still looking at, I'll say, avenues we can take to broadcast our message in a way that, from a public and awareness standpoint, that we want to catch these. It's impacting us financially significantly. It's impacting. There's direct outages related to these incidents. There's no doubt about it. There's been numerous ones this year. So we are just working I'll say we're working very closely with the local authorities in that space. So I just wanted to touch on that. Next slide, information security. Like I said, it also includes cybersecurity practice to protect our technology assets and data, including customer data from misuse or disclosure. Ongoing controls. Few listed are focused around data governance and data classification framework, including roles and responsibilities. The key piece of this framework and ongoing controls is our identity and access management program, which continues to focus on access control to both systems and data. That's led by Dale Rushoff in the back here. That's a program that's maturing, but in general, high level, what it is, we need to understand who has access to what, and understand should they have access to those systems and or data. That's just the foundation of it. And I'll describe it a little bit on what we've done here in later slides. A big piece this year that I pushed is that bottom bullet, security awareness. And Kate alluded to it. Yes, we have teams throughout. I have teams. I have cyber physical security teams, dedicated teams, operational teams, intel teams. We have OT operational technology security teams out in the field. We have teams that are looking at customer data privacy on the customer side. But security awareness to employees, frontline employees, to leaders, to executives, to the board, understanding what security awareness is around what's the threat that's coming in that everybody touches. Emails, phishing emails, how do we mitigate that risk and understanding what that looks like? That's been a huge push from a training perspective, discussing, and because they are our A line of defense. We do have a lot of technology in place to mitigate the risk of nefarious emails coming in. We block, I think the number somewhere around this year is 4 million emails that coming in. There's still some that get through. We have a hockey reference. We have a 5-hole sometimes they do get through. that line of defense is the individual then understanding and recognizing what that email looks like and what a phishing email looks like. It can happen. It does happen. We've had many circumstances this year. We've had employees report, I'll say, bad emails that I've gotten through. So yes, are we close? But security, yes, there is some risk there, and we're doing everything we can. But security is in the mindset of employees. They are helping us in this space, and that is important in any organization. Next, customer privacy, which includes process and practice to protect customer privacy and the protection of customer owner information, including how we collect and share customer information to third parties within our organization. Regarding ongoing controls, there's a data sharing policy that outlines customer privacy, while our overall OPPD identity theft prevention program outlines the training needs to all employees with access to customer information, including regular assessments on data sharing and security, and who has access to what. Go back to our identity and access management. We also, just to note, related to, I'll say, fraudulent related trends or activities, we do work with customers. We work with our customer owners. We're putting out notifications related to what fraudulent trends that are out there. That's basically utilizing our brand, our name to impact customers. That's a close, I'll say, relationship and notification process that we do, that we transmit broadly or work with individual customers on. Next slide. Records management. Records management department here at OPPD includes structured identification, classification, secure storage, controlled access and retrieval, real-time tracking and compliant destruction or permanent preservation of records in alignment with organizational policies and regulatory requirements. Controls in that space, including supporting the business and identifying documents, physical storage of documents, and digital transition of those documents. OPPD's been around a while. We have a lot of documents, a lot of paper documents. From everything that I know of, Fort Calhoun, all the way down to our control center, out to our centers. A lot of paper documents that records management gets involved with that are sitting around. How do we get those? How do we store those? And then how do we kind of transition those to I'll say a digital document? That of course, then there's Fort Calhoun on the bottom there. Fort Calhoun still, we're going through the decommissioning process. There's still regulatory, I'll say NRC regulations around records management. The records management team gets involved in regulatory compliance, long-term preservation, and secure information lifecycle of all nuclear related documents still. Compliance, my favorite. Everybody's favorite, right? Compliance related to SD12, ensuring we comply with contractual, legal, and industry requirements across technology domains. That's what we're talking about in this space. It's related to technology. We partner with our legal counsel, OPPD experts, peer utilities for advice from a legal and compliance perspective in the areas of security and privacy. Ongoing controls includes the reviewing of contracts, confirming security and privacy measures are included to protect OPPD systems, OPPD data, and associated customer data. And in general, let's just say, for example, what does that mean? We did a lot with AMI. We all know AMI. We got onboarding a lot of system that has a lot of customer information. As we onboarded those contracts, working with those vendors, we reviewed their requirements related to ensure that things like security around customer data is embedded and falls in line with our requirements around what security should look like. Some cases we host that data. In other cases of recent, especially, and I'll say in some of the new AMI domains, that customer sits in the cloud. How is the vendor? How are they managing that security, making that transparent to us and reviewing the contract? We review it from a legal perspective, a legal lens, and then also from a technical lens. And so that's just an ongoing control that we have in place. From an audit perspective, we utilize our internal auditing teams, obviously internal here that goes through an auditing process to take a look at how technology is meeting compliance with a variety of policies and standards. From an external perspective, we host peer reviews over the years. And we bring in other utilities to review our security program in general. And of course, we have our NERC auditors. And so we provide data to NERC. We do that. We do what we call self-certification on on a variety of standards throughout on an annual basis. And then once every 3 years, NERC comes in to our property to review all NERC standards and a subset of those standards. And I know Mr. Lanahan has a lot of standards from the opposite planning standpoint, but there is security related standards, which are onerous and extensive. All right, let's do some highlights and accomplishments. I'm just going to do some highlight a few of these. I thought at least what's listed was what we call a NERC SIP 14 standard, and that standard identifies, I'll say, facilities that meet a certain threshold for that require additional security. And that is done from a study perspective and how it impacts the grid. That's a program. We've completed, we have basically, I'll say, 3 assets in that space. And one of those assets from a physical security perspective was completed this year. We have a few assets remaining, yet, like I said, we may have additional assets on top of that moving forward in this space. And those will be addressed here in the following years. But that was a big win in getting one of those assets behind us from I'll say, a security implementation perspective. In the information security space, significant steps were completed regarding the establishment of our data governance program, including the steering committee, with respective directors from across the organization, including myself, Matt Hardebeck in the back, our operations, Chris Anglin, just to understand and the governance and oversight of kind of this, I'll say, data security related challenges in front of us and how we're managing that security. Another aspect, and I alluded to it, is our identity and access management program, and a tool that's used to, I'll say, to integrate with existing platforms and systems that allows us to see who has access to what. And then, so that moved forward this year. We then did a thorough review of throughout the organization. All leaders reviewed their people and who and what their people had access to, and then approved and or denied access to those systems. So we're getting a better understanding and feel for who has access to what and to what level, and manage that accordingly with tools in place. From a customer privacy perspective, and per our program, employee training and customer data protection was completed. And additionally, with the migration to our OPPD, our new OPPD, my OPPD account and system that we recently migrated to, additional security measures were put in place or have been, are embedded with that new platform that allows for additional security that really the customer's been asking for. Customers have requested on our previous platform, requested us more complex, I'll say, password capabilities, which the old system did not have, and what we call multi-factor authentication, meaning that, hey, as a customer, I want my data protected. I want my account protected. Just like what you're seeing, there may be a biometric additional on top of your username and password. You may get a PIN or may get a text that includes a PIN that gets you into your account. That's now embedded into this new customer platform. Next slide. Records management. I want to recognize there was a big technology lift in this space this year, and it was an enterprise priority project. Was transformed to what we call our Oracle Web Center, which is our record management platform. And we transformed it and moved it from into I'll say a supported lifecycle management supported tool. And now it's legally defendable, compliant, and scalable solution for long-term digital archive storage. That was a huge lift this year. And my last comment will be related to compliance, because I do need to recognize that we did, as I alluded to, NERC comes in, our regulatory authority. They have a delegate called the Midwest Reliability Organization. They come in and audit us to NERC standards. They come in on site every 3 years. I think many of us know that. They did a thorough. They take a look at a myriad of standards, but from the operations and planning perspective, and Mr. Lanahan, manages that. But this is security. That's the SIP standards. They come in and do a thorough review. It's really difficult to describe just how much data provided, how many people power around, I'll say, that aspect of supporting that level of effort. And that it's just very onerous. And I'll just say at a high level, we came through it in an excellent manner. We have very little risk identified from a compliance perspective. My teams and the operational technology compliance team were Scott Foch and the NERC compliance director, Scott Etnoyer, on really submitting the data and understanding our risk related to what, related to what findings they have, and all of them. And there's just one, I believe, that really is, and I'll say a very low risk profile that we're managing with the MRO and NERC. So that was a huge effort this year, and really a great outcome. With that, I'll end with our recommendation, and I'll answer any questions. Absolutely.
So do we rely on a third party for maintaining or helping us with cybersecurity aspects of our SCADA systems?
So our SCADA systems, in general, our vendor is a huge, first of all, when I talk about the vendor and the SCADA system, that system is what I call our crown jewel, right? It is the highest system that it truly controls the entire grid. We work very closely with our vendor around, and they are responsible for, I'll say, a myriad, all security related aspects of their system, and knowing and identify security, I'll say, vulnerabilities and giving them to us. In general, we don't have to work much with the vendor in that space. We do have consultants that help us support the system itself, but it's really about the relationship with the vendor that really moves moves the ball in that space.
And I assume through the O&M programs, we're upgrading our industrial control systems as appropriate for cybersecurity concerns.
Yes.
Yeah, absolutely. Both on I'll say both on the generation side. So I'll say from a digital control system out in the plants, there's been several life cycle management projects over the last couple of years in both in Sarpy County and in North Omaha, just to replace those systems from a life cycle management standpoint. And then on the grid side, and like I said, those are our crown jewels. We really go through a complete refresh every 3 years from a software perspective, and a hardware perspective is about 5 to 6. So yes, absolutely.
Do you see any risks as we're putting in smart metering systems, risks that creates a doorway into our broader system, cybersecurity?
Yeah, great question. We did a lot of research and work with the vendors and vetted the vendors and the vendor of our choice in this space. And it is, I'll say the transport of the data is obviously a critical step on getting the data back to us and then into what is a hosted solution. So we took a really good look at how that's done, and I'll just say at a high level, it's done through encryption and under our control on our systems. So those systems aren't internet facing, so we completely avoid that. It is encrypted through the air or on our fiber system, but its whole path is encrypted, and that's a key piece. I think in AMI systems of the past didn't necessarily have that security. So I mean, it's another reason why it's that just where we're at with kind of the timing of a variety of things, the maturity of the meter, the smarts of the meter, plus now the maturity of the systems and the security around them is all matured. And we're taking advantage of that.
You might talk about how distribution assets are separate from bulk electric too, like there's a delineation.
Yeah, distribution, I'll say, as Troy asked, is distribution assets aren't deemed as, I'll say, bulk electric system assets and don't fall under the SIP program. But in most cases, regardless, we still secure them in a very similar or same manner as we do with other assets. It's just compliance aspect of it is that it's just the paperwork behind the security posture. Does that get into your question?
Yeah, for the most part. I mean, I guess just to dive down deeper, somebody can't jump on the meter and then end up in our EMS system and shut down the grid, right? There's not a connected point between those two.
Correct. Those are separate, I'll say completely separate paths in how we manage that data on getting what you said, SCADA data versus meter data, completely separate, logically and physically both.
Are we required to have a cybersecurity maturity model certification, CMMC, for our connection to operators?
That's a good question, and that, I'll just say that in the past, no. But I think I'll just say, I know of additional discussion that's recently been happening around that, and we are gonna be actively looking into that. Things are evolving and changing. I think that's been a common theme throughout the morning. And that's a space that is evolving and changing, and it has landed on my radar literally just of late.
A lot of the controls you described today are similar to what's required there, but
Yes.
Contract we have with OPPD will require a CMMC level 1 certificate, which is self-certified. You guys should be able to do it.
Exactly.
Easily, but if you have to do a level 2, it's not comfortable experience.
Oh, that's correct. I think that's, and we've discussed that in the past, and that's really, what has changed and what level are we at? So that is good.
So
That is
maybe
good.
for next year, you'll be able to kind of come back.
I think we'll rehash that topic exactly. That would either be I'll say a control or a new control or something that's accomplishment, hopefully.
Yeah, that was a good topic. This has been a ball, they continue to look at different aspects of it, and then the emphasis coming. It's been a scrum work internally to prepare for that. It's coordination. Say this has been a highly discussed topic for years.
Anything else?
Something a little orthodox, but we usually don't have a chance to introduce new members of the team. She gave me for doing this, but I want to recognize Kelly Anderson in the back. Manager of Records Management, which we talked about in these. She's doing a fantastic job with your team. So I want to recognize you and thank you for the work you're doing. Not that anybody else is not recognizable, but I think Kelly, we don't get to see you very often. So thank you for the work.
The kudos goes to you.
Yeah.
Your investment into the intrinsic work that we do. So thank you all.
All right, thank you.
Thank you.
With respect to how far behind we are, let's be back at 1:35. All right, everybody, welcome back. We're going to start the second half of the day with the Great Plains New Nuclear Consortium, CEO Fernandez.
Thank you, Chair Core. I'm going to have Scott Edom is going to do the bulk of the presentation. I'm very excited to share this, and this is a conversation, a topic that I've been sharing with the board for a few months. And of course, this doesn't imply any approval of any kind, but in our pursuit for expanding our generation portfolio, something that aligns with our net zero carbon by 2050 goals, we've utilities, so the Nebraska Public Power District, Lincoln Electric System, the Grand River Dam Authority, and OPPD agreed to join together in a memorandum of understanding, forming a consortium. And this is basically the idea is we're stronger together. And as we're contemplating investments in new nuclear technology in the future, we decided to join forces, and that way attract the attention of large players, large manufacturers to come in and talk to us in Nebraska. Again, this is one of many phases of this journey, but I think this signals that we are serious about looking at all technology in front of us, and this is a good way for us to join other utilities and look into this new technology too. So but I'm going to have Scott Edom present this for us.
Okay, thanks, Javier. Next slide. I'm really excited to present this to you and talk through it. So as Javier alluded to, the Great Plains New Nuclear Consortium is basically a partnership to progress new nuclear generation in Nebraska. The objectives within Southwest Power Pool are to collaborate, share resources, investigate and develop between 1,000 and 2,000 megawatts of new nuclear generation resources. So just to level set, Fort Calhoun Station, which OPPD used to own and operate, was about 480 megawatts. Cooper Nuclear Station, which is the only remaining commercial operating nuclear power plant in Nebraska, is about 830 megawatts net. When you hear advanced nuclear or what was built at Vogtle Units 3 and 4 in Georgia, those are about 1,100 megawatts. And small modular reactors are normally considered between 50 and 350 megawatts. So you can see the objectives of the consortium are again to research between 1,000 and 2,000. I just wanted to level set with what those existing power plants look like. So as Javier indicated, the consortium currently consists of 4 different utilities within SPP. They are the 4 largest public power utilities. So again, our partners within the state, Nebraska Public Power and Lincoln Electric, as well as the Grand River Dam Authority, which is headquartered in Tulsa, Oklahoma. And again, we do have non-disclosure agreements and a memorandum of understanding in place that frames those collaborative activities that we're going to be undertaking as we move forward. Next slide, please. So we did make a formal announcement the week of December 1st. All the utilities made that same and coordinated in advance. Very exciting times to make that and get it out. So all understood. We have started per se. Nebraska Public Power did receive Nebraska legislative funding to do a siting study for small modular reactors. They have been conducting that. What's shown on the slide here is a graphic showing the communities where phase 2 of the study has been reviewed. There were actually 32 original sites throughout the state. These were the 16 that made it into phase 2. And again, the consortium will leverage that siting studies result to get a good start. Again, these are not definitive, and there will be additional results narrowing the review down to approximately 4 sites in Q1 of 2026. What we'll be working on together as a team is technology reviews, economic feasibilities, project structures, and what some potential cost sharing models would look like. There's a very small OPPD team working on right now. Some of us went to those communities as part of the public outreach to answer questions on nuclear power and what the future could hold. And we plan to give the board and the public updates in the future as the consortium efforts progress. So that's what I have for you. Pending questions?
So I'm under the impression that small modular reactors wouldn't necessarily need a water source. And I see that most of these sites are along a river. Am I thinking about that? Wouldn't need a water source, but is there a reason that?
So the nice definitive answer is it depends.
Okay.
So depending on the wide range and the technology of the reactor, it could use much less water than what current commercial nuclear plants use. But others, even though they're smaller in size, could employ a water source like a river or a lake per se to help cool the process. So it would depend on what the technology is.
Which is part of the feasibility evaluation.
Yep, we'll be looking at what makes the most sense.
Thank you.
Yes.
So I think this is great. Why doing a consortium do we not just stick to Nebraska public power entities to, because we have Oklahoma? So why didn't we just keep it within the state, rely on both the public power within the state coupled with the state legislature to try to position ourselves?
So the way we accomplished that was by clearly stating that this potential future reactor would be sited in Nebraska. The reason why we extended the offer to extend the participation to an Oklahoma public power district is because the 4 of us are the 4 largest public power utilities within SPP. So those are 2 very important elements where we participate in the same market. We have the same governance and ownership structure. We have the same incentives, generally speaking. So that's why we extended that. There is strength in numbers, strength in geographic and political strength as well. So some of those were the considerations that we took into account when. But clearly, I think what is in the memorandum is that the idea is that if this moves forward, depending on all the different phases that we go through, this is a Nebraska facility where we would, depending on the ownership, depending on how we structure these, again, many questions to be answered, then a utility like GRDA could participate and get the benefits because it's in the same SPP market.
All right, anybody else?
Thank you.
Thank you. I will pass it on to Mr. Foch.
Yes, so the next topic is a modification of resolution number 6518 regarding North Omaha station operations. I believe that our intention for this conversation is to open it up for board members for questions based upon prior discussion, and then take a look at a resolution, red line to the resolution that the public has seen, and to begin conversations there. So I will turn it back over to you, Director, for open it up for board member questions.
Yes, thank you. Is there anybody that wants to start?
Want to, or?
No.
Okay.
I think Director Wagner is going to start.
Okay. So, we've certainly heard a lot of information that kind of points to reliability being one of our main aims here. And we've been provided information that kind of articulate different low voltage occurrences around North Omaha specifically, and that's been escalating over time. And so I'm wondering what level are low voltage alarms being triggered? And how that compares to planning standards for sufficient voltage levels.
Chris, I'm gonna have to phone a friend here.
Good afternoon. My name is Chris Engel, and I'm the Director of Electric Grid Operations. The operating range is different than the planning range. Dan can articulate where the planning ranges are, but they're dictated by NERC standards, those types of things. Looking at running studies that identify when you talk violation, you're talking about collapse, those types of things. And so the way we operate the transmission grid is with a range that gives us resiliency, gives us the ability to take plant outages, transmission level outages, that type of thing. And so that range is typically. I'm sorry.
We have people in the back, and by their official expression, I guess you're having a hard time hearing. So can you speak up a little bit just so that everyone
Absolutely
understands? Thank
you. So our operating range is, from a voltage standpoint, from an operation standpoint, entirely independent of what the planning range is. Typically goes up to nominal or below nominal. I'll just give you the numbers. 345, we're talking right at just under 345 to I forget what the range is on the high side. Typical on the 161 side, we're operating down to 161, that type of thing. So I guess the ranges that we're operating at, again, give us resiliency, give us the ability to operate through operational conditions, many contingencies deep, as opposed to the N-2 and the ranges that the planning study will operate.
And I think the reason you do that is when voltage starts to move, I believe it can move pretty quickly. And you have to have time to make changes on the system to be able to respond to that. If your ranges were at the failure point, you wouldn't have the time to react.
That's exactly right.
So help me understand maybe the margin that's there and what the ideal margin is.
Our operators will potentially take action at that lower end of the range, as was indicated in the reliability information. We're monitoring that lower end of the range because depending on a number of different factors, where you are in the day, where you are in the load cycle, what the wind forecast might be doing, a lot of other factors like that. We may be asking generators to run. We may be switching capacitor banks on. We may be taking a lot of different grid actions based upon the fact that we're near or at that lower operating range.
Yeah.
So these are at the transmission level, right?
That's correct.
Okay.
Yes.
And so if you're saying 345, so help me, like my reading on this suggests that like that maybe we needed to think about this as a percentage. So when you say 345, is that essentially 100%? And is there like a 103 targets or 103% over that 345 number? I think for me, the question is really like, we've named that voltage alarms are happening more frequently, but I don't know if where those alarms are happening, is that changing over time? What was it last year before, year prior? Is it changing? Who directs those?
Those ranges do not change.
Okay. And there, at what number do they trigger? Like
Typically, we're operating at about 1.03 of nominal, so 3% above nominal. And so they will trigger as you're approaching nominal or lower. Then,
so the 1.03 is usually when I just trying to put in my head, when I hear trigger, what you're saying is that 103 or lower, like once it crosses 103 is when it kicks in. Right?
No, I'm sorry. We're operating to maintain 103.
No,
it'll trigger at 1 or lower. 1.0 per unit or nominal voltage.
Got it. Okay.
So your goal is to try to keep it slightly above.
Correct.
Right.
Absolutely.
Right.
And the reason that's important is, to your point, we haven't changed that over time. So this escalation of alarms is an indicator of eroding operating margin, which is why we bring it forward.
So in terms of thank you for naming a number. One is where we want to be, and that's the 1.0, right? And what, if we look at historical information or just like from a grid reliability standpoint, I'm curious about where the low end of that threshold is, where things start to go sideways. Like what's the number that we absolutely have to avoid? Is it?
Well, as I said, as we approach 1.0, as we approach nominal, we'll start taking action.
Yeah.
There's a number of different ways to identify operational scenarios that would be dire reliability issues or violations, as Dan's studies point out. And that's where you start to get into post-contingency studies.
Okay.
When we're studying a contingency away or a failure away, when we identify that we're below the thresholds that would be violations, we're also taking action based upon those things as well. What we're talking about here are real-time indications that we're losing margin. We also operate in a post-contingency scenario.
Okay. Have we seen any change in these figures post Standing Bear coming on? Has that had an effect?
That was very recent.
Right.
So it's tough to say, but we do know that Standing Bear has had runs. Just last week, I think they had all 9 Standing Bear units on. And those are real-time unit commitments as well. So yes, we see that there will be leverage for voltage support or congestion support, whatever the case may be. Reliability.
So since they've come on, the load levels haven't been extremely high.
That's true.
So it's just to highlight, I think we see more instances of this as load gets into the higher range, but you correct me if I'm not correct.
You're right. It's very load dependent. It also has to do with how dynamic the winds might be, depending upon how you fit your wind forecasts and what the resource plan, SPP resource plan was around that. You may see more congestion. You may see more voltage issues based upon inaccuracies around variable energy resources.
Now, Standing Bear Lake is obviously geographically closer to North Omaha Station, but maybe can you comment? Turtle Creek Station came online earlier in the year, so we've had a little bit more runtime with that.
Yes.
Did you or your team, experience a significant improvement when that unit came online to help with this voltage issue? Did it stay the same? Can you talk to us a little bit?
There are definite operational benefits to having Turtle Creek online. They're larger units than the Standing Bear units. They're within the metro load pocket, so we definitely see benefit from having Turtle Creek available. They start quickly, they're able to ramp fast. That's exactly the type of unit that you need to be able to provide reliability support.
So if that is the case, and then if Standing Bear has a similar, we have a similar experience with Standing Bear, then that should solve the problem. I think maybe that's where you're going, right?
Yeah.
They are available. Yes, that is the way to do it. These are relatively small units at the standing bear level, and so they don't have quite the impact that the Turtle Creek units do because of their relative size.
So what you shared with me, right, was during this last summer, you needed both Turtle Creek and the North Omaha units during the hot periods of summer to be able to control the voltage adequately.
That's correct. The question was, were they impactful? Yes, they are impactful. Solve the issue. No, they don't. Our
Sorry,
experience has been this summer that they don't.
Oh, I want to throw it on that. You said this summer, when did Turtle Creek came online?
June 17th.
June 17th, so we had it during the peak season. Okay.
So they help, but they don't solve the problem. The proof that you're trying to make here is that technically Turtle Creek Station would have replaced North Omaha Station, but it didn't. They were both called into generation to solve for voltage issues when load was high this past summer. That's what I'm.
Voltage, thermal, I guess the point is, what I hear from our operating folks is, unlike in the past where you could easily control things with just North Omaha on, you had to have the other option with Turtle Creek on, and both facilities were on at the same time to be able to control what was going on.
That's right. The Turtle Creek units.
Transmission outages and things. I mean, you have to, there's things that are always moving around on the grid, which don't necessarily line up with normal planning standards. And, Dan can speak more about the planning standards side where it's kind of minimalist, but we see configurations on the grid which are much different than maybe what the planning models that NERC requires you to do studies on.
I think the conversation has been good in terms of rounding out the totality of issues that we're wrestling with voltage, wrestling with thermal flows in the load pocket, wrestling with resource adequacy. And so it's the totality of those system attributes where this facility becomes very important. And if there was an interest in Troy's question, I believe the NERC planning standards is N-2, and in real-time operations, our operators are often dealing with situations that are much more beyond N-2. And we can explain that if we'd like, but Dan, I wanted to make sure we get that correct.
I would love for you to expand a little bit of that N-2. What does that mean? Like, and if you're experiencing N-8, just in layman's terms, tell me what that means.
Yeah, I can jump in. So Dan Lenahan, Senior Director of Integrated System Planning. So I've kind of gone around, but to Brad's point, I think when we talked about in the November open session, there was multiple grid reliability issues we're trying to solve, one of which is voltage. I think we talked about the thermal capacity of the transmission lines being another one. We talked about, do we have enough energy supply to serve a surging demand? So it sounds like we're starting off by talking about the voltage issues that were highlighted at the meeting last month. So operations, which is Chris is what's speaking to, is they're getting signals of a degrading lower voltage on our transmission system, and tried to illustrate that through some of the data that was presented last month. I think the question is in the planning realm, which is kind of what I oversee, is when we try and plan the system for these different situations to prevent low voltage issues, we look at certain prescribed regulatory reliability requirements on how to simulate forced outages on the system. And that's regulated by an entity called NERC, federal entity called NERC, North American Electric Reliability Council, that says, here's how you should stress test your system to make sure you can reliably operate it in real time. And when Brad says N-2, that means generally you need to plan the system to be able to take two things out, and you can't have any loss of load or outages on your system, bulk outages on the transmission system.
Two things such
Two
as
things. And in operations, just to kind of, when you hear N-8, when we're going through this really big expansion period, a lot of stuff going on in the system, there's typically multiple things out of service, 8 things, 8 transmission lines, 5 generators. There's just a lot of stuff going on. The general public doesn't see that because of the redundancy built into the transmission system to keep electrons flowing. So what we're trying to say is the margin on the system, when we take all that stuff out to do work, to do maintenance, to do expansion, the margin on the system is getting dramatically smaller. As the system is changing so fast, our federal regulator called out, like, the system in the US is changing extremely fast. And while we're changing, we need to make sure we have proper operating margin to give the tools to the operators to keep the lights on. And I think the voltage highlight that was done at the open session last month, which just, this is one of multiple indicators the operations group is seeing that's saying, hey, we're concerned about this. And we want to pass that on to the decision makers to say, this is what's going on our system. We're seeing a degradation in voltage, which is one of the many things that helps keep the lights on. So I think that's kind of the perspective that the operations side was trying to offer into this conversation from last month.
Chris, I think the reciprocating conversation between you and Mr. Linehan has been high quality and comes at a critical time. I think part of the question was, what types of contingency events do we go through? So I want to give an example. Not all N-2s are the same. So an N-2 in this particular example could be one 18 megawatt RICE unit out at Standing Bear and one 161 line out. That might be an illustrative example of N-2, where you have two electrical asset facilities that are down and can't perform operations. Here's another example of N-2. You have two large coal shafts down for 1,200 megawatts. So not all the N- situations are the same. And what can happen is, let's just say you have N-2 with two coal facilities, NC1 and NC2, they're both off. One has a problem with the coal conveyor belt, the other has a problem with the GSU. They're both gone. And then you lose a 345. And then you have another service disruption. And so what the quality of the conversation has been between ops and planning is, how many of these resilient events can we absorb predictably and still get the right system outcome? And what's happening is we're getting more alerts and alarms, whatever we want to call them, that demand the attention of the operators to solve a system problem. While those thresholds are not changing, the frequency is increasing. And I think that's the point that we're trying to make come alive to the board. So I'm not in operations. So if I can, I just want to yield back to the ops staff and just make sure that that's being properly discussed.
100%. And N-2 is, that's a good day. Let's just be honest. Like you had said, with the system expansion going on, with proactive programs related to maintenance, NERC compliance activities that require that we do maintenance to certain system elements. We commonly see many contingencies in the operations world, and we see the impacts of that.
Is this unique to OPPD, or are you saying?
Not unique to OPPD, absolutely not.
It's consistent across the board.
Consistent across utilities, yeah.
So NERC has highlighted this for the United States grid, right? And Southwest Power Pool has highlighted within their footprint some of the issues that are going on. So it's a national phenomenon. There are definitely different parts of the United States that are further along on this than others, but it's not just an OPPD Omaha conversation.
So this is an attempt to be in compliance with regulations. Are we currently, with any of these voltage events, out of compliance with NERC standards? Thanks.
Brad, coming back to your example, you all have taught me really well about how we think about risk, and tell me if I'm wrong, what's a measure likelihood and severity, right? How severe might X event be, and how likely is it to happen? I get the severity, right? Like that's the thing. Sure. Part of what I'm trying to understand here is increased frequency of alarms is a data point, but it doesn't tell me likelihood. And I think that's the piece that I'm trying to understand, is like the trend is in a particular direction, but it doesn't necessarily tell me. And I get some of the narrative around where there's less space for us, right? But like, I don't help me understand how I need to be thinking about likelihood in this particular instance.
My perspective on this, and there may be some regulator guidance, is if your frequency is increasing, your frequency of events, it would be reasonable from my perspective to conclude that the likelihood of that type of thing happening at problematic levels would also be increasing, if I follow.
No, yeah, no disagreement there. Likelihood is going up. I just don't know how high the likelihood is.
Yeah, so in other words, if we're in compliance, right, okay, how bad does it need to get before we're out of compliance? And then getting out of compliance is not just a fine, it's potentially having cascading outages. Do we have 10 years to tolerate this degradation? Do we have a year? I think that's a little bit of how close are we to your comfort as an operator, not necessarily from a planning perspective. Is that fair?
Yeah, that's right.
So with, I'm sorry.
Go ahead.
From the other comment, there's multiple issues we're trying to solve, voltage and thermal, both could be addressed by this solution. Also mentioned was supply for surging demand. If we are attempting to solve voltage and thermal stability on the grid, and then we extend North Omaha Station lined with surging demand, doesn't that just right away erode back the margin that we're to build on maintaining the station?
Margin with generation, granted, serve capacity, also provide system stability through rotating machinery. It provides frequency stability. It provides the ability to ride through. And what you see, and maybe to address both of your questions, these are complex issues. And so what you do is you look to industry, you look to guidance from SPP, you look to experiences from other utilities, like the utility members of SPP that have gone through localized transmission events that have actually enacted rolling blackouts to avoid wider spread of events, other RTOs that are going through these things. They're seeing the same things that we are seeing. And in some cases, they got to a point to where they weren't able to recover without intentional outage to their customers. That's why when my grid operators, as I've shared with you, that hit the button that actually enacted the rolling blackouts in 2021 that we had to hear. Never done it before and haven't done it since, fortunately. That's why they tell me about these things, because they remember what it feels like when we had to do that. That generation capacity can provide more than just what you're talking about, which is feeding customers. There are also inherent attributes that help us from a stability standpoint.
Sure. Are there other ways to provide that stability to the grid that would not be from extension of existing operating generating station?
There are other tools that you can utilize. It gets into timelines. It gets into how quickly you can implement those things.
Can you just list a few examples of other things we could do that would not be an extension of current operations in North Omaha that would address the
North Omaha Station?
And I think that's more of a planning.
Yeah, I think that's so.
Didn't mean to look at the wrong one.
Chris is more talking about kind of their operational experience kind of through today. And then, so going forward, the question is, what can we do to help solve the voltage issues, the issues, the resource adequacy issues? I think in the open session in November, we had a slide that talked about a couple 100 miles of new transmission we're building and other new generating power plants we're in the process of building. All that will definitely help.
Sure. Synchronous condensers?
Synchronous condensers, looking at just voltage support devices, yes.
Sure.
That is something that can support that.
Sure. And when was the last time we did a comprehensive system planning model activity? Reports have indicated that was in 23 leading to the near-term generation. Is that correct?
So we're going to launch into what we're calling our integrated system plan in 2026, which is the first time we've truly integrated generation planning, transmission planning, distribution planning, and customer solutions under one umbrella. But the last time we did a integrated resource planning formal activity, I think was in 2021, and then was updated in 2023 as part of what we call our near-term generation, which also included a transmission system evaluation as part of that as well.
Yeah. And did we evaluate any of those other non-generation options for voltage and thermal maintenance on the system at the time of the 22/23 resource planning activities?
We considered a lot of different options to solve a lot of different issues. So yeah, that would have been included in some kind of evaluation at some level, if I'm recalling back.
But then since that time, we haven't done additional modeling to project what the impacts of the operating Turtle Creek, Standing Bear, Platteview stations would be. How the positive impacts those would have relative to the detrimental impacts of taking some generation offline. Is that right?
So we've done planning analyses with the new Turtle Creek and Standing Bear Lake Station, which do support voltage and thermal import capability. So they do have some beneficial impact. I think and this is a difficult thing to kind of summarize, but what we're seeing is the planning realm of how we do these type of simulations is not catching what the operators are seeing in real time really well. And our federal regulator, who kind of prescribes the standards for how you look at these kind of things from a planning and operating standpoint, their number one risk to grid reliability is the system is changing so fast. The planners can't keep up with it and the operators can barely operate to it. They need margin while we're going through this huge energy transition in the country. And that's the risk we're trying to portray. So.
And the time to fix those things are double what they were back in 2019.
Times for equipment or fixes are extending farther out. Yes, correct.
So we've done planning level analysis of the impacts of the currently operating facilities that were previously approved in 2019. Do we use planning level analysis to recommend resource changes on the grid, or have we at any time in the past without a comprehensive either integrated resource plan or internet systems plan?
We do unless we get ops feedback. We do
Okay.
unless we get feedback from operations and issues.
Are there any examples of resource allocation changes based on ops feedback from planning level?
Welcome correction from the group, but not at this level of voltage. Usually it would be at a lower level, circuit level, where the ops team is having an issue. They can't isolate, they can't do work, they can't serve a new customer. And so we would deploy a solution there that doesn't necessarily need a model lens to build a piece of infrastructure. We would most likely look at perspective based on what we were talking about doing to make sure we took that lens at the problem. But that would be an example when we would.
I think specifically, if I remember right, you keep me honest with this.
Sure.
The selection of reciprocating engines was a feed. Operations group said, hey, I need access to power quicker than what I have with normal CTs in some cases. And so we had the CTs, which we've actually found to be much quicker than maybe we originally thought. But that's how the reciprocating engines came into the portfolio, is for that speed to be able to get into the system.
And we talked about at that point in time, some of you may recall the concentration of resources and how that's changing on the grid. And how do we ensure we get the operators the correct tools they need from a speed and ramp perspective to be able to deal with the modern grid that we were going into in future years, but we weren't at that time.
So I guess in the resource planning we did in 23 leading into near-term generation, that led to a recommendation of board approval of several types of new resources, including energy storage.
Yeah.
And I recall at the time, there was explicit discussion that the energy storage should be optimized and located within the urban core to provide maximum benefits, including some of the voltage and other stability to the grid. That's what I remember discussing in 23 when we approved near-term generation, including 125 megawatts of storage, specifically referencing 75 megawatts of potential storage located at North Omaha Station.
Yeah.
Since then, we've had a SD9 report that highlighted that the Pierce County project with the 420 megawatts of solar and 120 megawatts of storage would satisfy the 125 megawatts that was indicated in the SD9 checklist for new resources. But does that provide the same type of voltage stability in the urban core as was modeled in the 23 near-term generation planning exercise?
I think generally a battery in Pierce County would operate the same way a battery in North Omaha would, if that's the nature of your question.
Yeah.
I think one of the things that we're also wrestling with is the voltage is not the only issue. And so when it comes to a duration limited asset, it gives us just concern around whether or not that would solve the totality of the issues the way they need to be solved. But you're correctly recalling, we had a large conversation around storage and what can and can't be done and areas of the system it might be.
And just to add to this, what would charging a battery do in the pocket that already has?
Yeah, so a battery comparable to the size of, say, North Omaha Station Units 1, 2, and 3 would be the equivalent to one of our probably largest industrial customers, and charging or creating that type of large load in the system in that area would pull down the system more.
During charging.
During charging, yes.
But I guess,
During discharging, it has the effect of
Yes.
having the beneficial impact.
Okay.
Yeah.
and we have talked about the plus and minus impact from energy storage, because you do have to recharge it in order for it to be available again. It has a different kind of cost to the system. So yeah, I recall that. But during operations, a battery would be able to provide the kind of voltage stability that we've been talking about at and around North Omaha Station.
Yes, batteries do have capability to provide that voltage support on the system. Correct.
So if I could throw on that for a minute. When we talk about, so I realize that these are like, we're trying to solve all the things. But it's helpful for me to take one of the now because I'm simply. When we describe the low voltage events as an example, what's the typical duration of those? Do they last minutes, hours, days?
Well, Chris, I don't know if you can speak to all the durations. It was over 3,000 events just this year. Does that sound right? So like when you get in these events though, and it's from the summer period, would you say that they're like this, or is it something that you're having to work through for a while where you're controlling voltage?
They're not seconds, they're not minutes. Those are foot-long conditions to where, again, depending upon where you are on the load day, those types of things, you may be taking action on them. Depending on the severity, depending on where.
Chris, can you just remind me,
I'm sorry.
pick up a little.
Thank you. These are prolonged duration conditions we're talking about here very typically.
4+ hours, if not longer, over the course of.
They can be.
What I mean, at the risk of stating the obvious, I'm trying to your point, if we, not that this is the solution, I'm trying to understand, if a battery were there to solve some of the voltage issues in the moment, discharge it, stabilizes the system. What I'm trying to understand is like, how far does that get us? And to Eric's point, I can't imagine that if we were in a low voltage situation that we would then turn around, well, we got to charge the battery back up, thereby drawing the system back down. We would sit on it, right? We wouldn't charge it immediately. We wait until the system stabilizes before we recharge it.
Can in and of itself be a challenge. When you think about the most extreme conditions we've gone through, whether they be extreme cold or whether they be extreme warmth, those are not 4-hour situations. Those aren't 4-hour events either. They can be 5 and 6 day events. And so that's when it becomes very challenging, when your margin is dangerously thin during dangerous climate conditions. And you've got to make that choice. When are you going to trigger that resource? How are you going to utilize it versus not having it available until the system is stable and has enough margin to be able to charge it?
A perspective I would offer is, this conversation, I think from the planner's perspective, or at least from my perspective, is not batteries are good or bad. It's each asset has an inherent limitation, and how do we deploy the right concentration of assets out onto the system to maintain the requirements that we have. And the reason I say that is because we're having a hypothetical, a good conversation, but a hypothetical conversation around the types of things a storage asset may or may not be able to do. And I want to offer that from a maturity level perspective, SPP just passed the methodology that would dictate how charging studies would be done. So the RTO just passed how we were going to do charging analysis. And for those maybe not close to this, that's a big deal. And so being able to understand the methodology, get it right in the plan, get the outputs from the models, we're all still working through that as an RTO, as we talk generally about what an asset maybe can or can't do in a given situation. I just hope that helps kind of pick like where we're at on the spectrum. And at the same time, we're doing, I think, at least at one point, one of the largest storage installations in the South.
Can you just make sure I understood what you said a little
Yeah.
bit though? Did I hear you say that a battery at Pierce provides the same level of voltage support as a battery closer to Omaha?
depending on the size of the inverters and how you configure the system, like it's not gonna necessarily operate different from a voltage output perspective. It's the attributes of the hyperlocation of where that asset is deployed and whether or not it solves that set of system problems location. I don't know if you had more, Troy.
The question is, if Pierce would Pierce with a battery help control some of the voltage issues that we were seeing in the metropolitan area? And I think not much would be my guess, but you all, Dan, you're the plan.
I don't know if you were trying to answer, it can produce the same type of voltage depending on where it's located, but the voltage support is definitely better provided with the source closer to the load or voltage issue. Yeah, if that's the question.
Devices that are specifically made to mitigate these type of risks. It takes many years to get one right now, I think, but there are devices that would work quite well just for the localized piece.
Correct.
So when I hear localized, I interpret that as distribution system. Am I thinking about that right?
These particular
Question, when I say localized, I think Omaha metropolitan area transmission grid in this context that we're talking about this. Just because, a perspective I think sometimes forget is we're part of this bigger interconnected grid that goes all across the US. So yeah, from a transmission grid perspective, when I say localized, it's our Omaha local grid area.
I just want to make sure. Okay, that's good.
I think it's fair to say, I think this whole conversation, I would summarize it as saying next year, the integrated systems planning process, I fully expect to see and have conversations about energy storage, voltage controlling devices, along with the traditional generation solutions. Those solutions will have to be studied and very likely will have to be implemented regardless of the decision around North Omaha Station. If the station is extended, it's obviously going to be extended for a reason, but we need to address the voltage issue before the station is eventually decommissioned. If the station is not extended, we have to actually address the same thing a lot faster. So I think it's a question about risk and risk mitigation and the window of time where we have this risk unmitigated or somewhat mitigated by having the plant online. But I really appreciate the conversation because it's really an all of the above solution, and I fully expect that to be included in the ISP.
The mitigation, I just want to highlight something, will be based upon lead times. So, right, the sooner we work through ordering whatever pieces of equipment those are and finding whoever it is to install it, that's kind of your limiting factor.
So I guess following on this, the reason I asked about the past discussions related to resource adequacy was the timeline for North Omaha Station was established by the board in 2016. Resource planning, and there was an IRP that year. Resource planning was done in 2019, leading to Power with Purpose that identified capacity to help refill and retire North Omaha Station. In 22, the timeline for North Omaha Station was extended. In 23, additional resource planning was conducted, including indicating energy storage at North Omaha Station. So for about the last 9 years, we have been working under a case where resource planning should anticipate the refill and retirement of North Omaha Station. And I guess I would say I'm disappointed to hear that we anticipate 2026 resource planning will be necessary to identify resources to complete what the board has identified on 4 separate occasions as a priority to include coal operations at North Omaha Station. Additionally, in 2014, 16, reaffirmed with capacity in 2019, extended in 22, and again, resource planning in 23. We have talked about this with sufficient time for resource planning and specific resources to have addressed the problems that we're talking about now. And so I'm concerned that what we're saying is we need additional resource planning in the future. We need to extend current operations and do additional resource planning to address a problem that we have identified, but that we have recommended solutions and the board has approved action to address multiple times over the last 9 years.
Thank you for that. And I just acknowledging the frustration, I do not disagree. The landscape has changed significantly, and that is the reason why we're in where we are today. It is our obligation to address and assess the changes in the landscape, in voltage, in load, in technology coming in. And that is the reason why we are proposing what we're proposing. Fully understanding and that the future is going to change. And our prudent recommendation has to take into account all the information, the latest set of information that we have to figure out how do we continue to maintain a strong, reliable system. I agree with you, Director Williams. We've been working on this and in good faith, right? And today we have already made a lot of investments at North Omaha Station to make that transition on time next year. That has been the plan, and our planners and our operators have been using that as an assumption going in. In 2022, we asked the board for more time because the plan was not working out the way we intended to. Back then, it was a generation connection agreement. And then we had supply chain issues. Today, we're facing something similar. I would say much bigger in nature. The change in the landscape is much different. Could we guarantee that this 2026 ISP is going to address and fully execute on all of the challenges we have ahead of us? No. And that is the reason why we constantly do integrated resource planning, integrated transmission planning, distribution planning. What we're going to go through next year is a formal process with stakeholder engagement, and we have a document, but integrated resource planning is something that the utility does on a constant basis, precisely to address the changing landscape that we have. I just wanted to acknowledge that frustration.
Well, I have two questions, I think. I don't think we set this up. Voltage devices, Troy, you described those as multi-year lead time, right? So it's not as though we could just get one off the shelf today and we're off and running.
Most of your potential fixes, and again, this is kind of Dickin's territory.
Yeah.
So I'm just.
I'm looking at you.
I'm just playing an engineer right now. I'm not really. Anyway, most of the fixes for these kind of things are things that are in motion right now. You know, you've got the transmission, which can take 5 to 7 years to complete. I don't know how long it would take to get the voltage devices. I would guess 3 years to 4 years at this point, but we would have to really have supply chain go out and do an RFP to find that piece out. So most of your fixes in the utility space that used to be 2 or 3 years is now taking 3 to 7, depending on what the item is.
Okay, and I'm going to ask this question. I'll be as sensitive as I can, acknowledging that I understand it may not be perceived well, but did we, as these alarms continue to go up, did we consider moving on the voltage device sooner? Given the board's resolution that we're going to transition. Was that something we talked about 2 or 3 years ago? And could you generally characterize the extent to which that was considered?
So I think it's a good question. My recollection of this welcoming others is the types of issues that we're seeing on the system, issues that we thought we would see way back in 2019, 2020, to Director Williams's point. We've got some infrastructure approved, we've been erecting it, and we're putting it in service. What is more difficult to determine is the magnitude and the concentrations that the issues are occurring in. And so as the voltage alarming has been increasing, the new resources have been coming on. And now we're assessing the totality of those circumstances and saying, what is a sufficient solution to ensure reliable service? And I think that's what I recall over the last few years. Troy or Dave?
I think that's right. And Chris, you and your team this summer started to get very loud about this topic. So kind of maybe speak to that a little bit. So last summer we were hearing, hey, the grid is definitely more difficult. This summer, it's like, I'm really worried. So kind of walk us through that.
Yeah, as Troy said, year before this year, we were seeing increases in those alarms. Maybe we didn't anticipate the trajectory of those changes. Once we hit 25 and started seeing the rate of increase and projecting it towards the end of this year, that's when we knew it was time to pay attention to this and start working with the integrated planning for next year, but also in real time meeting with planning and helping them understand what we're looking at and developing resource discussions around that, because it has greatly increased over the last couple of years, this year being the most significant.
I think what I heard you describe, not to put you back on the spot, but as the new assets are coming online, planning suggested that those would start to resolve some of these issues, kind of to your point, right? But the experience that our operators are having has led me to believe that like they didn't solve the issues in the way that we expected them to? Question mark?
I believe that's what we were experiencing, and before we get other comment, I would say, you know, when we had a conversation back in 19 or 20 around the need for natural gas, specifically in the road, there wasn't a lot of people that were having that conversation. Now that we're here, we feel highly affirmed that that was the correct call.
Yeah.
What we couldn't see in 2020 was what Jim Robb said a couple of weeks ago, where he brought. Yeah, thank you. Jim Robb is the president and CEO of the NERC, who said this is a 5-alarm fire, talking about the grid as a whole. And so it was us looking at our specific system based on our load at that time, using the best tools that we can get to make an assessment on the required resources. And ever since then, pretty much by every operating metric, everything around us has also gotten worse. And I think that's part of the realization that we've had to get. And I think the industry has been going through, as Director Williams rightly notes, you did an assessment in 19 or 20, had a board approval, you did it again in 22, you did it again in 23, you did it again. It's because as we're going down the road, we're getting more clarity on our operating environment and the extent of the issues. And that's what utilities do. They identify problems as quickly and promptly and clearly as they can. And then we try and solve them, many times with infrastructure, sometimes with conservation or other mechanisms. But it is the largest machine on the planet. The Eastern Interconnect is the largest machine on the planet. So you constantly got load and power flowing around. We're constantly taking operating loads. We're constantly trying to drive forward solutions. And so, sorry if I was up on a soapbox there.
Welcome those comments. So you mentioned bulk electric systems, and this is the time maybe when I want to ask about the study that the Southwest Power Pool will do to help us understand network upgrades. So we don't need to walk through the timeline. We can do that later. Okay. I do want to understand. I want to understand when we send the Southwest Power Pool the completed form that says this is what our intentions are to refuel and retire, if and when that ever happens. What could you summarize for me what the breadth of the study includes? And in particular, I guess I'm curious about, we've named these three things, right? Voltage issues, thermal restrictions, and then resource adequacy. So help me understand the scope of their study and whether or not it would help us understand what we need to do to our system in order to address those three things.
Would you like to speak to the study process?
Sure, yeah. So the process that you're asking about is what the process in SPP to initiate a generation retirement, basically request. And it's a very formal process in SPP. And so upon application, SPP primary goal is to assess the reliability of the transmission grid.
Okay.
So thermal and voltage issues that we've discussed, that would be one of the primary things they would be looking at. They would not be addressing anything to deal with resource adequacy or energy supply reliability issues with generator retirement. So it's purely just transmission grid, and it is focused on the higher voltage transmission system. So our sub transmission system, lower voltage distribution system, SPP would not have purview or look at anything about that. So that's what they would assess is transmission, higher voltage transmission grid reliability. I think that, and as far as what their authority to do if they identify issues, they're limited to only directing the construction of new transmission type assets, which include voltage support devices on the transmission system as well. If there were a generator solution that could mitigate the transmission issues, SPP does not have the authority to direct generation builds. So whereas when OPPD goes to do our integrated system, we would look at holistically and compare alternatives between generation solutions, transmission solutions, and or distribution solutions as well. So kind of those three things. SPP would be limited to deploying transmission only type solutions to issues to ensure reliability of the transmission grid. Hopefully that helps kind of clarify scope.
Super helpful, and again, I want to make sure I understand where the authority stops, and especially as it relates to where we're experiencing issues. I understand the thermal restriction, that's level, right?
Yeah, when I say, so I should probably just say transmission line capacity. That might be a better description of, like, thermal is like, at a certain point, the conductor, because it's carrying too much power, starts to break down and it thermally overloads, which can cause a issue on the transmission lines.
Got it. Okay, thanks for that. As it relates to the voltage, I think you described the new voltage lines that we're getting on the transmission system, right? So SPP study would specifically look at, are we having similar issues at any lower level of the system, 161, 69 distribution, or are we really only talking about 345? Help me understand where these are occurring and as that relates to what SPP's responsibilities are.
Chris, you'll have to validate, but I think the low voltage transmission alarms we've been talking about have been on the 161 kilovolt and 69 kilovolt system predominantly is and in the SPP space, and this, of course, there's a nuance here, but in their planning studies, they do look at 100 kV and above and some networked 69 kV. So some of our 69 kV system is networked and would be looked at in the planning study. But in real-time operations, and there's an operational assessment, SPP primarily focuses on the bulk electric system, which is a 100 kV and above. So our 69 kV system, real-time SPP is not monitoring. So there, of course, it's nuanced, but in the planning realm, they would monitor 69 kV and above. In the operations realm, it's really focused on 100 kV and above.
And sorry, the voltage issues we're experiencing are, sorry.
Both above and below that threshold, unfortunately. 161 kV.
And so that SPP studying, and we will welcome that. And I think that is part of the conversation we have and the resolution language. SPP looking into this issue is incredibly important. It will help validate and inform the infrastructure investments we make. Yet it may not be enough, based on what I heard, to address the 69 kV or some of the 69 kV voltage issues that we're seeing in the system, because they wouldn't address those. Is that what I just heard?
Some of the operational 69 kV issues, the SPP assessment may not fully look at. Yes, that's correct.
And prevalence of voltage alarms, when you showed us the numbers, are those across the entire system, 69 up to 345, or should I think of those as at particular levels on the system? I'm trying to understand.
The events that we showed you.
Yeah.
So the 3,000, I think, events that we saw in 5 was at the 69 kV level. On Chris, is it 2 or 3?
I believe it's 3 of the 161.
Okay, all in that North Omaha area. We have seen an uptick on the 161, but not as frequent. We did see a significant uptick, but not to the level we were seeing on the 60. Those graphics that we showed you that we have in one of the decks has those kind of identified as a picture. Do you remember?
Yeah, I guess I'm confused. And I thought I could say
69 is
69 kV is. Some people call 69 kV sub transmission, but it's still transmissions.
Okay.
Fair to say that's more like a localized transmission line, is that?
Probably a better way to look at it. And like, so bulk electric system is usually kind of the larger lines that really interconnect the utilities together. That's generally 100 kV and above. 69 kV is probably more of a localized network to serve your local load, more or less.
Side of the city to, to our far west or far south service. Okay.
Yes, that's one way to look at it.
There's plenty of 161 and 345s integrated into
Oh,
that.
Yeah.
Yes. Yes. Okay. Yes.
Go to 260.
Is that what it was? Okay.
It's further down that, what we showed. Those four circuits.
Okay, my last question on this, Dan, I think you described the study as potentially including some of the 69.
Yeah. There's two assessments that are done. One's the planning assessment, one's an operating assessment. The planning assessment will encapsulate our 69 kV system. The operating assessment currently at SPP's operations group does not monitor 69 kV on our system. So the operations assessment, without ever having gone through this process, I want to say definitively it won't. SPP operations does not monitor our 69 kV system, so therefore I would not think it would include it.
Okay, that's helpful.
They wouldn't, like, here, Chris is inputting into you these issues that you can look at it extra close in your models. What you're saying is SPP won't do that with the 69 items. Therefore, that doesn't inform the way they plan at that level.
The operations.
I said that correct.
The operations feedback to planning, which is happening a lot. SPP operations isn't going to give their SPP planning feedback on the 69 kV system issues because they're not monitoring them. Yep.
Any other questions? Yeah. I know, but on that, anything else on that?
I'm good.
All right, I would like to ask questions around load growth and obligation to serve. So we talked earlier, have an obligation to serve, that's well understood. And I made a comment, before lunch that, unfettered load is not feasible or, technically feasible or reasonable. So trying to understand a little bit more about, load growth. And so my first question is how much incremental load growth, assuming support specifically.
Brad, do you want to tackle that from a total capacity standpoint?
Yeah, there's I don't know if I have the exact number, forgive me if you get that, but what's conceptually happening here is we're planning on the facility to go away. Definitely in the winter, because there's no accreditation. And we have a large injection of supply resources coming that Dr. Williams, I think, noted in the near-term generation resolution. They're en route, they're being constructed or have been constructed. And so there's a space between now and then that we're trying to fill that would allow load to continue to grow.
I believe the megawatts were North Omaha to be extended that we could consider is about 240 and 250.
During summer months. Correct. I believe it's a year-round supply injection because the proposal would allow the accreditation to stay.
Just to highlight, because it might not be clear to everyone, a transition of North Omaha would mean there would be 0 megawatts in capacity available off that facility during the winter months because the natural gas pipeline that was built in that area was to heat homes, not to run power plants. It's at the end of MUD's service territory or pipeline. So you lose all of that, or you keep it in its current condition if it's extended.
Whereas conversely, 1 through 3 can run on the natural gas of summer because you don't have heating demand.
In the last 3 years, you've averaged a little over 1.5 million megawatt hours of production out of North Omaha State.
Okay.
Right, given the capacity being operated in the summer months, that drops total production at North Omaha 10% current production. That means there's a 9% delta for 1.35 billion megawatt hours. How? Give up. Hydrogen.
Seems directionally correct, yeah.
So that's gonna have a direct impact on how many customers we can serve. And that's close to 1.5 million megawatt hours of power that of electricity is never generated.
So probably also pertinent to the response, and I'll invite Brad in. Thank you. Pertinent to the response and to being responsive to the question, we have a process through which we consider load growth of larger loads. And that is triggered off of, so there's some earlier conversation about, would we do that at the expense of reliability? So there's a very definite reason for the process that what we have available to grow originates from Brad's team, who's doing system planning and ensuring, working with Troy's team, that we have the appropriate reliability. Once they make that determination, then they would designate to my team, here is the additional megawatts we would have available to support additional economic activity in the service territory while still maintaining the appropriate reliability margins. I thought that was pertinent. Brad, I welcome any additional elements or comments you'd have there.
None to add. Thank you.
There was a comment earlier and maybe said again in another way, but just to make sure I understand it. Adding additional load doesn't necessarily erode reliability and potentially improves it. Is that, Dan, I thought you spoke to something like that. I just want to make sure I didn't miss it. Or Chris did, I'm not sure. But since we're in this topic, I think it's a good time to at least clear it up for me.
So just to make sure I understand the question is, what does adding load do to the reliability of the system?
Yes.
I think if I recall correctly, if the load pocket is healthy.
Yeah.
Our ability to activate is. And that's where this facility is located. We talked about. So the proposal gets the benefits of the North Omaha Station facility for longer. It also allows the interconnection of load, while the load pocket is healthier than it otherwise would be if we didn't have this. I think that may be, I'm following you.
And I guess my question is if adding more load from that facility makes you uncomfortable or furthers concerns with reliability.
And maybe, sorry, maybe when you say load, are you referring to the electrical injection from the facility, not the?
No, thank you. Yeah. I'm saying if we have more customers than we previously had, or we're using more of that generation than we previously were. Does that track?
Probably no change to if we had the facility operating longer. It would give our operators more tools from a reliability perspective and allow more customers.
Just to add to this, you have a study process where you go through and you study where the load is, what kind of infrastructure. So location plays a part in that.
Right.
And you would not allow those customers to start consuming until the infrastructure was in place to allow that. And I'm speaking transmission right now. Right? So, and then I think where you're headed at is you have this bridge period where you've got more capacity coming online in 29, roughly when the new generation comes. So it's this bridge period you're really kind of focused on.
Correct.
Thinking about that correctly.
Perhaps maybe, and I think this is I'm going to try to stitch the previous conversation and these ones together, where generally speaking, the past hour, we've been talking about frequency and voltage and reliability. stat bar compensators and batteries, etc. These one now here with Director Wagner's question talks about serving additional load, serving new load. They're somewhat related, but not the same. And so I just want to put this out on the table, and you correct me if I'm wrong. It may help clarify the discussion. Is if the board votes to extend North Omaha Station, and the only concern is, hey, let's just absolutely concentrate on solving for the voltage issues and thermal capacity, etc. Can we green light any more projects to take on that capacity? The answer might be no, right? If the only thing we're doing is building transmission and voltage control devices to help solve for that particular issue with North Omaha, that'll be hard to do. And the other piece would be to do this in parallel, as at the same time as we're building new transmission and voltage control devices, etc., we're building new generation to replace both the capacity and the energy that would be lost by the transition of North Omaha Station. If we were to pursue that, as well as the transmission and voltage control issues, which I expect that to be part of the ISP recommendation, then not only can we solve the voltage issues in the area, but we can actually start greenlighting projects and serving additional load, because we will have then the new generation capacity and energy coming online that will replace what we lose when we convert North Omaha Station. I may be stating something very obvious, but I think it's important to differentiate those two. And in my mind, there's a recommendation that I put forward takes into account those two. But I wanted to differentiate the issues, because we haven't talked necessarily the first hour of this conversation. We haven't talked about new sources of generation. That would be necessary in order for us to continue to serve additional load. Otherwise, we wouldn't have anything to switch from North Omaha to North Omaha converted to something else. I hope that helps.
Yeah, and those are the four new natural gas engines. That's Pierce County Solar and Storage. Those other solutions that we've unleashed to be a part of the solution. I think that's what you're looking to.
I don't believe we come from the wall.
Yep.
2028.
It moves around based on new customers, but I think that's directionally right. And it's still when those new resources come. If you were getting that, yeah, if you were getting to that, yes, I didn't mean to be presumptuous, but yeah.
Thank you for that. To what Troy was speaking to, I guess I wanted to ask, 5 megawatts in one location in the territory may be very different than 5 megawatts in another location, and you guys have a robust,
yes.
And that's maybe something that, not to get in the weeds, but the way in which you grant a new customer isn't something we've talked about a whole lot, as far as why you would grant somebody or how you're able to at this point, but not this one necessarily. And so that wouldn't upset your level of comfort in the process now is what I'm worried about.
I think we would still use.
And I think you answered that. I'm sorry. So this was all helpful.
One place is 5 megawatts. It's not just that. What type of 5 megawatts?
Yeah.
Right? Is it intermittent 5 megawatts? Is it base load 5 megawatts? Peaking load 5 megawatts? All of that makes a massive difference on how that factors in to the system. Right? I mean, North Omaha is base load. Base load has inertia. Base load has high capacity factor, 67%. You know, our peaking plants or our balancing plants have capacity factors 15 to 20%. Solar's 30%. Wind's 40%. Right? All of those are different, so it calculates differently into the system. It makes a big, in that equation, it's very different outcomes depending on what we're able to do.
Thank you.
I think I missed your question, but your conclusion was correct.
Yeah, no, we got there, so I appreciate it.
All right, so 240, 250 megawatts of new customer load is what we're expecting to be able to add to the system with an extension. How much of that growth in the summer and winter between now and 2035 is data centers?
In our overall view is, of the total queue that the board gets agreed on, percentage of those numbers hasn't dramatically changed. There's of that 2,000 that have been requested for some days, months, or years, about 2% voting some shape or capacity. However, that's not the plan we have should North Omaha be extended and should we get the system in green light. And after we do the robust process of studying load, we've identified customers that are aligned with local, regional, and state economic development priorities, that are critical infrastructure customers, that are mission critical defense customers, that are also in the queue. And one of the ways we've designed the process is would grant us some flexibility of how we do that. So those customers, as I think has been portrayed to the board in closed session, are those that we would anticipate beginning to have a different conversation about timing and moving them forward through the process. Should we have the North Omaha megawatts available, which I received an updated number. To Brad's point, it fluctuates a bit based on system conditions, but it's about 223 is what we calculate right now.
223 is what we would be accepting onto the system. If we extend.
With an extension would be potential available megawatts.
And to Director Faulkner's question, my estimation is that less than 10% of them will go to a data center type of customer. And then I think we've done a lot of work here and some confidentiality on our customers requesting, but I can tell you that the vast majority, 90%, approximately 90% of that additional capacity will be to mission critical type of industries, other industries, non-data center projects. Is that a fair?
Mm-hmm.
Hopefully that answers. So considering OPPD's resource adequacy position, would OPPD still be required to extend with Omaha Station if new data center load growth is not material?
Can you repeat the question?
Based on our resource adequacy position, would we still be required to extend North Omaha Station if new data center load is not material?
I don't know if I can answer that question.
Tim, I think the way you talked about the allocation of the capacity was to largely non-data centers. And I believe that's the answer to your question.
I think we have data center growth today, and all, if not the vast majority of that data center growth that we have forecasted is tied to resources that the data center customers are bringing to us. So in a way that is isolating in great respect that data center growth to the extent that those resources come online on the time, specified timeline, then that data center bringing that resource to us gets that additional allocation. So that's really the only growth that we have. We're allowing and we're closely monitoring the progress of that facility because that will determine how the data center grows. I'm looking at my experts in the back to make sure that I portray that correctly. Okay.
I want to maybe add discussion about responsive to load growth and how that would be. There's been public conversation.
Hey, sorry, I'm having a hard time listening, hearing you. I'm guessing people in the back will have the same.
There's been public conversation with stakeholders around our inability to support growth. And want to make sure I'm specific about that. You saw some earlier numbers when we reviewed the corporate operating plan that indicates the amount of growth that we have in fact been supporting. But it highlights another way that the grid is changing and the electrical needs are changing. So residential customers, small commercial businesses, even medium-sized businesses are moving through our process. That load growth is being forecasted by Brad and his team. We're incorporating that into corporate operating plans. So the vast majority of the growth that our customer base is bringing to us, we're proceeding through unimpeded. One of the biggest changes is the sheer number and size of the load growth requests. So above about 20 megawatts is an extraordinarily large load. Actually, we heard earlier, commercial segment goes, or industrial segment actually goes much lower than that. And a 20 megawatt customer would be, in terms of size, easily a top 50 customer for us, just to give a size of magnitude. Multiple in the last few years, multiple requests for 20 megawatt, hundreds of megawatts. Is the nature of how electrification is going in the country. It's certainly a factor of data center growth, artificial intelligence rates between countries and within the country. It's a factor of trying to bring manufacturing in and the energy intensiveness of some of the manufacturing that in particular aligns with some of the state economic development priorities around bio-ag, et cetera. So it's important that we understand that things, if we consider load growth in this question through the lens of a few years ago, we completely missed the mark. Not too differently than what Brad and Dan have explained. But if we think about grid stability through a lens of a few years ago, we misinterpret the circumstances that we operate in today. So I wanted to make sure to establish that we counted on meters. We saw 23,000 plus new meters. Yeah, I also wanted some of the stakeholders, government officials, and economic development organizations that areas really large requests and become is those are the ones that we're asking to wait for. We're not yet able to give clarity and serve. Those tend to be the ones that get challenged in the economic development organization. They have significant investment in their job times. So both are true in both are explained.
Can you talk to a little bit about how your group specifically is thinking about real opportunities versus speculative opportunities?
Yeah, certainly. So we go through probably the easiest thing I can start is to dispel perhaps the perception that you get a phone call or an email that says, hey, I like 200 megawatts and give them complex. That doesn't actually somehow today's world. So with larger loads, those tend to either come through economic development partner. The board saw earlier in the SB11 presentation for TMAR, or it comes directly from an existing customer who has a plan to expand their operation. And so then we would have an account manager working directly with them. And we're working through specific plans, specific contacts. If it's a new customer, we're working with that economic development organization and understanding, are there other impediments or what's the likelihood they'll be able to land that project? Is the land control? Is there permitting already in place? All of those are indicators of the degree of seriousness. It's those that we have a higher degree of confidence that we portray to the board on a quarterly basis. We do have many other requests beyond that. We have projects that we're made aware of that are less certain or they're earlier in the process, and we keep track of those, kind of watching them on a radar screen, if you will, staying engaged with them to understand if they'll progress to more certainty. And then, frankly, there's a third tranche of inquiries we get. Usually those are super energy intensive, and we often get a call first just to check the availability capacity and if it's a really large need and we signal where we're at, they often move on, but there's no way of telling would they have progressed through to become an economic development opportunity. I'll address it two other ways quickly. One is there's much talk in the industry right now about how much speculation is built into what the country hears about data center load. So we are particularly mindful of that. The majority of the data center load that we have identified are from existing customers who we know their plans, we know their progress in the process, up to including some buildings built, waiting to be able to put servers in them when we signal we can be able to serve. So it's up to including that degree of certainty. The last part I'll respond is Brad and I and some others in our teams have built a very strong process as well of once we identify prospective capacity to be able to support additional growth. We take those large customers through a series of pretty robust process steps that signal their degree, both their degree of commitment through fees, study fees, making sure to our earlier conversation that if they come on, they do so reliably, safely, and in a way that supports the grid. And they pay some fees along the way, they pay study costs, and there's financial commitments that go along with their progression through the process to make sure that we're not stranding a bunch of assets and burden other customers with costs. So I hope that's responsive to the question. I wanted to be kind of expansive of how we're thinking about it.
Yeah. Are there ever financial commitments that our customers are asked to make in order to progress and follow up?
There are, I tried to signal those. There could be fees, there's study fees if we have to go through SPP and transmission studies. There are costs there that the customers bear. We do a line extension manual that asserts based on where this customer wants to interconnect. Once that study is done, it may signal system upgrades. Those customers are paying for much of that infrastructure cost. And then ultimately on really large loads, there may be additional financial surety that they signed up or that they would be required to sign up for to, in essence, make sure their load arrives, the load that we afford to support.
So I guess of the, let's say, 2,000 plus megawatts currently managing, how many of those megawatts have those financial commitments?
None yet, because we have not taken, those are ones that are awaiting a green light to proceed forward into the process. So once Brad's team and signals we've got available load capacity, take them through that formal process where those fees would be paid, financial implications would be estimated for them so they'd understand what the upgrade costs would be, etc.
And that's an important aspect of it. That's the green light, right? To meet customer expectations. We don't want the customer to spend time and resources going down the path of studying their service if we don't know whether or not we're going to have that capacity. Right. So, but as soon as we have that capacity in front of us, then that's what we refer to as there's a green light, and then that's communicated to the customer, and then it starts the process. Right. So far, the customer comes to us through economic development. It's to a point where they're ready to go, but they don't quite necessarily go through the next steps until we have reasonable assurance that we will have that capacity.
How much of this forecasted demand, describe to me what that is as an input to both the ISP, but also is the SPP study going to need any of that information for any reason?
Probably going to for Brad.
Yeah. Well, most of the customers are much smaller magnitude.
Mm-hmm.
So those are all.
times homogeneous load exponential small.
Yep. Yep.
And then for the set of customers that are abnormally large, we would contemplate both spot or.
Mhm.
And we created the process so that they can, it doesn't feel like this to them, but they can control how it's. So do I have land, have I pulled a permit, have I made an announcement, have I paid a modest study fee? All of these things that they do, like.
Sure.
That would be contemplated alongside some aspect of collective judgment, either in the public areas or within our economic development. That's where you tend to get that over 50 type characterization. And so what we have been doing is we have tried to disclose kind of the totality of inquiries, which include probably some amount of speculative, some uncertain for whatever reason. And then we talk about low, I think in a more true sense of the word. So these are customers that for whatever reason, maybe they're an existing medical facility here, they're expanding, or maybe they're mining, maybe whatever they are, that have said, no, I'm going to be your customer, more or less. And so that's how we kind of delineate. We try to, through the load conversation, we've tried to talk about it. When we submit a load forecast to the Southwest Power Pool and we use a load forecaster, we still try and go probability 50. So P50, if you ever heard me say that. So if you have not taken steps to demonstrate your authenticity, then we're much slower to include you in the load forecast, if at all. But we want to acknowledge the totality of inquiries that are kind of occurring. I hope that's helpful.
So in that, not only are you tracking the forecasted megawatts.
Yeah.
But in many cases, you have a projection of jobs. Many of them you don't even know.
We may not address the total numbers of the associated with economic development organizations. And we try to portray that there are numbers in the hundreds of potential jobs associated there. But in some cases, you're right, Director Hudson, we can get the information, the specific economic investment or the jobs associated with the project. So we try to reflect that.
230 megawatts. The North Omaha would represent in your plan equates to some number of hundred of jobs. And some, I remember right, multiple $billion for one project, for example, prominent project.
In the service territory, the full employment projection is 400 to 450 jobs in that one project, as an example.
So from the previous questions about the anticipated additional projects that would be able to be greenlit with additional capacity if North Omaha Station were extended, what do those projects that we would anticipate having additional discussions with, what do they believe is their timeline now? What have we told them is their anticipated timeline right now, given the current board governance on refilling entirely into 26?
We've not been able to give them any specific timeline toward when we could energize them, because we haven't had that line of sight to when we'd have the available capacity. Therein lies one of the challenges. They have construction timelines as well. So they need a signal, right? There, as we can imagine, they are maybe reluctant to move forward in some absent a signal of approximately when we energy. We're challenged to provide that, as we know we have capacity to allocate to that customer, and when they want to be energized.
Thanks.
Feels like a game of chicken.
It is. I think I would just add that that highlights the tension also around the financial. Right? We absolutely want to make sure projects are real and we have a good process to be able to do that. And yet, if we were to go to a customer and say we need significant financial commitment, their first question back is, okay, I get it. When can you serve me? Well, until we can give that part of the answer, therein lies the tension of some of those things. The last thing I would say that's maybe helpful for the board is if anyone is accustomed to, back to another career, I'd say a sales funnel. One of the things that helps me sleep comfortably around growth is we have a segment of customers that we believe have higher certainty and or are moving through the process. We've got another segment of customers that we believe are real projects but are not certain, and we're tracking. Those are hundreds of megawatts. And then we've got that larger segment where we consistently get inquiries, and those inquiries total in the thousands. So we're not in a position now, but the point in providing that is if we think of the available tools, i.e. projects or prospective economic growth to serve available capacity, we have lots of those options that we could take other projects, should one fall out, and approach others about moving forward with more certainty. That gives me some degree of comfort of being able to monetize the additional capacity that we have and not have minimize the risk of having stranded capacity.
Yeah, I think I'm more worried, not necessarily about the capacity of modern equipment that we might build in the next 10 years. I think I'm more worried about major capital investments in a very old asset that really is, getting to the end of useful life. Does anyone want to pick on that a little bit? It's not really a direct question, but if you have, help me understand the thought process behind that, because I know that in some of our meetings, and you specifically have said a North Omaha extension is a bridge, but we don't know what it's a bridge to. We don't know how long the bridge is, but I welcome.
Yeah, and unfortunately Troy had to step out. I'm gonna pitch it for him. So I have Scott Edom in the back, and he can help me if I need to. We're actually gonna talk about one of those solutions later on today, which is we need a turbine. We need a turbine for some amount of time. We need to have it in good working order for accreditation capacity and to really do the work that it's supposed to do. Other than regulatory investments, I'm gonna put those aside, those we have to do. There is always that balance between investing. If we're gonna invest in long-term assets, we wanna make sure that those assets will be there for the long term and really providing value to our customer owners. Going back to the debt to capitalization conversation we had earlier, right? We're issuing long-term debt to finance long-term assets. If there's a mismatch, we could end up issuing more debt than really the value that those assets will provide. There are ways for us to deal with that mismatch, but that's technically not something that's desirable. Troy, we're talking about investing capital in assets that don't have length in time. There's also the other aspect of investments, which is investing in assets, for example, in North Omaha Station. The oldest unit is 71 years old. There are engineering estimates that tell us that that unit could be operated for another 10 to 15 years. That's probably getting to the very end of it. Investing on those assets is something we need to be very careful about to make sure that we are investing only the necessary amount of capital to keep that unit working for the estimated duration of the asset. But it's also an asset that already exists, and it's arguably a much smaller investment than if we were to invest the capital in a capital project for a new asset to provide the same amount of megawatts. That's a very long way of saying it depends. It has to be a balanced approach, but we have to be very careful about how are we deploying our capital. And at some point, and maybe this is where the conversation is going, we need to figure out what is the expected accredited capacity that this asset is going to provide to us, and weigh that against the capital investment we have to put in to keep that accredited capacity going, versus let's start investing on the new one, because it's a much better financial decision to invest in the new. And I think this is part of what the process is looking at here. Back to the concept of a bridge. This bridge solution would require still some capital investment. And we are calling out that through the ISP, very likely we will have to start investing on a new asset that will give us a lot longer credit capacity with a more efficient technology. And we may have to do both at the same time, because we have to keep that reliability going on all the time, and we will have that overlap. Right, as we're maintaining the old asset, we're building the new one, and at some point we can then transition. Hopefully that was somewhat clear. Troy, I don't know if you have anything else to add.
No, I think you covered it. Our engineers look at it. Extent condition, what risks are. We had a third party actually come in to do the assessment. What would be an expected lifetime? I personally hope it's not 15 years. But I think as you move out in time, getting parts and pieces and the skill sets that you need to work on those aspects. So we do need to find a good way to transition.
So on the financial projections there, I'm concerned about the 5-year and 15-year numbers that we saw. And my understanding is the difference between the 5 and 15-year numbers that were presented in November for the current net present value for North Omaha Station operations is that if we look at a longer extension and we make a capital investment, then we would anticipate trying to capital recover on the operations of that facility for as long as possible. So we are kind of knowingly walking ourselves into a future sunk cost bias or early termination of the operations of the facility and a net negative value.
I'm confused with capital investment. Because if you keep operating the status quo, we're continue to maintain O&M function. If we convert it, it's the expensive part of the unit. Saying it's the steam turbine, which doesn't matter which fuel source, and the only difference is spending 30 million to convert it. So I'm not sure it's kind of doesn't matter.
I disagree. I would echo the concern about what is the anticipated operational and future capital investment necessary to extend North Omaha Station, and what do we anticipate would be the time period in order to recover on those costs?
So just as a reminder, I think Brad brought this up last time. First 5 years we assumed that. So you didn't have the revenue piece. You didn't have the revenue piece come through there. So therefore, the first 5 years would not necessarily. It was conservative in nature.
Yeah, I think there is a lot of value in this. And I think that is something that must be said. What the economic analysis did is it acknowledged the lifespan of the circuit. And it said, hey, if there is an extension and it hangs around a few years, we call it 5. What would the net present value differential for the total operating cost, which effectively gets past that? So we did it at 5, and we did it at 15, which we sort of deemed as an out for it to the difficulty of that kind of life extension. And we said, hey, are those findings different in terms of economic direction? And the answer is no. It's a favorable in 5 years to the tune of our prior capitalization. And it's a favorable for 15 years. And as we go through, if the board approves an extension, we're going to be investing capital. And we're going to be, just like earlier, we're going to be doing that as judiciously as possible based on the And those would be very active, I would expect, very active conversations based on the state of the grid, the needs of the system, and the needs of customers. Director Williams alluded earlier to the frequency of resource planning. It feels like we're doing this every year. That's what it feels like. And so it would just kind of fall into that rhythm and routine during the conversation from a frequency perspective. And it would require capital, it would require, those are the engineering estimates, and those are the types of things that we put in the tools that we use to try and.
But, okay, so without, and I've asked this a couple times about how much of this information can be shared publicly, and so I want to be careful about the information that is appropriate for directors in a confidential setting and is not appropriate for the public. But in the analysis of 5 and 15 years, there was a difference in the anticipated capital investments because we would anticipate additional future revenue based on longer operations and growth in consumption over the 15-year timeline relative to the 5-year timeline. Correct?
So there is some capital.
Yeah.
So units 1, 2, 3, as an example, we've been being very prudent on what we spend with this anticipated change.
Meaning not spending a lot.
Meaning not spending a lot. So if we felt like we needed to spend, we have to spend some money to cover a few of the things that we would have covered for price. That, I think that's what you're seeing in this. Maybe there's a little bit of, so it's not.
Well, it'd be a change of direction, it's different.
And we would do the same thing, you know, if this thing shifts out, we would do the same thing. We look at that time frame, we do the extent of condition of the assets, and we'll make educated assumptions on what needs to be done and execute based upon.
So can we generally characterize, to Director Hudson's question, you described $30 million of potential investment toward the refill and retire. Can someone give me a ballpark estimate of the difference in the capital investment between the 5-year and the 15-year projection that was shown to the board without specificity? And it was, I guess, what I would characterize as not a small additional investment.
I don't have that in front of me. Maybe we did.
It's not small investment. The operating costs is so low. That's point that offsets. The operating cost is so low.
Sure.
Even with these capital expenditures, it's still an economic. Tell me if that's wrong.
No, that's correct. I've tried to administer.
So we offset the capital investment that we might make in North Omaha Station by continuing to operate it. And what are we assuming about the capacity factor of North Omaha Station going forward relative to the capacity factor we've had in recent years?
I think it looks pretty consistent.
2024 and 2025 not considered, because those we had big outages. We went in and we did significant maintenance of turbines. So those, we're not considering those as part of the historical average, but they go back. We're assuming the same historical average now that we've taken.
It's been very consistent.
2024 and 2025.
So it's something
between 60 to 70. Capacity factor for 60 and 70.
I think it was in the 60s.
Yeah, there was
it fluctuates in that range. It with that.
It's what we shared previously.
So
we can, just for clarity, the capacity factor management.
Sure.
So the model selects.
Yeah, if it's expected to clear the market, it's
Generally, it's been true.
Yeah.
Also, I guess.
If converted to gas, the capacity factor falls into the teens. Correct.
Or single digits.
Yeah, the current units 1, 2, and 3 are like low single digits. Where we could essentially turn on 2 and 3 now, it'd be a no impact. Right now, if there was a major maintenance issue on units 1, 2, and 3. I think
From an energy perspective, you're right. There are days when we do need.
Yeah, but it takes 24 hours notice to turn those things on because you got to heat the boiler with gas. It's not like all our new GWIS stuff. It comes on in 15 minutes. So units 4 and 5 are converted to gas. Will need to be scheduled at least 24 hours out to start getting that boiler spun up. Which can, because of how the markets work, that's going to have a low capacity factor. You know, which is why you go from a 90% reduction in the amount of power generated out of that plant if we convert to gas. You go from 1.5 million megawatt hours to probably 150,000 or something. A modest amount. Yet you still have a massive asset sitting.
Yeah, and that was anticipated when we talked about the reduction in emissions when 2019 and improving new assets that were to replace the capacity at North Omaha. A majority of the emissions reduction came from both fuel switching, retirements, and then changing operational status from a baseload coal unit to a peaking and balancing gas unit for total annual energy generation. So I guess my point here is, Director Hudson, I would encourage you to look at the financial information. I would categorize the additional capital investment on the long duration extension, which was provided, as not small, and that is available in diligence.
I don't think that's that. I mean, the additional costs for the additional O&M maintenance, which would be upgrades, the main expense is the turbine, right? The turbines are the most expensive asset, both operating and O&M.
I think we should spend some time and make sure we all have clear understanding of the potential additional capital expenditures that were provided to the board in confidential settings. And I guess I want to then highlight my concern here. Again, by making substantial capital investments in an asset that is 60 years old on some burners and 70 years old on the other, anticipating as high or higher capacity factor in future years as in recent years, I am concerned that we are creating both a sunk cost bias toward extremely extended operations in order to recover that capital and uncertainty about changing conditions outside of our control, which might put us in a negative financial position toward an asset where we sunk additional capital investments and then we're unable to recover. Not to put too fine a point on it, but yes.
Last question, financial. Oftentimes, emissions related to
Dr. Moody, I'm so sorry. I'm trying to find the financial information and I missed your question. I apologize.
I'm gonna start over. It's quite all right. Oftentimes, we're trying to understand whether or not environmental emissions, greenhouse gas, carbon gases, and how those get factored in. So every once in a while, we will factor those in so much shape or form, sort of a hedge to mitigate. Tell me about the extent to which those were factored into
So the predominant driver of this discussion from my perspective is energy availability, reliability, and there's an economic aspect. You rightly bring up another attribute that is within the operating environment we're in, which is regulation. And so we try and build a portfolio that over time contemplates that aspect. And so some of the portfolio decisions that we've made, I think are helpful in a future where GHG is regulated maybe the way it was in the prior administration. And so that would be natural gas where you don't have a lot of high energy dependency. Some of the renewables that we're getting into our portfolio based on economics. And so those aspects of the portfolio, I think, are very helpful in that one consideration. I think this discussion, as you would agree, I think has a lot of considerations beyond.
Yeah, Jeremy.
Well, I didn't know Jeremy was in here. I'm sorry I answered your question.
Maybe you can speak to, I believe your team has done an assessment of the landscape and how you feel about things and in this particular conversation. So maybe you want to share that?
So I cannot speak to what was included in that analysis. Yeah, which is really the essence of the question. Yeah, I think we are waiting for the potential for, with starting to directly it's going through the process.
Go ahead and stand up, Jeremy.
Trying to go through the rulemaking process with the previous administration's previous EPA series. So to a varying degree, and what they're going to use to make that happen is
somewhat uncertain. Last that I understood is that there's still some of the repeal of endangerment finding, and that we will hear something. Once the government shutdown with goal this fourth quarter, it'll probably be first quarter of next year. In addition to revisions to the potential revisions to the math standard, and repeal of that as well. That would be the most recent, not math in general. But that's the lay of the land as far as those two primary pieces that we're watching. But as far as it's impacting economic analysis, to your question, I can't answer how it was included.
So just to highlight something, so we were compliant under the last administration. We are compliant under this administration, but that doesn't preclude them from changing and making these more challenging in the future, at which time we would have to look at what technology options are there out there that could meet it, or what other replacement options would get us to a point where we could still serve customers but be in compliance with the regulations. So
Yeah, that's fair. It's short of changing that now.
for sure. Yeah.
But I just wanted to be sure that I understood sort of what the base level assumption was.
Yeah.
Can I go back to the financial analysis here? And I know Brad is information, but I can tell you so that the information that we submitted to the legislature will be 234, where it talks about the net benefits. Basically spells out, and we've shared this information confidentially to the board members, all the assumptions of all the revenues, and then it shows that on a net present value, both on a 5-year and 15-year basis, the benefits of keeping the station open outweigh the costs, including capital expenditures. The majority of these benefits come through a net energy margin, but it's not bringing any more customers, any new customers, and assuming additional revenue. It is by keeping these units online based on the cost that it costs to produce energy. There's a net energy margin that is significantly higher than the capital expenditure in each one of those respective periods. Brad, you have that information in front of you. I think it's important to talk about these. Again, we're sensitive about the assumptions we make because it's market pricing confidential, and it's part of how we bid the assets into the market. But if you can talk at a high level, what about the net energy market margin, CapEx, 1M, and how those play together, and to address answer the question. How long will it take for these capital expenditures to be paid?
Yeah, I think you did a nice job of really articulating it. And what I would agree with is the net cost to operate the facility are less than the net receipts to run the facility. That's the net energy margin. In addition to that, there can be load that is served from the facility while we bring on the new resources that we've been talking about, bringing, specifically the ones in the near term.
So the second part of that, the load that we could bring on is part of what's included in the net present value.
Not in the 5-year, in the 15.
In the 15.
It is included, even though it is reasonable to expect that some load will be able to be served within the 5-year period. Part of the estimation in the amount of load that would be served was the other assets that would need to be required to be put into service, specifically conductor and substation facility modifications. And there was there was a lack of clarity on how fast those things could be put into service. And that's how we acknowledged it in the analysis, as we put load in the 15-year, but not in the 5. I do want to briefly address the CapEx. The CapEx analysis in the 15-year assumes that the facility stops operating completely. So there's no capital to do the refueling in that analysis. And if you looked at the net present value of the capital So all the capital that's required throughout the duration of the 5 or 15 year, we discounted that back to today. The NPV of the CapEx is the same. And so I do want to be clear, that's not necessarily.
Sorry, say that last sentence.
It's okay. It's not a net differential between those two portfolios, because by the time you discount the CapEx back to today's present value analysis, it's the same. And that's
Almost the same, it's in the same
Almost,
neighborhood.
Yeah.
It's
I
$2
have
million.
a course in that, so
Yeah.
you don't.
Yeah.
I think what I'm trying to unpack, and I feel like, we tried to talk about this when we were talking about financial, is like, how ideal, how much was pressure tested on the financial, like how much of this scenario is like the ideal, perfect scenario, like everything goes right, the units are always available when they're called, load is added to the system on the ramp that we're expecting it to, and I'm curious of how this financial analysis changes when those outside things
Yeah.
don't go as planned.
Yeah.
And they go negatively.
Hey, hi Shannon.
Perfect timing.
Good to see you, Shannon. We're just talking about the model inputs and kind of the sensitivity around it. If one of those inputs materially changes, how much does this change the analysis? I'll just give you a few thoughts, and it works both ways, as you would recall. So let's say we have an event like Uri or Elliott. The NPVs are significantly understated.
How so?
Because the net energy exposure the district would take during those time periods would be large.
Because prices are in the thousands of dollars per megawatt hour.
We don't have energy to sell. We're net buyers. That's a tough place to be. We try and stay out of that as much as possible. So one 70-hour event can materially change that. I don't know how many of those events we'd have in 15 years, but one would materially change it. Now, let's say on the other side that the price of natural gas collapses even below where it's at, which is relatively, and the corresponding price of power collapses. And some of the load that's assumed in the 15-year period, which I don't think is full load that we assumed, but some of that load is assumed in the 15-year period. That would change it. And it would make the NPV worse than what it is stated to today. My perspective on those things would be acknowledging that the future is uncertain. That seems exceptionally unlikely. But it could happen, but it seems unlikely. And that really gets to the type of input we put in the tool, which is really around that probability 50. What is the most reasonable thing to assume based on the information we know today? And for power prices, we have subscriptions to providers of power prices that we pay to get. And that kind of thing complicates our ability to share it because we pay for it and other people don't. And that's not our product to share. And so we use these things both on the power price side, on the price of fuels, which is heavily influenced by the fuels outlook, but also our transportation costs, which is competitively sensitive, which goes into market offers. And that's why we have to withhold that so we don't harm the organization. And so it's those types of things. We try and assume a probability 50 to be reasonable with the analysis. But those are the things that can move it one way.
You also assume period of time.
Oh, thank you. We assumed forced outages. I don't know. You probably know the number off the top of your head. Sorry to put you on the spot, but
Yeah, I'm totally assuming, I think it's about
So we assume it's gonna not work 12.5% of the time. It's gonna fail, you're gonna have a problem with the belt, you're gonna have a problem with the coal mill, you're gonna have a problem with the burner, or whatever the case may be. Yep, and it's not gonna work. And so the modeling tools that are very mature, they're not perfect, but they're very mature. They take the unit out, and then they put that negative cost exposure that we would have into the OPPD, because we would be going out for spot count, as Craig noted, or I'm sorry, Director Moody noted. That was an excellent question. Thank you. I hope my answer was helpful.
Yeah, I mean, it's helpful for sure, but I do think that there's been maybe a public characterization that these are the numbers. And that this is what we will see.
Ooh,
And
okay.
I think that I think I'll say, loosen that expectation up a little
Okay.
bit. This is just one scenario that we might see. And maybe there's a high probability that this scenario is directionally accurate, but there is also scenarios out there in which these are not the numbers we see. And so I just want to make sure that, that I'll say sees the light of day.
Okay.
If you will.
And the way I'd explain it to my neighbor, you all have much more experience. I could just say it's a good representation. Yeah.
Well, I'm gonna raise this. I don't know if one of the knowledge that I don't know if the conversation on specifics is valuable. But I think we need to talk about the health impact study. And, I want to be sure that I understand how that's shaping the decision. And, again, like, lots going on. But like, we talk about all of the reasons why an extension in your mind is valid. And I said at the start that I haven't sort of moved around out the scripture a little bit. I don't know what the question is necessarily, to be honest with you, but I think maybe for me it's like more. Here we go. Maybe the question that I would ask as a board member is, what advice do you have on how I should use that form?
I'll start maybe there, and we can help with a little technical. There, from my perspective, we have institutions in this country that set regulations, and we abide by those regulations. And so it's important for us to know, as we're looking at extending the plant, I want to make sure that we're within all those regulations. Not only within, but even below the maximum emissions amount of some of these emissions by our low emitter status. That's important. When the board made a decision back in the 2014, 2016 timeframe, I believe, the goal was to reduce emissions. And that was part of it. Part of that was to be in compliance. And it was a clean power plan, and that eventually led into our journey to be 10% renewables, 30% renewables, then eventually all of that more our current goal of net zero by 2050. That's a very, very important piece for us. And again, as I've said before, that hasn't changed. Our goal, our marching orders are still to achieve that net zero by 2050. Making this recommendation, we have to look at reliability, resilience, financial, everything we've talked about for the past few hours. Knowing that we are in compliance with all of those regulations. Now, the board has also asked us to convert the plant by 2026, and it stated that in SD7 have a specific reduction of CO2 emissions in 2027, and that basically ties everything together. The health risk assessment came by when members of the public came and said, "Hey, you're forgetting something. You're forgetting something very important." and that's the health of the people around the plant. Well, we're complying with all of the regulations of experts, environmental agencies, health agencies, and we're complying with that. But those comments kept coming back. And so it was a prudent thing from me, and I talked to the team and said, hey, let's look into these claims. Let's look into these conversations that we're having with the public. Again, not to refute our compliance with environmental regulations, but aid, augment. And it was important for me, again, morally, personally, to know whether or not we were missing something. Were these agencies, was the EPA missing something? Well, yeah, we can be in compliance, but was there something else that we should be doing that's not coded in regulation? And so this health assessment gave me, and I think the team, the additional information to say there is no significant additional significant contribution to the health of the negative impact on the health of people in the vicinity. Again, I am not discounting the emotions, the feelings, the other perspectives. That's very, very important, but it was important for me and for the team to know beyond those regulations that we're complying with, what else are we missing anything? And that study, that assessment gave me and the team that additional information to say there's nothing concrete in there that says we need to stop and question the regulations that these entities are in front of us. That's the way I see it. That's the way I would interpret it. The way I would share how I took that into consideration in my deliberations, fully knowing I'm not a voting member, but it was important. It was a very important piece of information that I took in as I made the presentation and recommendation to the board. Jeremy, I don't know if I misstated anything.
I appreciate that. I appreciate the specific question, like how should we manage? And maybe just to add on to what Javier said, for me personally, last time we talked about the extension of North Omaha Station, we talked a lot about the National Ambient Air Quality Standards. Very, very true. The region is in attainment. You've heard us say that a lot with the National Ambient Air Quality Standards, which are set to be protective of human health and the environment. But there's a whole other piece of the regulatory structure on hazardous air pollutants. The National Ambient Air Quality Standards are set to understand ambient air quality impacted by a lot of sources. The hazardous air pollutants and the way those are regulated is very specific to a source. So the EPA says these kinds of pollutants are what comes from this type of industry. And so we're in compliance with the implementing regulations to ensure that we meet those standards. But what this does is it applies this human health risk assessment methodology that EPA uses in its regulation setting to our specific.
Can you speak up a little bit? I think
Yeah, thank you. Applies it to our specific plant. So it goes a step further than just saying we comply. We wanted to get a full picture. And so we did the human health risk assessment, and that's specific to hazardous air pollutants. A lot of the commentary we see right now, it goes back to the criteria pollutants and says, are you saying there's no impact from emissions? Well, we emit. We have, for our industry, to provide the services that we do. We have stacks, we do have emissions. But in the context of ambient air quality, we're a piece of the overall picture in the region. The region's air quality is safe according to the National Ambient Air Quality Standards. So this was a very important supplement to that understanding, a very important, in my opinion, validation to the way implementing regulations are applied to the facility. As Javier said, we're low emitter status. That applies specifically to air toxins, which is what, or hazardous air pollutants, which is exactly what this study was intended to address. And we felt like that was the piece of information that we didn't already have. A lot of the conversation is about, well, isn't any impact negative? And there's a standard set for a reason. And so whether it's epidemiological work or other types of studies, it's all good input that goes to the US EPA as they evaluate the National Ambient Air Quality Standards and where those should be set. So that's the way I view it from my chair, and recognize that you know, the ongoing conversation about it. But that'd be my answer to your question, Dr. Moody.
Anyone else want to follow on that? I have some thoughts.
Also, from
Okay. From the beginning of today, we talked about the business judgment rule and the idea that we should use the best available information. And we have available information from a study contracted by OPPD staff that recommended the extension. And there's additional information from the presentation last Wednesday evening from a collection of PhD, multi-decade experienced public health professionals from 4 universities, including George Mason, Virginia Tech, Brown, and Harvard. And I would categorize their summary of analysis specific to North Omaha Station as dramatically different and explicitly saying, assuming that regulatory compliance is the same as no impact is wrong. And that's assuming that there are not differential impacts to different people, specifically people in North Omaha, whether or not the cause of asthma was associated with past emissions from North Omaha Station. They have asthma now. They are more likely to have additional impacts from emissions in the future, not considered in the study. There was a collection of slides that was presented, and I believe all the directors received them. And I guess I would say that when I evaluate the impacts on public health, I'm going to be listening to public health professionals. There was a collection of them. They provided numerous citations. One of them, Professor Dominici from Harvard, is currently doing a study that will be peer reviewed to validate the results specifically studied for North Omaha Station, and had serious concerns about the way that the EPRI report was conducted. And so I guess I would encourage other directors to make sure that you take all the appropriate information into consideration. And this was not a contracted study by anyone. This was public health professionals working within their field, within their expertise. They are multi-decade experienced professionals with hundreds of publications among them. They did specific analysis at and around North Omaha Station and highlighted both concerns about the way the study was conducted and are in the process of doing additional studies of their own. So I really encourage you to make sure you use that information in your assessment of whether or not there are health impacts associated with extended operations at North Omaha Station. And to my knowledge, that was distributed by email, both the recording of the 2-hour presentation and the collection of summary slides to all of the directors, so that you can reference any of those materials that were made available last Wednesday.
Thank you, but no, I don't think anyone at OPPD has paid to be a health expert. We are, however, reliability and electric utility experts. That's our core. That's the information that we offer and that we would present here. And so I clarify that that's not our area of expertise. We rely on relations, studies, not to debate something that's outside our area of expertise. Just like our area of expertise is management, reliability, and safety.
I guess the only reason I mention it is that our organization contracted a study and presented it publicly and was referenced by the World Herald as this is the official position of OPPD. And there is contradictory information from people who are operating within their professional field with decades of experience that presents what I would describe as directly contradictory results with numerous citations. It is available to directors. I think you should keep that in mind when you make a decision.
I would only point out in addition to these comments that there is some confusion, and I think even on the Wednesday night event, on the bounds of the EPRI study. It wasn't intended to address the criteria pollutants because we're in attainment with those. And so that's a whole process. And a lot of the commentary from Wednesday night was around the criteria pollutants. And this is not a critique of that. The bounds of the EPRI study were hazardous air pollutants because we felt like that was where the best communication could happen, what we had communicated the least on previously, and could provide the best full information that we could provide.
This is very good. I was very happy with what we produce analysis. Very distinguished people from Monterey, organized by Dr. Ryan Fisher, the Prince Department of Cultural and Social Studies. Dr. Angelio, associate professor and director of the Justice of Peace Center program. And they all great university, which is for community network to service justice and advocate justice. So we could people all doing their best to carry out the mission of the institution and service, right? And make people in their place. Experts that they summoned, asked to respond to their public work. think they're good people are, very obviously very qualified. Not spinning the wheels, and I'm putting their best to make it a little better place. But none of those individuals, and I'll add the two questions to talk a little about other ways to address the deficits, also all that are putting North Omaha Station on other ways to address that. And I guessing they will have instituted related systems. And that's fine. But not very less that any of those presenters on their details and about them, that I see that they are currently members of the board of directors of a load serving utility. And I will just say the same organizations we have received heartfelt letters accusing OPPD of poisoning people. My goodness. Sierra Club, their mission, explore, enjoy, and protect the wild places of the earth. Practice, promote the responsible use of the earth's ecosystems and resources. Educate and enlist humanity to protect and restore the quality of the natural human environment and use all lawful means to carry out these objectives. Their mission is not to provide electric services. Citizens Climate Lobby, really admirable organization. Their mission is that they're a nonprofit, nonpartisan, grassroots, focused on national policies to address climate change. They have a fine list of values. I have participated with them. They're an honorable group. Their mission is not to supply electricity to anybody. We have the Nebraska Conservation Voters. I think we've heard from them. Their mission is to protect our state's natural legacy by educating voters, advocating for sound policies, and electing conservative champions. Great. Oh, help make the world a better place. But they're not supplying, their mission is not delivering electricity. And then I think we had also speakers from Conservation Nebraska, letters from them. Their mission is to protect our state's natural legacy by educating the public, supporting communities, and increasing civic engagement. Again, fine work from all of them. None of them have the mission to provide affordable, reliable, and environmentally sensitive energy service to our customers. That's OPPD's job. So listen to all of this, and I want to offer my simple understanding. I've got a little more nuanced understanding here through the discussion, but of how the electricity flows through OPPD's district. We have 7 full counties, 6 partial counties that we serve. And so there's a big pool of electrons that come from different places around the district where generating stations are, or where we buy them from. And optimally, it's best for the generators to be close to the load that they serve. Get that. But it all needs to stay in balance. So when we heard from our operations team, that's becoming an issue. I'm hearing that the only way really that they have to protect the system when things get really wonky, a little bit too much off-center, pear-shaped, as some people call it, then they have to shed load. And then we have rolling outages. And nobody in that energy center wants to do that. So let's remember, because it's kind of indelible in my mind, what happened in the OPPD district in February. I was 6 weeks into my term when I was called and notified by the CEO. Oh, by the way, we're going to have some planned outages. We're in such and such a designation SPP. I had no clue to put this on. But anyway, so we had planned outages across our service area. I got no response from anybody saying, oh, that was so fun. Let's do that again. Quite the contrary. High criticism. Great work. I got that. So it took us a year to do a study, come back and say, well, this is what happened, and this is why it happened. And we hope it doesn't happen again. However, I'm also understanding that doing those rolling outages is preferable to having the grid go down entirely. So I'd like to talk about that a little bit. When I have asked staff members, well, what happens when the person's eyes get real big and they go, oh, I don't want to think about it. I don't want to talk about it. I had the wonderful experience of going to an EPRI international meeting, and what a fabulous group of people. Electric engineers from all over the world coming together to talk about next steps. How can we make, how can we do things better? And they were excited about clean energy and how to get more clean energy into the grid and serving people. And there was this really enthusiastic presentation. And then Lanny Nickel at the Southwest Power Pool fairly loped onto the dais going, whoa, 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 whoa. You can't do that. You can't go that fast. The grid won't take that. And we have heard the same thing, really, from him when he met with us. At the November meeting, I was chided by a caller for treating them, and I think our meeting was the concerned community of the North Omaha station like children. And I have to agree with the caller. I think we have been reluctant to talk about this for too many months. And I think partly it's because we did not fully want to alarm them. Well, I'm over that desire to protect. I want everybody who's listening to be as worried as I am. As worried, I think you are, Mr. Vi, and the people in the ops are, when they think about this lack of planning reserve margin and how dangerous it is for us. So, nobody's told me yet. So I happened to find a little excerpt from a business journal talking about failure to take action to harden the grid. Okay, the economic and social impact of inaction. When the electrical grid goes down, so does most infrastructure like emergency services, communication systems, transit systems, water and wastewater plants. I have to say, I've always consoled myself. Usually when we have outages here, it's something somebody can see. There was a windstorm, or a branch hit the line, or a blizzard, or ice on the line. We can see it. When the grid goes down, well, it's not so visible. But anyway, I've consoled myself with at least the water works. I can turn on the water. The toilets flush. We still have water. We'll be fine. But if the grid goes down, maybe not so easy to be assured of that. Ports and airports, nearly all services, disrupting our daily routines and impacting our economic stability. Power outages affect multiple industries and can cause delays, financial losses, and in some cases, irreparable damage to critical infrastructure. Transmission and distribution lines determine the scope and severity of these outages. And I think we just heard, if one of those outages happens, we're not talking about hours. We're talking about days. The impact is particularly harrowing for public safety and societal stability. Without a stable power supply, maintaining critical services like emergency response, transportation systems, and communication networks becomes nearly impossible. Emergency response systems, including hospitals, police departments, and fire stations, rely on uninterrupted power for their operations, from powering essential medical equipment to maintaining communication channels. Without these systems, people are unable to contact emergency services in times of crisis or access vital information, leaving them vulnerable. Transportation systems such as traffic lights and air traffic control can become compromised, leading to car accidents, significant delays, whereas communication networks like cell towers and internet infrastructure can go offline, severing vital connections that people depend on for information and warnings. This is not only damaging to the providers and businesses directly impacted by power outages, but it also poses serious risks to citizens. So that's the end of a piece contributed by Otto Lynch. So in 2021, Winter Storm Uri delivered severe cold from Canada all the way down to Galveston, Texas. The unprepared Texas utilities who had been warned in 2011 to insulate their fossil generation units saw their ability to generate electricity stop, which resulted in extended unplanned outages in their service territory and caused an imbalance in the electric grid all the way up into the OPPD footprint. So that's when we had the rolling planned outages of 2 hours in duration, which impacted our service territories. The official Texas death toll from that storm, which including causes related to coal utility failure, was placed at 246 people across 77 counties. So the circumstances and causes of death, I won't read this whole thing, but you know, it's from the Texas Department of Health. So it's their words here. By circumstance and cause of death, 161 winter storm related deaths were extreme cold exposure related injuries, comprising 158 deaths from hypothermia and 3 from frostbite. Among decedents succumbing to hypothermia, 107 were aged 60 years or older. There were 25 winter storm deaths from exacerbation of pre-existing illness. These were related to disruptions to dialysis or oxygen treatment, the freezing of medical devices and medication, disruption of hospice care, engaging outdoor repair activity, or loss of power while on electricity-dependent equipment required to sustain life. 19 fatal carbon monoxide poisonings resulted from inappropriate use of generators, grills, heaters, vehicles running in enclosed spaces, and ice obstructing vents in gas-powered heating equipment. Those are responses from people who are cold and they don't know what to do about it. So they do the best they can, and it didn't work out well. So this is what CEO Fernandez meant last month, I think, when he said, when this happens, you can't just go to grandma's house for a while because it's widespread and it's quite catastrophic. Grandma won't have any power either. So that's, I think, let's put economic development aside, fund, powering this and powering that. I do not want Miss Shirley and Miss Marilyn in North Omaha or their friends and neighbors to have to deal with this sort of thing. I don't want anybody's friends and neighbors and family in any one of the sub-districts of OPPD to have to deal with this or think about, we should maybe worry about this more. And so that's how I'm viewing the extension of North Omaha Station. Until we have what we need to make sure that we have that planning reserve margin that will keep our energy operators from getting gray hair sooner than they need to, that I just think it's very important that we keep it on. So thanks for letting me talk.
Thank you, Mary. Real quick, I want to check in with, it's been a little bit of time since we've had a break. Before we do that, does anybody have any more questions related to health impacts? We just have some folks in the room that could answer those, but want to be able to get them out if we're done with their questions. Okay, let's take 5 minutes and then we'll be back at 4:20. All right, we are back from a break. We're going to wrap up on modification of resolution number 6518 regarding North Omaha Station operations. Just before doing so, I want to make sure that any other director doesn't have questions or comments that they'd like to make.
Sorry. Are we going to talk about the resolution in the timeline? Or are we?
If you have comments surrounding that for now, we still have more work that's sensitive for the district to talk about. But that's my question to all directors. If there's further conversation to be had about this resolution.
Yes.
Okay, thank you. Yeah.
To me, in my head, I don't know that we have a resolution ready to go. So that's your job. as a
Yes,
chair,
yes.
But to me, that's big and open, that's big open question.
Mhm. So my answer is yes, there's still work to be done. But I, just in this opportunity here, if there was anything, that you had questions about or wanted to.
Should they be ready to go on?
So can we talk about quickly, maybe, do you have plans to reconvene in closed session after these?
Yes, absolutely.
Okay, and that's when we'll do that?
Yes.
Great.
Yeah,
And then-
thank you. I'm sorry.
Now we're aligned.
And to the extent that there are any revisions to the resolution that was posted a month ago, which there will be.
Yeah.
The idea is to post that version online, available to the public as soon as possible. Be later tonight, could be sometime tomorrow morning, to have that available the following day. It should be basically reflective of all the conversation we've had today, all day, of the comments we received from the public. Then that would be then presented for Thursday. That's.
Yes, absolutely. Thank you for that. Director Moody.
I am happy, let's do it.
Okay. Anybody else, have questions or comments? Okay. So we still have a few items, on the infrastructure investment area, and, Mr. Vi, I'm gonna point to you for those.
Oh, that's really good. So none of these items are related to, the conversations that we've had. These are asset investment items. We have Scott, here to kind of walk through that as part of our normal asset management, to look at our assets, to inspect them, to understand age and extent of condition of them. And so based upon that, there's some actions here. And it's been a while since I've brought anything for approval. So, yay! We couldn't wait. So.
And you brought 4 in.
We brought 4 in one day. Ask Scott, could we possibly do some of these? Nope, easy on that. So I'll turn it over to Scott, who's my.
Again, yes, we'll be talking about Nebraska City Station Unit 2 turbine repair labor. So just to kind of set the stage and provide some background, we conducted a full turbine and generator alignment in spring of 2023, which was a planned expected evolution. By summer of 2025, we had noted significant misalignment due to unexpected turbine pedestal setting. The turbine pedestal is the large structure that the turbine and generator set on. This was well ahead of our expected 8-year maintenance cycle of needing realignment. In October of this year, we did a maintenance outage in an attempt to reduce vibrations. There are still excessive vibrations, which is one indication of machine degradation. Because those post outage vibration levels still remain elevated, we've confirmed that that's likely due to the turbine pedestal settling. We have taken some actions to put monitoring equipment in place to assist in measuring the magnitude and rate of the settlement, but the clear cause of what's causing the pedestal to settle and the final remedy is not determined to date. Fixing the interim, we need to conduct a full turbine and generator realignment, which will allow for reliable operation while we do that causal analysis and not cause a forced outage. There is operational risk. Again, our original plan was to complete these very similar repairs in the spring of 2027, but based upon the additional data that we obtained in October, we are concerned that we won't make it that far, and we need to ensure the unit operates reliably. And because we're trying to plan an outage in 2026, balancing that against the rest of the fleet's outage schedule, we are pretty heavily committed for internal labor resources. So going out for external contracting is our approach to avoiding disruption to that broader fleet outage schedule. You know, we want to maintain those other units on schedule so that we don't impact their reliability. The urgency and complexity of the work that we have to do to repair the turbine and generators alignment makes the sealed bidding process impractical. As such, we'll issue an RFP and request through an engineer certification to conduct negotiation to allow a timely engagement with the vendors while maintaining cost competitiveness and trying to mitigate the risk by aligning those resources quickly. So in summary, we're going to request approval of an engineer certification to contract out either for labor and or technical services. We'll potentially use craft like machinists, as well as technical field advisors to assist us with that work to restore the unit to reliable operation. So this would be a supermajority type vote because of the engineering certification. Questions? Okay.
Thank you.
All right, thank you. So next slide will be for the distributed control system upgrade, or DCS, for that same unit, Nebraska City Station Unit 2. So the DCS controls all of the components within the power plant. So the unit cannot operate without this system. So it's very critical. The human machine interface, which is basically the touch screen, very similar to your phone, except they're larger and obviously control the power plant equipment. We last replaced those in 2021, and the expected lifetime is about 5 years. The operating system will reach end of support in January 2027. So when that happens and we can't do patches to update the software and other aspects of it, that does increase our cybersecurity vulnerability. Some of the other softwares as part of the system went into retired status in January of 2024. So that already limits our support and product availability. We will also update some other hardware in the system, switches and media converters, which again were replaced the last time we did an upgrade in 2021. So they also require upgrade. This is technically complex and a proprietary system. So we want that to integrate with the existing equipment very precisely so that we don't cause operational concerns once we install the upgrades. Emerson Process Water Management, which was the original equipment supplier, that's who we are proposing to do the upgrade to allow the best risk management and efficient process. So we will still negotiate, but again, sole source engineer certification is what we're recommending here so that we can negotiate and establish the contract to upgrade the DCS and associated hardware for Nebraska City Unit 2. I think I have a picture. So on the left are some of those HMI or computer screens that are touchscreen. And then below, so the upper left is the control room at Nebraska City, and then the lower pictures in one of the engineering support rooms with similar type workstations. And then the spaghetti of wires on the right is the actual electronics that support the distributed control system. So various modules and obviously a lot of interconnection to allow it to work properly. So questions on this?
Thank you.
Okay.
Some more?
All right, so the next one is for Nebraska City Station Unit 1. There should be a picture that might help illustrate as I talk through it. So this project involves the fabrication and installation of 12 different fabric expansion joints. So they're fabric because the very large machine, and as it heats up and cycles, the equipment moves. So between a certain section of the boiler and the air preheaters at, again, Nebraska City Unit 1, there's 12 joints within this scope that are at the end of their useful life, so they are original. These are the 12 most degraded of the 55 that are on that kind of graphic on the left. So we're pointing to the 12 we plan to replace, but the whole system has 55, but these are the worst ones. Normal wear of these joints has degraded and they don't move freely, which could damage the ductwork. And again, we can't operate with holes in the system. And so that can threaten unit reliability. These joints are required to be in good condition for efficient and reliable operation of the unit. So we plan to replace these in the spring 2026 outage, which is planned. This will be early in the spring of 2026. And we'll also install some flanges to facilitate easier future replacement of these joints. We did follow the sealed bid process, sent the RFP out, bid in October, and the bids were opened in November with 2 companies submitting proposals. Of that, only one was determined to be legally responsive. And so we are recommending that we award the contract to that company, Extreme Precision. They did meet all of the other technical requirements is the best value choice for the district to perform this work scope. The other picture on the right is a picture internal to the duct of the liner potentially detaching, so you can see the white non-uniform edged components. That's the picture of the duct cracking.
Scott, you mentioned that this is original equipment,
It is.
so 46 years.
Yeah, since 1979, it's been in service, so. Yeah, we got our money's worth. We can patch sometimes, but these are well past their capability there. Okay, so the last one is for North Omaha Station Unit 4. That unit has been in service since 1963. And these are original buckets. You go to the picture, please. They're also called turbine blades. GE calls them buckets, but that's pointing towards the actual buckets themselves. There are 3 main sections that are driven by steam to rotate the generator. This is a picture of the actual turbine, low pressure turbine rotor removed in the 2023 outage. So they have a normal in-service life of 30 to 35 years, but we've actually doubled their normal in-service life. In 2023, we did routine inspections and discovered some degradations in the 2 rows listed. The L-0 row, which is the largest ones, we found some cracks. And in the L-1 rows, we found steam erosion on the end. The cracks in the buckets are of particular concern because of the high-speed rotation. And then the crack growth can accelerate and eventually lead to buckets liberating or being detached and ejected, which has happened in the industry. So we did an assessment and repairs at the time, but the equipment manufacturer said to replace these blades at the next opportunity. So again, what's being shown there are the 2 different rows. So the largest ones there's 114 26-inch buckets. Again, 2 rows on either side. The 2 sections oppose each other. And then 127 21-inch buckets in the L-1 row. So 2 different failure mechanisms, and both are being recommended to replace. If the board recalls, Unit 5 had similar cracking that was much more extreme, and we had to replace the blades before we could start up, so we couldn't even do interim repairs. So this is trying to get ahead of it getting to that point. So the lead time for the buckets are up to 11 months. So even to conduct the replacement outage in the fall or after would be, at least 11 months. So obtaining the permission to procure the parts now is also risk mitigation. So this turbine degradation does need to be resolved regardless of the fuel, whether it's coal or natural gas, because the steam turbine needs to run for long-term reliability. It's a single point vulnerability. So regardless of fuel that makes the steam, I need to have the turbine healthy. We don't have access to the intellectual property or the drawings to facilitate a competitive sealed bid process. So the original equipment supplier, GE, does possess those, the drawings and materials to do the work. We did prepare another engineer certification. We're requesting that approval to forego the sealed bid process and negotiate directly with the OEM, so another sole source to GE. I would like to note Laurel McDonald, who's the lead engineer at North Omaha. She recently passed and became a licensed professional engineer. So she was the certifying engineer for this package. And this was her first official act as such. So I wanted to highlight that success for her. She couldn't be here.
She's one of our rising stars.
Yep,
Her a couple of years ago, working down in Nebraska City. and to see her name here was really, was good.
Yes, she fixed the Nebraska City turbines as well. So, yeah, I just wanted to highlight that. So that's what I have on North Omaha Station Unit 4.
So is this just to after extended hours?
Yes, we were originally planning to do that then. Addressing that risk as early as we can would be the approach.
And it is agnostic regardless of the extension decision. We need these blades whether we run the unit on pole or gas. Okay, thanks.
But I'm always impressed with the asset management and my board proactive stance. All four of these.
Thank you. The team does an excellent job at reviewing what we need to fix and to try to get ahead of failures. So, thank you.
Thanks, Scott.
Okay, thank you.
All right, now to Mr. Foch for the 2026 agenda planning calendar.
Yeah, this is just a reporting item briefly. Part of the chief report indicates that such a plan will be provided to the board's consumption. It's there. Discuss on it unless there's any questions.
I don't either, but thank you for.
Excellent, we're compliant.
All right, and then a point of note, Director Spurgeon's item, she's gonna handle next month. So, and I appreciate that in light of the time today.
That'll be the board policy review.
Yes, I'm sorry. So the board policy review, GP6, GP9, BL1, Director Spurgeon will move to next month. So with that, can we have the confirmation of the board meeting agenda?
And can you remind Scott or Troy which items require supermajority? That would be important for the board to consider.
Yep, I think it's
For loves.
Yeah, 11, 12, and 13, and 13.
so 6.
3 and 15. Scott, did you have anything? Or were you?
No, I was just trying to see the number 10 is the only one that's non-supermajority.
So Aaron, thanks, Scott. Aaron, 15 and 16, please, for board discussion action items. Any directors want anything else moved from consent to discussion action items? All right, seeing none, we'll move on. It's opportunity for public comment. So we'll take comments from the public on items of district business. Comments made by all parties during the meeting are part of the official public record. We'll take comments in the room first and then via WebEx. We have an in-person comment, I believe. Yeah, I think we do. Oh, okay. I apologize. So no, there aren't any in the room. So for comments online, for WebEx attendees, if you wish to make a comment, please send the meeting host a message using the chat feature or utilize the hand raise feature. Detailed instructions can be found on the OPPD website at the link shown on the screen. When I call on a member of the public to speak, please affirm that we can hear you before commencing with your comments. Please state your name, address, and the name of any organization or person you represent. Each individual will be allotted 3 minutes per matter pending. To assist you, we'll use the timer on the screen and signal you when 30 seconds remain, as well as when time is up. If you have written materials, please email them to corporate secretary at oppd.com and they will be received on our behalf. For all attendees, please direct your comments to me. I'll either respond to you directly or defer response to another board member or officer of the district. The board values and welcomes civil, respectful, clear, and concise communication from the public. During public comments, speakers should refrain from repetitious, profane, or irrelevant comments. Speakers shall refrain from polling the board as such vote is not on the agenda and prohibited by law. Ms. Lane, are there any members of the public on WebEx that have comments for district business? So, Dr. Corbin, 1 second. If anyone else listening, please send a chat to the meeting host or use the hand raise feature in WebEx. Telephone users can press *3 to raise their hands. And go ahead, sir, when.
Can you hear me?
Yes, go ahead, please.
Okay. Today I'm speaking as a public health professional. I'm David Corbin from 1002 North 49th Street. So as a public health professional, having taught at UNO, UNMC, and Creighton, I spent years on the American Public Health Association Center for Health, Climate, and Equity, and was the Nebraska delegate to their governing council. I appreciate your attention to safety issues at the opening of all of your meetings. I ask that you extend your safety concerns to your customer owners. OPPD is the largest single source for air pollution in Omaha. As a public health professional, I do not attempt to give OPPD engineering advice, so I ask that you return the favor and not pretend to be public health experts or to have consulted appropriate public health experts. Your flawed public health report greatly underestimates the health risks, and to top it off, customer owners will have to pay more while still breathing coal pollution. Aside from that, OPPD has lost credibility by reneging on promises regarding North Omaha coal plant and your promises to place better air monitors close to the coal plant. That never materialized. You should not commit to the continuation of the burning of coal at the North Omaha station until you have properly evaluated the implications of the public's health, and ideally after you have completed your integrated system plan. A statement was made today, quote, that we don't have energy to sell, end quote. Yet, it is my understanding that OPPD sells energy from the Nebraska City coal plant. I wish I could have some clarification on that. Should OPPD decide to continue burning coal at the North Omaha plant, which I encourage you not to do, don't insult your customer owners by saying that there are no health repercussions, and take the advice of the Douglas County Health Department regarding air monitoring and making commitments to your customer owners who are most at risk. Finally, going back to the safety issues, I request that when we testify, that we be able to give our zip code and not our home address, or create a more private option of giving our address. Thank you.
Thank you. Yeah, go right ahead.
So just quickly for clarification, our Nebraska City Station Unit 2 is owned, maintained, and operated by OPPD. However, at inception, and a few years before the plant became operational, we entered into long-term contracts with 7 utilities. We call them participants, and it's a 40-year contract that expires in 2049. That is the energy that is theirs to consume and to sell into the market. So it's not a discretionary item. We have a contractual obligation to make that available to our 7 participants, and it's about half of the output of units.
Thank you. Are there any other commenters online?
Ken Winston.
Mr. Winston, go ahead, please.
Good afternoon. Can you hear me? Can you hear me?
Yes, we can. Can you hear us?
Thank you. My name is Ken Winston. I'm appearing on behalf of the Nebraska Sierra Club and our more than 5,000 members and supporters in OPPD territory. I'm going to focus on trust in government and public institutions. Public trust in government is at its lowest level I can recall in the more than 40 years of working on public policy issues. What damages trust? Lots of things. But I'm going to focus on 2 things in particular: presenting questionable information as a basis for decision-making, and breaking promises. Questionable information from OPPD management. The health study from EPRI, which Dr. Corbin just referenced, and also was referenced by Director Williams. That study has been fully and thoroughly rebutted by nationally renowned health experts, and now from our own local experts on the issue of the Douglas County Health Department. Reliability. Again, that was rebutted by widely respected energy experts. North Omaha Station doesn't have a great record for reliability, including needing to be shut down several times during cold snaps due to lack of water in the river. You don't improve reliability by doubling down on a facility that has issues with reliability. We also question whether units that are 60 to 70 years old will be reliable and how much time they will be out of service due to maintenance, repair, and upgrade requirements. Would echo Director Williams' comments on that as well. Better responses to improve reliability would be a combination of energy efficiency, demand management, community solar, and battery storage. And once again, there was a plan to put battery storage at North Omaha, and that has not materialized. Low voltage, well, I'm not an expert in low voltage, but one of the experts last week indicated that the best way to address low voltage in North Omaha would be to reduce consumption in the North Omaha community, which could be done through smart thermostats and robust weatherization programs. Programs like this would address the low voltage issue while simultaneously providing an opportunity for OPPD to demonstrate its commitment to environmental justice. Cost. Management has made broad claims that continuing to burn coal in North Omaha would save millions of dollars. There's no documentation of those claims. It's contrary to the experience of other utilities and also contrary to common sense. There have been hundreds of coal plants that have been retired in the last 15 years. The leading reason for retiring them has been that they were no longer economically viable. Finally, making or keeping promises. OPPD has already broken its promise to retire North Omaha Station by 2023. Honoring our commitment to retire and refuel NOS in 2026 would go a long way toward restoring faith in OPPD as a public institution, particularly among people who support the North Omaha community. Thank you for the opportunity to speak to you this afternoon.
Thank you, sir. Are there any other comments?
Anthony Rogers, right?
All right, sir, can you hear me? Hello, can you hear us?
We're going to switch to John Pollock and then we'll go back to Anthony.
Mr. Pollock, if you can hear me, go ahead.
Oh, just kidding.
Sorry.
No,
Hello.
John, could you hold on for just one moment and we'll come back to you?
Thank you.
Okay.
Are you able to hear me now?
Yes.
I appreciate it. Thank you. My name is Anthony Carifa Rogers Wright, and I live here in North Omaha. And I share the concerns that were raised by previous commenters. The fact that OPPD has apparently released a fraudulent report regarding health risk assessment is very, very, very disappointing. And it could be seen as some by perpetrating a fraud. This was either the act of incompetence or an intentional attempt to hide the health impacts that people have been suffering from years. CEO Fernandez noted earlier in this meeting that we've been working in good faith, but when you release a report like that, that has been interrogated and quite frankly prosecuted by public health experts as named by Director Williams, this does not seem to be working in good faith. Now, OPPD does have lots of responsibilities as we're named, like reliability, but what about the reliability of your word? The reliability of your word is just not solvent right now due to the continued delays of shutting down a very, very toxic way of producing energy. I would also note that you also made a commitment to recognize the importance of the principles of environmental justice in decision-making and strive toward the just treatment and meaningful involvement of all people as part of SD7. You don't seem to be adhering to that either. What I can say is that the people of North Omaha are sick of being choked out by toxic policies and toxic air emissions. And if the board does vote the wrong way on Thursday, you will be hearing more calls for a total recall of every single OPPD board member and a rising chorus of people who will absolutely call for the resignation or removal of Mr. Fernandez. This environmental racism has to stop, and it has to stop now. Thank you.
Thank you for your comments. Mr. Pollock, can you hear me?
Yes, John Pollock, 1412 North 35th Street, Omaha. I would like to make sure that the board members are aware of some technical deficiencies in the EPRI study. And the biggest one probably is that you're running an atmospheric model, and supposedly it's conservative and all that, but it does rely on getting the topography of the area right and the dispersion right. It's a 30-year-old model, so it might or might not be accurate. It's certainly not state-of-the-art. The trouble is with any model, you need some ground truth to test it. And the problem there is that you don't have the measurements to anchor it. I don't see anywhere in the EPRI report where they made any attempt to actually estimate any level of a particular pollutant and then go out and measure that pollutant. You're measuring sulfur dioxide at the plant gate, but I don't see that there are any predictions to verify that. And sulfur dioxide, because it's part of the plume, should be somewhat representative of the other things that you're trying to measure. So this is an unanchored model. There's also a problem with the topography of the area, because as best I can tell, the topography in the model is determined by the scope of the model. And the scope goes out to 60th Street, which means that you're not getting to the top of the highest hills in the area. When you do that, it's the equivalent of trying to spill water out of a shallow saucer rather than a deep saucer. In this case, instead of spilling water, you're trying to get rid of that plume during an inversion. That's the most critical time. And if you don't know how high you have to get the plume in order to get it over the hills, you're going to, in this case, have an overestimate of the lateral dispersion of that plume. So these are technical difficulties within the EPRI model. This is regardless of any other health effects, what it's measuring or not measuring. The model itself is basically not very well tethered to reality. And I don't think that you could use it as a vehicle to say that there's not a health hazard to the area, even insofar as what it's trying to measure. Thank you.
Thank you for your comments. Are there any other comments online?
No more comments.
Okay, with no further comments, we're going to move into closed session. Do I have a motion?
You do. I move that the board go into closed session at this time, 5 p.m. to discuss one topic, strategic risk, resource adequacy, and litigation involving the district. With respect to these items, a closed session is necessary for the protection of the public interest because the discussion involves a lawsuit filed by the Nebraska Attorney General, information protected by the attorney privilege, sensitive utility infrastructure information, confidential cost information, potential resource acquisition strategies, the disclosure of which would disadvantage the district in future negotiations with potential contractors. This motion requires a second.
Okay. Ms. Lang, will you take the roll?
Wagner,
Yes.
Kavanaugh. Absent. Ford,
Yes.
Howard, Jackson, absent. Moody,
Yes.
Spurgeon,
Yes.
Williams.
Yes.
Okay, first, I want to address on the agenda, we were going to discuss CEO growth and effectiveness update today. And we're moving that to next month for the sake of timeliness and to make sure we can handle all the discussion that needs to happen around strategic risk and resource adequacy. With that, the motion to go into closed session has passed. This closed session will be limited to only that topic of strategic risk and resource adequacy. No votes or other board action will be taken. All right. Hey, welcome back. A motion and second is required to reconvene into open session.
Second.
Jen, could you take the roll?
Absent Bogner,
Yes.
Kavanaugh is absent. Core,
Yes.
Howard,
Yes.
Hudson is online. Moody,
Yes.
Spurgeon,
Yes.
Williams.
Yes.
All right, thank you. The motion to come out of closed session at 7:16 PM is carried. This closed session was limited discussion regarding strategic risk resource adequacy. No votes or other board action were taken. With that, we're adjourned at 7:16 PM. Thank you, everyone.